Good morning and thanks so much for tuning in. Welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Let's get straight to the headlines this morning. The S&P 500 and Nasdaq futures climbed, boosted by Nvidia on record revenue and upbeat guidance. Benchmark indices see a muted day of trade as Fed officials express caution about lowering interest rates too quickly. Meanwhile, Asian markets trade mixed. Japan's Nikkei rebounds in trade after a couple of days of profit booking. South Korea's Kospi opens in the green ahead of a policy rate decision today. Lofty valuations bring back caution on Dalal Street, with the gift Nifty implying a negative start to trade today. Action shifts to stock-specific stories. One more big deal in the bulk trade segment to talk about. Eureka Forbes promoter is set to sell 12% stake to raise 1,148 crore rupees. And last but not the least, SEBI is likely to issue a show cause notice to Z in a fund diversion case, and that's an NDTV Profit exclusive. Now, first up, the minutes of the last meeting of the Federal Reserve officials was released last night, and it flagged concerns over moving too quickly to cut interest rates. It showed policymakers remain attentive to the trajectory of inflation, though some are worried that the progress towards the 2% inflation target could stall. Fed officials agreed that borrowing costs are likely at their peak, but did not provide any clarity about the timing of the first rate cut. Among the views that stood out, Fed Governor Michelle Bowman argued that the current economic environment does not warrant a rate cut just yet. Benchmark indices reacted to the Fed commentary and saw a muted day of trade. Futures, however, are trading higher on the back of Nvidia's record revenue and upbeat guidance for the ongoing quarter. In more international news, though, China has started drafting a law to promote the development of the private sector economy, which will focus on the core concerns of private companies. That's according to a Bloomberg report. This includes protecting property rights, guaranteeing the interests of entrepreneurs, and managing missed payments for small and medium-sized enterprises. This is being seen as an attempt by the government to boost sentiment, which has been hit in the private sector in the recent past, or in fact over the last year or so, on account of changes in regulations by the government in everything from real estate to video games, as well as coaching. Now, the government is clearly trying to bolster the economy and also provide a little bit of confidence in the stock markets as well. Turning to the Asian equity markets, of course, what you can see on your screen is the fact that the Nikkei 225 is trading with gains of about 1.5% or thereabouts, and you have modest gains in China as well as in the Hang Seng in Hong Kong, and that points to a broadly sanguine start in the Asia-Pacific region. Let's try to figure out where we're going to start as well, based on the cues from the F&O space, and what the range is likely to be for the benchmark index as well as for the bank Nifty. Remember, today, of course, is the expiry day to factor in as well. Agam is joining in to tell you more about that. Agam, where does the range stand right now?
Right. So, Alex, it was a very choppy day of trade yesterday, and even though we may have seen the bank Nifty end largely where it began, we saw a lot of gyration within a relatively wider intraday range. But the Nifty saw a lot of weakness in the final hour of trade and eventually ending down by as much as 0.6%. We saw unwinding of a lot of longs coming through as well, indicated by that decline in open interest. The bank Nifty, of course, where we saw largely marginal moves, hasn't seen too much change in terms of its OI. But going into today's day of trade, well, of course, we're going to keep an eye on the Nifty weekly options expiry. So at the moment, the way things stand, this is your overall distribution. And while we continue to have a lot more OI accumulation around the 22,500 calls, in the near term, we may just see a little bit of resistance building around 22,200, because that's the level from which the Nifty came off. And of course, on the lower end, 22,000 looks like a vulnerable level at the moment, considering we did test it on the downside yesterday. So these are the three marks that we need to keep in mind as we move into trade today. Of course, yesterday was a day where the Nifty came off, so naturally there was a lot more call writing activity, as you can see on your screen here. In fact, you also saw traders write the 22,000 call as well, with indicated by the significant spike out here. Moving on to stocks. A lot of red yesterday, and L&T Tech, Bosch, NMDC, Ashok Leyland, all of them declining. We also only saw longs in ABB, of course, a sharp up move there, and longs unwinding for Metropolis, Interglobe Aviation, MCX, and Exide. Piramal Enterprises looking at a little bit of short covering. Alex, today it will be about the Nifty defending 22,000, and but we can't really rule out choppiness today.
Absolutely. Thanks so much, Agam, for pointing that out. We did end just above the 22,000 mark. Let's see if it gets defended. Now, on to an NDTV Profit exclusive. SEBI might issue a show cause notice to Z Entertainment Enterprises next month in a fund diversion case. The capital market regulator is currently summoning directors to further investigate claims of fund diversion and is committed to closing the investigation process by April, according to sources that NDTV Profit spoke to. As part of its investigation, the regulator has detected a likely fund diversion of 2,000 crore rupees, and the findings add, of course, to Z's challenges as its $10 billion merger with Sony collapsed last month after being 2 years in the making, and that was, of course, on disagreements between the two parties amid the ongoing probe by the market regulator into its promoters. We'll bring you more details as and when we get them on this particular story. But let's turn to Eureka Forbes, which will be one of the stocks to watch out for in trade today, as the promoter Lunolux plans to divest up to 12% stake in the company, and that's worth about 1,100 crore rupees. We've got Smriti joining in to give you some perspective on that deal. Smriti, morning. What are you picking up?
Well, good morning, Alex. You rightly mentioned that the promoter Lunolux is set to sell 12% stake in Eureka Forbes. Now, the floor price for this is 494.75 per share. So the deal is worth at 1,148 crores or thereabouts. Now, the sole broker here is IIFL Securities. Just to give you a perspective, Lunolux holds 72.5% stake, or that was as of December 2023. So 12% will be sold today in a block trade. Now, the base offer is for 10% and it can be upsized to 12%. Now, just to tell you a little bit about Lunolux, it's a special purpose vehicle incorporated by AI Global Investments. Now, AI Global operates investments hub for Asia for all funds managed by Advent International. So that's the big deal that we're going to see before the market open, and we're going to see some action there.
Absolutely. Thanks, Smriti, for getting us those details. Of course, the counter was active in trade yesterday, gaining about 3.5%. And remember, it's a counter with a market capitalization of just about 10,000 crore rupees. So you could see quite a bit of action today on the back of that bulk deal. We've got Hindustan Zinc to focus in on, and this is another exclusive for you. It has set a manufacturing target for its Sindesar Khund plant in Udaipur. And speaking to our colleague Sajit Mangat, Hindustan Zinc's chairperson Priya Agarwal Hebar talked about the company's capacity growth outlook. Listen in.
Last year, Hindustan Zinc crossed 1 million tons of metal, and SK is responsible for 25% of that, approximately. And we have a goal of reaching 1.2 very soon, and soon after that 1.5 million tons. So really, we have a very, very ambitious growth trajectory here. And honestly, it's the need of the hour. India being, the fastest growing economy, the way the infrastructure is growing, the way the country is growing, the demand for zinc is only getting higher and higher. So we're very proud that domestically we're able to provide.
All right, and a lot more details in that conversation. You'll find that entire chat over the course of the day. We'll play it out, of course, and we'll give you an update as to when that is. For now, we have to slip into a very quick break. We'll be back on the other side with a lot of stock-specific action, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Welcome back. You're watching All You Need to Know. Now, let's focus on some of the stocks that you have to watch out for in trade today. And it turns out that the real estate space as well as the building material space continues to be one to watch. We've got Varsha joining in with 3 stocks on her list. Varsha, morning. What do you have for us today?
Good morning, Alex. So let's start with Brigade Enterprises, wherein company is to expand its residential and hospitality portfolio in Chennai, wherein they've signed joint development agreement with Mrs. PVP Ventures, wherein they're going to co-develop 2.5 million square feet high-rise residential project in Chennai, which has a revenue potential of around 2,000 crore. And in addition to that, company has also signed a 45-year lease agreement with landowners to build 250 room resort. If you see some of the other highlights of the company, company has land bank of over 12 million square feet of residential projects across Chennai, which is going to be their second biggest market after Bangalore. And then they plan to increase total room count by 1,200 keys over the next 4 years. Then we have Grasim Industries, when companies to launch Birla Opus paint business and will inaugurate 3 plants. They've announced their foray into paint business somewhere back in 2021 with a capex of around 10,000 crore. And company intends to be second largest player over next few years. Now we need to see how company will compete with the Berger paints or Indigo paints for that matter. Lastly, we have Salasar Techno Engineering, where they are poised to capture a significant portion of demand for monopoles, and they expect firm orders to manufacture and supply monofoams of rupees 200 crore within next 12 months. And they've also recently commissioned new galvanization plant with capacity of 96,000 metric tons per annum.
Got it. Thanks so much, Varsha, for getting us those details. We've got Mahima joining in now to tell you something about the sugar pack, which is going to be in focus today on account of change in the regulations by the government. It has hiked the sugarcane fair and remunerative price. What are the implications and what are the stocks to watch? Mahima is joining in to give you those details and some more as well. Mahima, what do you have for us? Morning.
Morning, Alex. So as you rightly mentioned, sugar stocks will be in focus today. Now, this is because government has announced that the fair remunerative price for sugar has been increased by 25 rupees to 340 per quintal. Now, this is an 8% price hike from its previous price, and this is at a sugar recovery rate of 10.25%. Now, every 0.1% more sugar recovery, there will be a premium that can be charged of approximately 3.32 per quintal rupees. However, the government has also mentioned that the minimum price, despite of the recovery, should stay at 315.1 per quintal. Now, this is this revised FRP will be applicable from 1st of October 2024, and on this the Minister Anurag Thakur says that this decision will definitely benefit the farmers, and this will benefit approximately 5 crore farmers. However, if you see, this is not a good thing for sugar companies, since sugarcane is a raw material that is used in sugar companies. This will impact the raw material prices, and this is why sugar stocks will get impacted by this negatively. So some of the few sugar stocks that you must keep an eye on today are Sri Renuka Sugar, Balrampur Chini Mill, CID Parry, Bajaj Hindustan Sugar, and so on. Now, taking on to the next stock is Home First Finance, where Home First Finance has now received a corporate agent license from IRDAI, and this is for soliciting life, general and health insurance. Now, this is good for a company like Home First Finance because now they will be foraying into insurance products as a corporate agent. And this validity of license is from 21st February 2024 to 27th of February. The next stock to watch out will be South Indian Bank because they've announced a 1,151 crores of right issue. This will offer around 52 crore shares at 22 per share. Now, this is important because 22 per share, the current market price of South Indian Bank is approximately 32 rupees. So, the right issue is at a 30% discount, and the issue opens on 6th of March and closes on 20th of March, and record date is set at 27th of February. The ratio is set at 1 share of 4 shares each held. So, all of these stocks will be in focus today.
All right, thanks so much for getting us those details, Mahima. Let's also look at some more bulk and block deals that took place recently. We have spoken, of course, about Eureka Forbes, which you should watch out for. And Mika is joining in to tell you about the other bulk and block deals. Mika, morning. What do you have for us?
Yes, so up first we have Devyani International, which saw a block deal where Yum Restaurants India sold 5.3 crore shares, which is roughly 4.4% of the company. Among the buyers was Nippon India Mutual Fund, who picked the highest 0.66%. Societe Generale bought 50.75 lakh shares, and Franklin Templeton Mutual Fund bought 50 lakh shares, and shares were bought at a price of 164.1 apiece. Now, with this block deal, Yum Restaurants India has now officially exited its entire position in the KFC operator, and this the company has seen a dip in terms of profits. Profits did dip 87% year on year in Q3. Then we have Campus Activewear, where QRG Investment Holdings sold 40.65 lakh shares, which is 1.33% of the company, and the buyer was SBI Mutual Fund, which bought the 40.65 lakh shares, and shares were bought at 245 a piece. Now, the footwear company has been grappling with challenges pertaining to weak demand, rising competition, and poor financial performance, which has exerted some downward pressure on its shares in the past few months. And lastly, we had a bulk deal where Poly Medicure, where Lighthouse India 3 equity investors sold 12.9 lakh shares, which is 1.34% of the company, and the shares were sold at 1,550.06 a piece, but the buyers are currently unknown.
Got it. Thanks so much for getting us those details, Mika. Moving on, we've got Citi, who continue to maintain a positive outlook for Maruti Suzuki, expecting a strong Q4. And Harsh is joining in to give you some perspective on what is being said by Citi. Harsh, what are they saying?
Well, bullish comments coming in from Citi with regard to Maruti. Alex, you're right. Now, when I'm looking at what Citi is saying, they've actually opened a 90-day positive catalyst on Maruti. What they seem to be suggesting is Q3 is going to be a strong one. Why and how? One, there's going to be a volume pickup. Now, volume pickup is on the back of sustained margins and destocking. Both of those are going to aid volumes. Second, what they are suggesting is lower discounts and higher operating leverage will drive Q4 earnings for Maruti, which of course should help the Q4 numbers. And all of this will be backed by new launches on the Swift as well as the Desire. Now this is of course still in the works, not completely announced yet. We await announcements, but what Citi is suggesting is that there could be announcements sometime in this quarter on that as well. Valuations, they believe, seem reasonable as well. 26 times FY25 EV to EBIT is how they value Maruti. 14,200 is the target price that they've given on Maruti.
Right. Thanks so much, Harsh, for getting us those details. Now, India's retail sales have continued to grow in single digits, and that defies expectations of a robust festive season amid muted consumer sentiment. My colleague Sesha has this report on the latest data that was shared by the Retailers Association. Take a look.
January was yet another month of disappointing sales for retailers. The latest figures released by the Retailers Association of India showed that sales grew 5% in January compared to the previous year. Now, category-wise, jewelry and fruit and grocery grew 9% each. This was aided by the wedding season. Sales of sports goods grew 8%, while beauty grew 6%. Sales of consumer durables, however, fell 1% during the month. Apparel sales grew 2%, despite January being a heavy discounting season. Furniture and furnishing sales grew 3%, while footwear sales grew just 4% during the quarter. Now, several retailers have said that they have witnessed negative growth on a like-to-like basis. They expect the trend to continue for the remaining months during the quarter before a likely pickup in sales is expected in the first quarter of FY25.
All right, now in national news, a farmer has died at Haryana's Kanori border, where protesting farmers clashed with the police last evening. Farmers group AIKS, which is the All India Kisan Sabha, alleged that he died during the police action, which the Haryana police have denied. The farmers have also suspended their protest march to Delhi for 2 days, and the sit-in protest, however, is expected to continue. A doctor at a Patiala hospital where Shubkaran Singh, who is the individual that passed away, was taken, said that he had sustained a bullet wound, but a post-mortem report is awaited. The Haryana police has meanwhile denied that any deaths took place during the clash that was reported last evening. All right, now we've also got an update for you from CLSA and Indranil Sengupta about the FPI flows into the Indian markets. Listen into that at the end of this particular edition of All You Need to Know.
The RBI was building FX reserves till the GFC, and the rupee was actually appreciating because, foreign investors had the comfort that if they came in and left, they would not lose much on the currency. So if you go back to the pre-GFC period or even slightly later, you find that FPIs were almost 1.3% of GDP, FPI flows. After that, we ran out of sufficient FX reserves, the rupee depreciated, and that led to a big fall in, FPI flows. In fact, I vividly recall a hedge fund, overseas hedge fund telling me that why will I go to India when, I will probably end up losing my all in currency depreciation. Now that scenario has dramatically changed. Mr. Das has built FX reserves. FX reserves are today $600 billion. And that's the level we think is adequate. And that's again bringing back FPI flows.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very good morning. You're watching India Market Open, and it's looking like global cues are going to be positive. Neeraj, good morning. Maybe some of that stress we saw in closing yesterday could be dissipated with what we're seeing at least in Asia this morning.
Yeah, I mean, and this is despite maybe on expected lines, the FOMC minutes sounding off what most people anticipated. But interesting, Tamanna, that you say that, because while we talk about earnings, and I'm sure you have a lot of thoughts on NVIDIA because spectacular numbers, but FOMC, NVIDIA, Asia, and then the kind of fall that we had yesterday to be recouped. So lots to talk about this morning.
Lots to talk about this morning. And just add to that mix, HSBC, 80% plus revenues wiped off because of China overhang. So a lot to unpack on the global side. Domestically, of course, a ton of stock-specific news that is going to, really drive the markets and news. An important cabinet decision, set of cabinet decisions yesterday in the defense space on sugar stocks. So we'll unpack all of that. But let's quickly take you through the top global cues. So Wall Street regular trade ended fairly muted, but the action after markets closed on Wall Street, futures were up, driven by NVIDIA. And what a story NVIDIA really is. Their quarterly numbers are just mind-boggling. Look at that figure. Year-on-year revenue is up 265%. The company that bet on AI is ruling the roost. A bit of short selling before the numbers came in, but the traders who decided to short sell must be crying right now because that stock has jumped at least 8% post-trade, perhaps pared down by now. So NVIDIA, the story on Wall Street. But the other big story, and really the really big one, is the FOMC minutes. Now, the reason this was important is because the Fed made it clear that they're not ready to cut rates anytime soon. Powell, in an interview, had made it clear. The minutes have underlined this once again. So I wouldn't say any massive negative surprise in what the FOMC minutes reveal, but most officials have noted the risks of cutting rates too quickly and also asking the question that once we move down the rate cut cycle, can we really sustain it? Data is giving mixed cues. You've had some inflation data which is running hot. That's not really giving comfort to officials. And the one good thing that is underlying is that rates are at their peak. This has been reiterated time and again. However, look at what happened to the 10-year. It has trended over the 4.3% mark, not massively though. Not massively though, because that much fear is not really coming in from what FOMC is saying. I'll just quickly mention a couple of other things because a lot of news overnight that we should unpack, and I was talking about HSBC. European markets were slightly down and HSBC was a big culprit. But I'm talking about this stock specifically because it sunk 8%. Their pre-tax profits dipped 80% on an overhang of Chinese banks. And that's really one story to track, that what's happening with China's financial system, with their real estate, is there going to be a spread and a contagion? HSBC anyway obviously did feel some of that brunt. But Asia, otherwise, a different story. I want to just pull up the Nikkei. Look at that Nikkei. It is at all times high. It has surpassed levels it hit in 1989. Strong corporate results is largely responsible for that. And if you pull up the entire Asia Pac, it's not looking too bad at all, apart from the Hang Seng slightly down. So the question is, then we come back to it, are we going to see some of that pair out in our markets today, which have been a little skittish, to be honest, Dheeraj?
And you could argue that. But, you know, Tamanna, I mean, just before I get to trade setup individually per se, because we saw a day of profit booking, it's just interesting to see the kind of subscription that is coming into paper from India. Across. And I know there's so much of conversation around how MNC companies are selling out, etc. Chinmay, our colleague, is going to put out a story today, which speaks about how all through 2023, we've seen PE exits, promoter exits, and the chatter was always that, oh, everybody's selling, expensive retailers are buying, they'll hold the last bag. And the markets have actually rallied quite convincingly since then too. Yeah. So there's this talk about this Eureka Forbes deal today, etc. But look at the QIP of Union Bank of India, 10 times subscription.
Insane.
And you know, people are talking about PSU banks being expensive. People who are putting in money are not fools for a 10x subscription to the paper available. There's a chatter that BlackRock might have been invested as well. So there's some serious move towards quality Indian paper happening. People should take cognizance of that as one key point. So I thought that was interesting. I mean, just the fact that Union Bank of India QIP has been subscribed the way it has been is quite stunning, really. So that was one. But you were right, so right. I mean, we saw 100, 120, 150 basis point, or rather points fall yesterday on the Nifty. You're talking about on the countdown show yesterday as well. I mean, 6 days of consecutive up move on the Nifty. I mean, you will probably see some bit of a corrective move happening, and that is what probably we saw yesterday. So that was part one and par for the course, really. Now, because people look at levels so closely, I just thought to highlight that when you look at the call option data on the strikes, 22,200 and 22,300 are the highest OI positions, and therefore, optically, that is the point of key resistance. There is also a point wherein if the market takes that out swiftly, there could be short covering. Very unlikely that that will happen today, but those are the levels to keep in mind if you really want to look at levels. So that's part two. And part three, something that again both Tamanna and me highlighted on India market close yesterday. Amidst all the corrective moves that we saw yesterday, two spaces stood out. PSU banks, SBI was in the green, and real estate. real estate stocks, a lot of them hit fresh life highs in trade yesterday. Look at the Brigade announcement today, and we'll talk about that as well later on. But just goes to show that there is some serious interest and serious business proposition in a set of select real estate names, and therefore that pocket should be keenly watched out for. DLF was at life highs, Phoenix was at highs yesterday. So clutch of those stocks are doing very well, and I think that's a sector that certainly remains firmly in focus. So that's to be kept in mind for sure.
Yeah, I would add Macrotech to that mix. Raymond, and even just a quick word on real estate to add on to exactly what you said, which is absolutely right. If you look at the numbers, the quarterly numbers, the high input costs are weighing down to some extent, but the cycle is just at its beginning, which is why a lot of analysts are still bullish on it. You might see, a few days of patchiness there, profit booking, etc. Real estate, definitely an interesting space. Just sugar, the other one that we should talk about this morning. So last evening, a slew of cabinet decisions. And this one's important because the government has hiked the sugarcane FRP by 25 rupees to 340 rupees per quintal. FRP is the fair and remunerative price. It's, I would say, the MSP for sugar, if you want to put it that way, determines the price at which sugar mills have to buy from producers, from farmers. Now, expected before an election, and you can expect more sort of announcements on this end. This always is a bit of a political issue. It's an 8% hike overall. The question is that will it be very, very negative for sugar stocks? On the face of it, it is, because obviously if your input costs go up, it is negative for sugar producers. But remember that ethanol blending has seen a lot of positive cues and news in terms of policy. There is a big push there. So we'll wait and see how it actually pans out. But sugar already beaten down is one space that I would keep an eye on. The other big one is Grasim. Grasim Industries has been on a tear. I think up about 7% in the last couple of weeks. 1 month is about 5.5%. And the news flow is about its entry into the paints business. Today, in fact, you will see that official announcement. There's going to be a press conference later in the day that Kumar Mangalam Birla will address. Then they're going to launch the Birla Opus Paints business. They're going to inaugurate 3 plants. So that will be interesting to watch out for. Remember, they announced that foray in 2021, and it's a planned investment of about 10,000 crore rupees. They intend to be the second largest player over the next few years. And I found this interesting, Neeraj, because you cover it as well in your 3 stocks to watch, the Jefferies note, which talks about what it means for Asian Paints. And this was a bit of a debate in the canteen this morning while we were getting coffee. That does an Asian Paint really have a threat from Grasim? And just remember how many more players have come into the market. And Jefferies says that maybe it's going to be a bit of competition.
Yeah, I mean, just interesting. I mean, it will be, I'm sure viewers, none of us, neither me or Tamara, saying that this dislodges Asian Paints in any fashion, but just the multiples that Grasim Asian Paints trades at, and the point, Tamanna, that Jefferies mentions in their note, that 2 more plants by March 24, 3 more plants over the next 12 months. And according to them, the paint sector has not seen such stiff capacity addition in its history, even by incumbents. So could margins and market share come under threat? And will the markets take cognizance of that? And Jefferies believes the answer is an unequivocal yes. We know some buy-side people who don't believe so. So it's a classic mix. Who knows who wins? But if the sector is down today, you know why. Yeah. Just the other point, Tamanna, I just did this bareback number crunching for the last 6 months and the last 1 month for the incumbents, Asian Paints, Berger, Kansai, and Arolac. The last 6 months, the stocks have done nothing. Asian is down 6%. So, well, they're down. Asian is down 6%. Berger is down 2.4%. Kansai is down 5.4%. So these stocks haven't gone anywhere while the broader markets or the Nifty has moved a little bit. So clearly some bit of this is being baked in already. Maybe
a bit of consumer overhang as well. That entire, consumption space has been iffy. So you could see that in the broader picture, or is it a paints problem? Is something we should unpack?
Yeah, but very likely a paints problem because, Amit Singhal, for example, goes on record so many times saying that in an overall house, paints is just 1.5% of the cost. Yeah. So we don't impact the cost metrics of a consumer so much. And therefore, very likely that the market has been waiting for this to happen. And now that the details are unfolding, Sajid, our colleague, is at the Panipat unit of Grasim. So it'll be lovely to hear from him and from the management as well. But this could be very interesting as to what happens to stocks because of a big, deep-pocketed
player coming. And think of it logically. We were just talking about how the real estate cycle is booming. You're building homes, offices, you need to paint those walls. So one flows into the other. Just one more on my list that I want to talk about is NBCC. The company has received an in-principle approval from the Greater Noida Authority for the development of unused and purchasable FAR, that's floor area ratio, for the Amrapali project. And, NBCC again has been on a complete tear down, of course, yesterday in trade, but that's one I would watch out for. Brigade is something also that you were covering. So a lot in the building, housing, real estate theme today.
Yeah, and yeah, just a brief update there. I mean, they've signed a JDA for the 2.5 million square feet project in Chennai. One more, right? I mean, these companies from a Brigade to a Sobha to whatever, DLF to Macrotech to whatever, keep on getting these projects one after the other. Oberoi signed 2 Marriott properties in Mumbai.
Yeah.
There is talk that Prestige might sign a few more very soon. And Brigade is also going to open a hotel as well. But the revenue potential of this JDA alone is about 2,000 crores, Tamanna. We don't know the breakup, of course, but very likely positive for Brigade, so could see a reaction today.
So just from stock focus to a little bit of macro, what's exciting when people start constructing more and India starts constructing more? A huge multiplier for the economy, for jobs, for all the industries that get impacted. So overall, if you were trying to look for an example of an economic boom, this is definitely a very clear-cut one.
Most certainly. Yeah. Okay, so these are a few stocks. The 3 other stocks on my radar: Eureka Forbes. We put out that piece yesterday on our on the channel and on the social media that promoter Lux would sell up to 12% stake in the company via a large trade worth 1147 crores, effectively a 3% discount to the closing price yesterday. So if you see a bit of a corrective move today, you know why, but very likely that this might get executed in the block window itself, so may not have too much of a leakage and might not have too much of an impact also on the stock if it gets consumed easily. So watch out for Eureka Forbes in the session today. Could be an interesting one. It's large, but the overall size is not as large as maybe some of the others that have happened, including a Whirlpool that has recently happened. So keep that in mind. Large from a Eureka Forbes perspective, but 1,200 crores is okay. I'm highlighting Walchand Nagar. There could be more companies as well, but Walchand Nagar came to my mind, so I'm highlighting that because the cabinet has approved amendment in the FDI policy on the space sector, has allowed 100% FDI under government route and up to 4974 and 100% in the automatic route for different subsegments. So a lot of the companies which kind of cater to these defense space related pockets, some startups as well, by the way, there is Skyroot and some others, could all be in focus. But from a listed market perspective, somehow I could think of Walchand Nagar as the easiest one that came to my mind. So I'm highlighting that. Please be mindful that there could be more. But very likely that the stocks in this space, including this one, could react positively. So watch out for that. And there is a brokerage note that amongst others, I mean, ABB has some positive notes, etc. But the City note on Maruti was interesting. They maintained a target price of 14,200 on the company. They've opened a 90-day positive catalyst watch, believing that monthly volumes and Q4 results both will be strong. So watch out for Maruti. If it has a positive reaction, you would know why. It's a catalyst watch opened by City. So that's to be kept in mind. And just before we toss to the editor's cut, Tamanna, the news flow on Z Entertainment doesn't cease to flow, right? I mean, now show cause notice possibility is just caught in a quagmire from where it somehow doesn't seem to be able to get out.
If Sony was being questioned about why it walked out of the deal, whoever made that decision to pull the plug right now would be saying, thank God we did, in a sense, because of all of the negative news flow on Z. So the company always maintains that the investigation is on, we are cooperating, everything is, in the ether. But the fact is that the news continues to be very, very negative. I would also want to see today what's happening to Paytm. Can you continue to stick on a 5% upper socket through the week with no movement at all? Just wanted to mention this Bernstein note on PSUs, only because the rally has been phenomenal. Their India quant strategy is focusing on how far the PSU rally can go, and arguably that's the question of 2024. The index, the BSE PSU index is already up 21%, YTD 279% since October 2020. They say it's an expensive trade, especially industrial PSUs, though relative valuation advantage is still there. Fundamentally, the pack looks better versus history. However, consensus looks too bullish. One point I thought is important is that the rally is driven by retail investors, no meaningful institutional crowding in PSU names in this cycle. It's a momentum play, high volume, dividend yield and value. Now, this is one space you need to watch before you go into election season. Typically, it does see a boost there. So there are a whole clutch of analysts who are bullish on PSUs, but tread with care is all I would say.
Yeah, no, very, very much so. And just viewers, remember, we're distinguishing between PSU banks, which are still cheap, relative to other PSUs. So that's the key point to keep in mind. Just two more things. Sula Vineyards could be a stock in focus, so that's to be kept in mind. There is a positive news flow. There is also, how do I say, a bit of a negative to the Sula's announcement in that the future VAT refunds are capped at 20 crores. So even if the number may be higher, they don't get it. I think there's a clarity that we'll probably try and get from the management sometime during the course of the day. So that's to be watched out for. I was just trying to see if there are some other news flows. There is a story in one of the dailies, Tamanna, about how ITC might want to buy a small stake or a large stake in Pratap Snacks. So very likely that Pratap Snacks could react today. So if it does, you know why it is reacting. Thought should bring that out for you. And if yesterday's downgrade by Avendus Spark on OMCs wasn't enough, we have a CLSA downgrade. CLSA is saying that we are cautious and they are downgrading the stocks to a sell. So watch out for BP, HP, IOC. They were amongst the top losers in the PSU pack yesterday. Very likely they could be reacting today. Maybe I should have mentioned that first when Tamanna was highlighting the PSUs, but just thought that it is important to bring out this brokerage note as well. So, you know, that's the sum and substance of what the stocks you should monitor. Keep in mind, PCR is low, so that's a positive, but the number of stocks in the F&O ban is 15. It usually doesn't happen unless the market is a concern, so keep all of that in mind. But it's time for the editor's cut, and I'm going to hand it over to Alex to tell us what is it that we are focusing on today. Alex, you are really laying focus on one key subject today.
Absolutely, it's one sector, and I'm sure
what's with that voice?
So I'm getting my voice back. It's coming back. It's coming back slowly. Like I think the fortunes of FMCG companies at this juncture in India, and in fact that is what we're talking about right now, which is that the investor is constantly looking for a bargain buy and is looking for value. The question is the FMCG pack a bargain buy? Of course, some would point out that a GCPL or a Tata Consumer have done incredibly well. They've rewarded shareholder, confidence. But at the same time, one would argue that those are exceptions to the rule. The question is, should you look at those relatively lower valuations and buy? But first, let's talk about the performance year to date, because it's been an underperformer as a whole, and those exceptions.
Yes, so Alex, it's been a tough calendar year 2024 for the entire FMCG pack, because we've seen a significant correction in the largest of the companies. That would include HUL and ITC. In fact, both these have also been leading the losses in terms of share prices through the course of January and of course mid-Feb right now. Why? Because of weaknesses in earnings. In fact, this morning we've had retail sales data, which still continues to suggest, and they barely make it to over 5%, 5 to 6%, if I'm not mistaken.
For the Retailers Association of India has put out data for the month of
and it's very evident in the kind of numbers that we've seen for the third quarter gone by, where in some cases there's been a degrowth in volumes, and in some cases volumes growth has been no more than 1.5 to 5%. And that's what's in fact weighing on the indices, weighing on the
pack as a whole.
Right.
The FMCG
right.
pack. Yeah.
So, you know, to talk to you about the performance as of now, except for Tata Consumer and Godrej Consumers, as you mentioned, all the other larger FMCG companies have declined, not only in the calendar year 24, but also through the course of the year, 1 year. We haven't seen as much strength as compared to the rest of the markets. That's how things stand at the moment. And of course, volumes are going to continue to be under pressure as per the indications of the management, because rural demand continues to languish. We have seen a lot of challenges there. These are some of the factors we need to keep in mind.
But with regard to those two, there are certain tailwinds or reasons for that outperformance as well that you need to highlight, right?
Right.
GCPL as well as Tata Consumer.
Right. So, you know, Alex, as you mentioned, exception to the rule. In this case, both Tata Consumer and GCPL are exceptions. Tata Consumer is building out a business. It has already made a significant amount of investments in the past few years, and you're seeing a result of what they have done at the moment. Godrej Consumer Products is coming off a very, very low base because it's actually faced you know, a very, very challenging time in the preceding years, in the years preceding FY23 as well. On the other hand, all the other companies, and they have a relatively large distribution across India, and well, that's where we are seeing you know, that little bit of weakness come in, and that's the only reason why we have seen tremendous strength in Tata Consumer as well as Godrej Consumer. If you consider the 1-year returns, Tata Consumer Products is up 60%.
Yes.
But for all the other companies, you know, 60% is a far cry in terms of returns.
And in terms of the path going forward as well, and that is reflected in the expectation of revenue growth heading into the next financial year as well, where barring a couple which are going past that 10% mark quite comfortably, everybody else is below.
Yeah, and you know, that perhaps is the reason, or also because you start seeing factoring of strength in a lot of these counters, or rather weakness in a lot of these counters. So if you consider the FY25 growth estimates for revenues, you are continuing to see an expectation of around 10 to 15% growth for Tata Consumer and Godrej Consumer. Of course, Dabur and ITC are also expected to show 10% growth. ITC, though, mind you, will come off on the back of a low base. And in terms of earnings growth as well, say for something like a GCPL and Tata Consumer, which are expecting about 18 to 22% bottom line growth, we don't have as much to speak for when it comes to the other companies.
And finally, looking at the valuation metrics, which is, of course, a factor of the expectation of the EPS growth, which I think you've kind of covered, they're all trading below their 3-year average. But then we're not saying jump straight in because the path ahead still looks a little murky.
So most companies are trading below their 3-year average. Sure, we've seen a correction, but do they offer value at this point in time? Is their valuation significantly below their 3-year historical average? That's not the case, because let's go through the valuation. This perhaps is the most pertinent of the factors that you want to address right now. Something like a Hindustan Unilever, currently going at around 54 times. On an absolute basis, this is still a ridiculously priced stock for a company which is giving you no more than 5 to 6% growth in terms of your volumes. You look at something like a GCPL or a Nestle. Nestle is still going at around 70 times. It is at a discount of 285 times its previous 3-year average. So on an absolute basis, we're just not certain whether or not some of these companies do in fact even now offer value. And the likelihood at this point in time is that we're most probably going to see consolidation, not necessarily a sharp up move, and that certainly won't come through unless and until we see that recovery in the rural segment.
And volumes would be the metric to watch out for. If you see an uptick significantly, then that's when you start looking at this back more seriously.
But it's going to be hinged on rural recovery largely. If you have recovery in rural demand, you will start seeing volumes. But until then, it's going to be a wait and watch.
All right, so wait and watch. Don't jump headlong just because the valuation picture looks a little more attractive than it has in in the last few years or couple of years. Now, we have to slip into a very quick break, but before we do, take a look at this slice of a conversation that my colleague Sajid Mangat had with the management of Hindustan Zinc. They're talking, of course, about capacity expansion in this particular slice, but there's a lot more to talk about. Take a look before we head into a break.
Last year, Hindustan Zinc crossed 1 million tons of metal, and SK is responsible for 25% of that, approximately. And we have a goal of reaching 1.2 very soon, and soon after that, 1.5 million tons. So really, we have a very, very ambitious growth trajectory here. And honestly, it's the need of the hour. India being, the fastest growing economy, the way the infrastructure is growing, the way the country is growing, the demand for zinc is only getting higher and higher. So we're very proud that domestically we're able to provide.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Show, Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
You're watching India Market Open. Quick look at the implied open before we get to the top headlines at the start, and look at what kind of a day we're set up for. Remember, global cues are mixed in a sense, but your Nifty implied open does point to at least a positive start after a rocky close yesterday in trade. But top headlines at this hour: US markets muted as Fed officials expressed caution about lowering rates too quickly. The S&P 500 and Nasdaq futures, though, have climbed, boosted by Nvidia's record revenues and upbeat guidance. Meanwhile, Asian markets are higher. Nikkei rebounds in trade after a couple of days of profit, but it's at all-time highs. Solid corporate earnings have boosted the Nikkei. One more big deal in the bulk trade segment. Eureka Forbes promoters to sell 12% stake to raise 1,148 crore rupees. And SEBI is likely to issue a show cause notice to Z in the fund diversion case next month. That's an NDTV Profit exclusive. Farmers have suspended their protest march for 2 days after the death of a 23-year-old farmer. A silent sit-in protest will, however, continue.
Tamanna, the other interesting piece, and just before we go over to the FNO focus by Agam, and viewers, you should stay tuned for that because I think that's a really nice focus piece that Agam does. We get you some really nice option trading strategies as well, which is what a lot of you love to trade. So you should tune in for that. I don't think too many people do it better than Agam. So stay tuned for that. But just a piece, Tamanna. Yesterday, I know in IMC we were talking a lot, India Market Close, we were talking a lot about oil marketing companies and the Avendus Spark note on OMCs and how they believe that the risk reward was not favorable. I think that's being backed up by CLSA today. When not that it's just 2 notes in 2 days.
Yeah.
And CLSA seems to suggest the same thing, that OMCs are baking in high margins and steep premiums to global peers, and therefore they have a sell rating on IOC, BPCL and HPCL. And it's interesting that all of this is happening at a time wherein there is maybe a fear that what if there is some bit of tinkering done with prices at the till and the OMCs have to bear that brunt, part one, or part two, what if oil prices inch up because of all that's happening on the geopolitical side, and therefore there could be some bit of an impact on these companies.
latter more likely than the former. Even the CLSA note, Neeraj, if you notice, say that the likelihood of a cut in retail prices of petrol and diesel now is lesser. Simply because the government doesn't really think it needs it to win the next election. Very very plainly put, they don't need to do it. The reverse, though, is the concern that post-elections, considering they have a pretty tight fiscal deficit target, which we heard in the budget, you might have to hike the taxes on petrol and diesel because you need to make up those coffers. And also geopolitically, so far it's held out. The Red Sea crisis, etc., has not really moved crude prices, but that is the next big sort of headwind or challenge on the horizon. So OMCs are going to have another rough day. I'd stick my neck out. But, what did you make of the fact that before the Avendus and CLSA note, there was a slew of notes saying OMCs look great?
Yeah, so they look great at that price. The stocks rallied quite significantly. Look at the last 3-month performance of these boys, right? I mean, BP, HP, IOC and BPCL in particular has had such a good run in the last 3-odd months. Or, I mean, I'm using 3 months because that's the way we can get the charts up. But 57% Tamanna for BPCL in the last 3 months. And HP and IOC too. IOC, I know for sure, even HPCL, if I'm not wrong, 77% actually better than BPCL. I stand corrected. And IOC too has had a really good run, right? 80%. So such a strong run. I think these notes are effectively saying that they are baking in the best.
But the fundamentals don't change, right, over 3 months.
But the prices and the valuations. So it's a sell on the valuation.
Have, But the negative notes are also baking in fundamentals now. You're finding a reason to support
the argument
your indigestion of high prices, if I could put it that way.
Yeah, very, very well put. Just before I put to Agam, just Avendus Spark and what they put out yesterday as well, and we highlighted this note on the closing show, but effectively their view yesterday was the same. They had to reduce the rating on BPCL and sell on HPCL and BPCL, both of them, which is what they track. And the reasons were very similar. I mean, found fundamental reasons, but effectively the valuations are the issue out here. Okay, let's now focus on their derivative space. It's 8:30 or thereabouts. So Agam is standing by to break down what the cues were and, well, some interesting option strategies today as well, I guess. Agam, good morning.
Good morning, Neeraj. Well, it was a choppy day of trade yesterday. A lot more weakness seeped in through, specifically with respect to the Nifty. And well, that's something that's going to play on everyone's minds, considering it is the Nifty weekly options expiry. Let's start off with the basics right at the top. We take a look at how things have panned out as far as your index futures are concerned, and unwinding coming through even as the index comes off to a certain extent by 0.6% as we speak. And of course, the bank Nifty, on the other hand, it was a flattish day of trade, even though it was extremely choppy. Well, we didn't see too much change in open interest there. But as far as today's day of trade is concerned, let's take a look at how things are panned out, how are traders positioned. Now, on the higher end, we continue to see a considerable amount of open interest building up around the 22,500 calls, the 22,200 calls. This level perhaps will be a little bit more pertinent because we saw the Nifty hit that mark and come off. So this certainly does provide a little bit of resistance, at least in the near term, most certainly today. Do remember that yesterday we also saw the Nifty test 22,000 on the lower end, and hence we're seeing a little bit of puts accumulation, but not as much as the kind of numbers that we have been used to off late, certainly before the previous couple of sessions. So we are seeing a larger amount of call writing as compared to puts. That's something that you need to bear in mind as you go into trade. Yesterday's day of trade, naturally, while we saw a lot more traction around calls, considering we saw the Nifty fall, so a lot of traders did go ahead and write calls. But besides that, we're also keeping an eye on a lot of stocks. So let's take a look at how things have panned out for stocks. There's been a lot of weakness, and at least in terms of those which saw increase in open interest, we did see some longs building in ABB, which was perhaps the stock of the day yesterday. But besides that, a lot of weakness in L&T Tech, Bosch, NMDC, along with Ashok Leyland, all of them looking at weakness. Even in terms of stocks which saw unwinding in trade, there was more weakness, more losers than gainers. As you can see, Metropolis, Interglobe Aviation, MCX, and Exide, all of them looking at longs unwinding. Say for Piramal Enterprises, which did see about a short covering coming through. Let's take this forward and get in an expert opinion about how to deal with markets going in. We have Milan Vaishnav of Gemstone Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. Well, as usual, let's start by taking a look at how you view the benchmarks, the Nifty and the Bank Nifty. How would you address them at this point?
Hi, good morning. I feel that Nifty as such right now it's on a bit of a sticky patch, and if I speak purely from a very short-term perspective, I feel that Nifty, even if it tries to mark an incremental high, it will largely stay in a range, and 22,250 is something which is likely to act, which is likely to continue to act as a resistance for not only for today but for the next week expiry as well, where we will head into the monthly derivative expiry. So by and large, I believe that if Nifty is able to take out 22,250, it may mark some more incremental high, but still, despite that thing, even if it is able to mark some incremental high, I still don't expect any runaway kind of up move in Nifty, and it is largely to trade in some 600 odd points range, with 21,700 playing out as support and 22,300 playing out as resistance. So I expect Nifty to continue to remain in this defined and little bit broad trading range. It will oscillate back and forth in this range. Might attempt to give some incremental high over the next coming days, but still a runaway up move is something I do not expect. And I believe that with every incremental high or with every technical rebound that we see, we should be focusing more on protecting our profits at higher levels.
It's becoming a little bit of a consensus, at least in the analyst community, about the benchmarks not seeing a runaway rally from these levels. But Milan, I believe you are selling a strangle on the Nifty at this point?
I have two approaches with the given technical setup, one for the Nifty and a little bit different for the stock. So I have a little bit of a neutral approach for Nifty. I would be selling 29th Feb expiry, 22,400 call and 21,500 put. By doing this, I would realize a net premium of 95 rupees. That is a maximum income potential of 4750. And this would translate into an approximate yield of around 4% on the capital that one would deploy per lot. As a measure of risk management, we would move out of this trade if either of these two edges, that is either if 22,400 is taken out, or 21,500 ends up getting violated. On the other hand, I have a directional bias for ICICI Bank because private banking space is something I feel that it's now improving on its relative strength. So I'll be taking a bull call spread for March, where I would buy 1060 call and sell 1150 call, and I would pay a net premium of around 24 rupees. So my maximum loss would remain limited to 16,760 rupees, whereas the maximum profit potential in this trade would be over 46,000 rupees. However, again, as a risk management measure, I would maintain a stop loss of ICICI Bank slipping below 1010 in spot levels, where we can even limit the maximum loss figure.
Okay, well, there you have it. So those are two of your trading ideas as far as the Nifty and ICICI Bank is concerned. The Nifty specifically, remember that as we move into the final week of the expiry, while the theta decay intensifies, any sharp movements, and in the parlance of more keen option Greek observers would suggest that along with the theta decay, the gamma spike and risk also increases. In fact, many would consider gamma to be an anti or theta. Under these circumstances, of course, your trade could go wrong, and under those circumstances, as Milan has already mentioned, if you do see a breach on any of those option strikes that he's spoken about, you need to move out of that strangle. Well, alternatively, do you think, Milan, that it would make sense perhaps to add wings for those who may not be able to have full control over the trade through the course of the day?
Yeah, you can add wings and make an iron condor out of that. But I think that would highly limit it would highly limit the profit potential as well. So it's like condor is nothing but it's like taking a bull spread and a put spread simultaneously. So I think if you are vigilant enough and mindful enough to exit at the violation of any of the edges, I don't think there is a necessity to add wings and compromise on the profit potential.
Fair enough. Of course, for every risk, there is that much kind of reward. And when you do add wings, you also limit your risk. But along with that, that would obviously mean that your profits would also be that much lower. And of course, as Milan has already mentioned, at this point in time, it would not make as much sense to go on, in fact, buy those further out of the money calls and puts as far as this particular strategy goes. But Milan, on that note, I want to take a moment to thank you for taking us through the strategies, as well as giving us a handful of trading ideas coming through. And with that, it's over to you, Tamanna.
All right. Thank you so much for that, Agam.
Did Agam do a Neeraj? Did Agam said that Milan has done a Vaishnav?
Yes.
Almost there, but that's okay. Anchor travails. But moving on, stocks in focus this morning. We have Varsha joining us with a whole list of companies and counters that you should watch out for. Varsha.
Good morning, guys. So let's start with Brigade Enterprises, wherein company is expanding its residential and hospitality portfolio in Chennai, where they've signed joint development agreement with Mrs. PVP Ventures to develop 2.5 million square feet high-rise residential project in Chennai with a revenue potential of around 2,000 crore. Company in addition have also signed a 45-year lease agreement with landowners to build 250-room resort. Also, they have collectively they have operational room count of 1,500 rooms across 5 cities, and they plan to increase their room count by 1,200 keys over next 4 years. Then we have Grasim Industries, where company is going to launch Birla Opus paint business and will inaugurate 3 plants. Now, they had announced their foray into paint business in 2021, where they had planned investment of rupees 10,000 crore, and company intends to be second largest player over next few years. So stocks that you should watch out for is Berger Paints, Indigo Paints and Kansai Nerolite. Let's see how Grasim will compete with these players. Jefferies in their report also highlighted that paint sector has never seen such a massive capacity build out in such a short span of time. Lastly, we have Salazar Techno Engineering, where they've are poised to capture a significant portion of demand for monopoles, and they expect firm orders to manufacture and supply monopoles of rupees 200 crore within next 12 months. And recently they've commissioned new galvanization plant with capacity of 96,000 metric ton per annum.
All right, thank you for that, Varsha. Another set of stocks that are definitely in focus are sugar companies. There was a cabinet decision yesterday, and the FRP has been increased by about 8% for this year. Is that negative for sugar producers, and to what extent? M. Prabhakar Rao, President of ISMA, now on the phone with us. Mr. Rao, very good morning. Thank you for speaking with us here at NDTV Profit. Just want to understand the extent of impact you see with the hike in the FRP for sugarcane. Was this already expected?
Yeah, good morning. The FRP increase happens on the basis of the cost increase for the sugarcane farmers. So therefore, it is expected that it will increase every year. Though this increase appears little steep compared to the regular FRP increases in the past. As an industry, we welcome the enhancement of FRP because it helps 5 crore farmers who form the backbone of cane supply to the sugar industry. However, we have been requesting for corresponding increase of the MSP of sugar, the minimum sale price of sugar, and the ethanol prices. That has not happened commensurately this year. I think if that happens, we are absolutely very happy and we welcome this move.
Fair to say, Mr. Rao, that's unlikely to happen, where your MSP or your minimum sale price goes up, is unlikely to happen over the next few months. Would that be a fair assessment, considering we are going into election season? And overall, there is a move towards inflation control. So retail sugar prices going up may not be really, encouraged at this point. In that sense, if your input prices are going up, you can't sell at higher prices. What is the kind of squeeze you're expecting to margins? What is the impact that you see for sugar producers?
Yeah, I would like to answer this question in two parts. The first part is, it is wrong to presume that sugar is the reason for inflation. If you compare the commodity prices over the past 10 years or 15 years horizon, the sugar is the commodity which increased the least. If you compare with rice or wheat or edible oil, any of these things which contribute to the food basket, the inflation of the sugar prices is the least. That is the first part. Therefore, there is a case for the government to consider enhancing the sugar prices, allowing the sugar prices to move more freely rather than restrict them. But the more important part which I would like to comment upon is, this is one crop where 100% of the market intervention is undertaken by the sugar industry, not by any government. If you look at rice or wheat, the MSP intervention is taken up by the government bodies like FCI, NAFED, etc. This is one case where it is completely done by the industry.
Oh, no, I get that point. I get that point, Mr. Rao.
Yeah.
But just to come to my question, because that's pertinent to our coverage right now, what is the impact you see of this 8% hike?
The impact is about 10,000 crores. The total estimated procurement of sugarcane at FRP is more than 1 lakh crores. So this impact would be around 10,000 crores.
Okay. So impact for the industry as a whole you see as 10,000 crores.
Yeah.
Okay. I know we're talking about sugar prices right now in terms of sugar cane prices, but I also want to get your take, since you're here, on the ethanol blending. Now, some relief expected there on ethanol blending. Can you just give us a sense of what are the conversations on with government representatives and what you're expecting?
See, the recent revised estimates which ISMA has collected, which is done through a very scientific data estimates, indicate that we are going to land up at more than 320 lakh tons of sugar production. Therefore, there is a case for additional diversion of about 15 to 20 lakh tons towards ethanol. So we have been representing to the government to kindly consider this. And also we are requesting the government to procure about 4 to 5 million tons of sugar to maintain buffer stock, so that the market intervention by the government need not be through sudden policy changes. Rather, they can release or build up the buffer stock as the case may be.
Mr. Rao, just wondering, before we let you go, this 10,000 crores as an industry-wide impact is fine, but just to make it easier for people who are listening in right now, is this a sharp squeeze potentially on margins for companies, or is it not such a sharp squeeze potentially?
No, ideally, because that's why I was trying to explain to you the macro issues. This is an industry which is doing the procurement on behalf of the government from the farmers.
Yeah.
So therefore, there shall not be any squeeze on the industry. There should be a pass-through mechanism has to be there.
But since it is not there, Mr. Rao, since it is not there as of now, could there be a sharp squeeze temporarily on the margins, or it will not be a very sharp squeeze?
Yeah, if that corresponding adjustments are not happening, it can lead to a situation which was prevailing about 5-6 years ago. The payments may not be made to the farmers. The industry may go into bankruptcy again. So therefore, there is
despite
a need for
ethanol being there, you believe it could be a bankruptcy kind of situation, despite the ethanol economics?
Yeah, therefore, I strongly believe that government has done very good policy interventions in the last 4 or 5 years.
Okay.
So I hope that it will continue. That's my optimism.
Fair call. Okay.
And I'm not pessimistic that it will go into bankruptcy. I'm optimistic that it will lead to a better situation.
Fair call. Mr. Rao, leave it at that. Thanks so much for taking the time out and being with us and giving us those thoughts.
Thank you.
That's President ISMA on this piece of news. Nirav Asher and Shrikant Chauhan with us on this. Nirav, did you guys do you guys look at sugar? What do you make of this FRP increase? How big a dampener?
Thank you for having me on the show. Good morning. Yes, we have done a study on the sugar sector, and I think there was a time when this sector was completely regulated, and there was a control, virtually a control on the FRP and the price at which you are supposed to sell the sugar in the open market, how much sugar will be sold in the open market. And I think this scenario, what we have seen yesterday, the increase in the price, FRP price, is definitely going to be a sentimental negative as far as the sugar stocks are concerned. And it's definitely going to hurt the margins of these companies in the near term. We expect the prices to increase after the elections because of the demand related issues also, because generally in the summer we tend to have very strong demand for beverages, sugary sweets, etc. So I think the demand is going to be on the higher side, and of course the output may still not be able to match up because of the erratic weather patterns, etc. So not being able to pass on the prices to the final consumers in the immediate short run could be a negative as far as the sugar companies are concerned.
Yeah, so negative for sugar right now. I just wanted to contextualize that ISMA has said it's a hit of 10,000 crore rupees. How much it will impact each company will have to be seen in terms of, the broader picture and that particular company's margin squeeze. But the fact is that sugar companies have had quite a bit of buffer with ethanol, and we'll have to understand how much that really helps. Having said that, Shrikant, very good morning to you. Of course, I want to know your view on sugar stocks, but I'm going to start with what you think on or what you're looking at on the indices, because Nifty held up above the 22,000 mark yesterday. Nifty expiry today. What are your targets on the Nifty and the Bank Nifty?
Yeah. Good morning, everyone. Yeah, I think the market is into a specific corrective mode after hitting the levels of 22,250, because it was like a spectacular run that we saw from the levels of 21,500 to almost 22,250 to 75 without any correction. So that correction is coming. I think yesterday's correction was very close to the expected levels of 22,000. Maybe if we see furthermore weakness because of the expiry, then we may see the levels of 21,850 on the downside. But broadly, we are of the view that it's a corrective pattern, and after correcting to the expected levels, we can again expect rebound. Based on the Singapore Nifty or maybe GIFT Nifty, the indication that we are going to see higher opening. but the real trend will emerge if it crosses 22,300, which was the highest point of yesterday's trading session and the all-time highest level. So broadly, we are of the view that if there is any correction, we should look for adding some long positions. But if there is a higher opening close to 22,200, then there we should look for taking some profit on long positions. Bank Nifty was much resilient as compared to Nifty. And for Bank Nifty, now the important level to cross is 47,400. Above that, we can expect short covering, which can lift the index towards 48,000. So there also our view is same. We should be buyer if there is any correction. And 46,900 or 800 is the area where we should look for adding positions with a short term to medium term.
Okay, Shrikant, good morning. What are the ideas you're recommending for the day?
Yeah, I think yesterday we saw specific strength in metal companies, especially Tata Steel as well as Jindal Steel and Power and JSW Steel. There we have a bullish view based on technicals. We like Jindal Steel and Power, which is currently around 770, 772. The stock is forming a high top, higher bottom, as well as it is holding well above its important support lines and all the averages. Based on its technical pattern, it is outperforming to other stocks also. And broadly, it is heading for the levels of at least 800 to 810 in the near term. Buying is advisable with a stop loss close to 760. We also like few private banks, but in that, IndusInd Bank is forming double bottom sort of formation. And based on its formation, the stock can move to the next levels of maybe 1600, 1650. So at this level, around 1520, it's a buy with a stop loss close to 1480 on the downside.
All right, time for a very quick break. We are just about a few minutes from the pre-open trade. A quick look at the implied open before we go into that break. So we know sugar is going to get beaten down. Metals might see some kind of a spark. OMCs may not have a very good day, but overall the implied open shows about 63 points up. We'll be right back after this break.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with India Market Open right here on NDTV Profit. Now, there's a clutch of stocks which didn't do well yesterday and some stocks which did well yesterday. So we marked real estate as a pocket which had a really strong move in trade yesterday. And OMCs at the other end didn't have a great move in trade yesterday. ABB had a strong move in trade yesterday, but some Coal India didn't. So there were obviously movers and shakers yesterday. Nirav, I want to come to you on, let's say, the oil marketing companies. If you had invested into them earlier, would you right now take money off the table? BP, HP, IOC?
No, I think I prefer to hold on to my positions because I think from a valuation perspective, I think still the OMCs, the oil marketing companies, have a lot to offer. So I would prefer to hold on to my positions in OMCs especially.
So but I'm just wondering, Nirav, if in 3 months you made about 50, 60, 70% or 80% in IOC's case, and the valuations have moved so much higher, isn't it tempting to book and maybe look at other pockets, or you believe they're still reasonable?
I think the kind of investments which are marked up for the petchem sector, the kind of outlook, the demand outlook which is there, I think it prompts me to believe that I think we should hold on to our positions for some more time.
Okay, fair call. Shrikant, I don't know if maybe you gave a view on this one, but if not, are you booking profits from a trading perspective, or are you staying long?
I think if we go through with the technical patterns of all these companies, then they have like reached to their extreme levels in the short term. Yes, no doubt that we saw spectacular rally in last 3 months, and they have reached to their some extraordinary levels. But in the near term, yes, we may see furthermore correction. It's not like that the trend is over for all these companies. So BPCL looks really weak as compared to other stocks. So there we can see furthermore correction in the near term. But IOC is still much better in terms of its relative outperformance. And in case if there is any reversal, if we see any correction in the crude prices, then IOC should do much better as compared to BPCL. That's the overall view. So my view is that in case if there is any correction, then we should look for adding them with a medium-term view. But with a very short-term view, there is no point in taking any long position.
All right, your first rates are up, and we'll wait for them to settle to see a clear trend over there. But in the first rush, Hindalco is having another spectacular day. Hindalco was the stock of the day yesterday morning, about 24 hours ago, because of the Novelis IPO story. It's opened about 7.5% up, but we'll wait and see how that settles. Clearly, these are the first few flushes of trade. Grasim, also, I just want to see what Grasim is doing very, very initially, because Grasim has been on a tear. And you're going to see, perhaps an up move. Their entry into the paints business comes in today. ITC is the other one that we'll talk about. A story today in the paper saying that they might grab a bite of Pratap snacks. Not too much on the stock, at least in pre-open. We'll wait for that to settle. But Shrikant, I want to come to you on Grasim. And what you see happening on the charts. Of course, we'll come to Nirav on the whole paints picture. That's a very exciting and interesting story to talk about. But let's start with what you see on the charts, Shrikant.
Yeah, I think the overall pattern, if we see of last few months, then the stock was into range-bound activity. No doubt that it was forming new highs, but after hitting the new highs, it was coming back to the previous lows. So that was the overall trend. But maybe after the specific news flow, I am of the view that now it is heading for the levels of 2,500. So in case if there is any correction, we should be buyer with a short-term view. But if there is a medium to long-term view, then I think at even these prices, around 2,200, 2,250, we should look for adding this stock with a long-term view, with a view of 2,500 on the high side.
So Grasim, long-term view 2,500. It's an accumulate as per Shrikant Chauhan, even at a 2240, 2250. Nirav, just on the whole paints picture, and we'll fill up bits of that Jeffrey report as well, which talks about impact on Asian paints, etc. Are you bullish on Grasim's entry into the paints sector? Something they announced a couple of years ago, but it seems they're coming in with a bang.
Yes, very true. And of course, based on our study of the entire paint sector, what we understand is that Grasim will be able to make a dent as far as the unorganized players are concerned, because still in the paint sector, we have a lot of unorganized smaller players, the fragmented space, where there is a very good potential to capture the market space. So Grasim will essentially eat into the share of these unorganized players, and it may have a limited impact as far as Asian Paints is concerned. So I think Asian Paints will have its own share of problems because growth has to be managed. The volume growth has to be managed. The rural economy has to be managed. The product mix has to be managed. So I think the underperformance of Asian Paints would have nothing really much to do with Grasim's entry. And I think on its own side, Grasim will continue to do well. We expect the stock to do very well because of their entry into the advanced materials business also. They have also doubled their capacity in epoxy resins and formulations, and they are going in a big way in building materials and B2B e-commerce activities.
Well, you know, on that note, Nirav believes there is no impact, maybe on limited impact on Asian Paints. I believe Jefferies is amongst those who believe in the other end. And Harsh Seta, my colleague, is here to tell us what Jefferies thinks of the paint space and Asian Paints in particular. Also, another brokerage note as well. So a couple of key brokerage notes to watch out for this morning. Harsh, let's start off with the with Jefferies' view.
Yes, Neeraj. So, you know, everyone knows some of the mechanics that are playing out, but let me just reiterate nonetheless. One plant to be, to kickstart operations this week, but outside of that, 2 more to come on stream for Grasim by the end of this financial year, and 3 more in the next 12 months. That means there's going to be plenty of supplies, what Jefferies is really referring to in terms of the paint space. Also, with regard to the back-end work, they believe Grasim has already, and commentary also suggests that Grasim has already significantly ramped up with regard to IT infra already in place. Logistics also is something that they're ramping down, that they are really pushing, and they are expected to start to go live as well in a big way. Leases for depots, onboarding of dealers, even ads, all of that is getting finalized in the pipeline. Now, with regard to Asian Paints itself, they believe, Jefferies believes that revenue growth is already slowing down, so that's a negative, and that trend is expected to continue going forward. They also believe that Asian Paints may look to pass on some of the benefit to consumers to ensure that volume growth is, or rather remains intact, or even is made a priority, and therefore pricing pressure will come into play. Not just Grasim, but even other players, including Asian Paints, are really pushing with regard to capacity. They are expanding capacity, and therefore pricing will come under pressure according to Jefferies. Smaller players more impacted, that's a possibility, but they believe that industry profitability will be impacted just on the sheer magnitude of the expansion that's being carried out. They are perplexed with regard to valuations, which have remained elevated despite the underperformance, 55 times 1 year forward, and their estimates are 7 to 13% below consensus when it comes to earnings. So they've valued it at 2,500. They're seeing roughly a 17% downside to this one. Quickly moving on to the next one, Citi on Maruti. Well, they've maintained their target price of 14,200 on Maruti. They have a buy rating on it, but they've opened a 90-day positive catalyst watch on this one. Why? They're expecting pickup in monthly volumes, and that on a sustained demand as well as restocking. That should aid monthly volumes. Second, they're expecting lower discounts and higher operating leverage to play out in Q4, which should drive earnings growth for Maruti. They believe that this could see more news flow, or rather Maruti could see more news flow on the back of refreshes to both the Swift and the Dzire, and that should aid Maruti positively going into Q4. Also, with regard to valuations, 26 times FY25 EV to EBIT is how they value it. 14,200 is the price that Citi has given to Maruti.
Okay. Harsh, thanks for that. Seems that on the pre-open session, this one might actually have not a bad start, so keep an eye out. Maybe a flattish move. Actually, the pre-open session itself, there was about a 60-70 point uptick believed. Let's see what the pre-open session is doing. We're just about getting settled there. About a 26 odd point start. So that's how we are likely to start off. Must say, yesterday's big winner, ABB, is likely starting off well today too. That's another 4.5% added to the 10% up move yesterday. So strong brokerage calls coming in, and there's a bit of a reaction happening there. But quick one out here. So on Maruti and on ABB, Shrikant Chauhan, any thoughts? Citi is constructive on Maruti, and UBS and Nomura are constructive on ABB.
Yeah, Neeraj. I think ABB looks really strong. The reason is because the way we saw price expansion and volume expansion, and also whenever the stock has corrected, it is bounced back to the previous highs. So while looking at its entire pattern, I think the stock is heading for at least 5,500 or maybe 5,700 based on technicals. And yesterday's overall activity is indicating us that if there is any correction, then we should look for adding positions. For Maruti, I think it will remain into uptrend and gradual uptrend. So I'm not expecting stock to blast, but it is going to remain into uptrend gradually. Maybe 11,800, 850 is the next level to watch out for. But again, the strategy should be to buy Tata Motors or maybe Mahindra and Mahindra as compared to Maruti.
Well, strong moves there. By the way, the other ones which are reacting to news flow, Eureka Forbes, the block deal done, presumably large trade rather, 5.5% up for Eureka Forbes. Much talk about how there is selling happening and how the stocks will languish post that because the smart money is getting out. Quite the reverse is happening, to be honest, and Eureka Forbes is not necessarily the example, but a clutch of names. I mean, Texmaco saw a large sale in sometime in March or April 2023. The stock has delivered 300% return since then. So, I mean, you know, yes, it is disconcerting to see large sales happening, and maybe at some point of time the cookie will crumble, but for now, it looks okay. The other one, NBCC, Tamanna highlighted it, up about 4% at the end of the pre-open session. There's also strength in Home First, which is up about 3.5% in the session, and Brigade, which is up about 4% as well. Nirav, the space, real estate is looking very strong. I'm tempted to ask you, which is that one name that you guys are recommending to your clients to invest into afresh?
I think afresh, I wouldn't say afresh, but we've been constantly recommending Godrej Properties to our clients, and we've been reiterating our calls over there. Apart from this, we've also been recommending Century Textiles, Raymond, and DLF to our clients.
I just want to look at what Paytm is doing this morning, because that stock has spent its fourth trading day really doing very well. It's off that upper circuit where it was in pre-open, but it's gone up to $400. And think about it, this Friday's close was 341. It's a 50-60 rupee increase in just about 4 trading session. We're also now getting news in that there's been a block deal. 3.69 million shares have been traded in Paytm. Now, my question is that all the concerns have been around, nothing has changed really fundamentally, but yet anyone who wanted to take a short-term play on Paytm at the start of the week and had the courage to do it would be very happy right now. Shrikant, any views on what is happening with this counter?
I think, see, very clearly the stock is following to the pattern of lower top, lower bottom. That means the trend is very clearly down. But because of the deep cuts, whenever the stock is falling to the extreme levels, it bounces back to retrace the previous fall. This time also the pattern is more or less similar, and maybe we may see the levels of 420, 430 on the higher side. But broadly, we are of the view that it is better to stay away from taking any position at current levels because the stock is still under the event. So whenever the stock is under the event, it gives some abnormal sort of activity during the day. So it is better to stay away. There are like number of stocks to trade for, but in case if we see the stock is crossing the level of 530, then we can say that the stock is stabilizing. So 530 is the previous swing highest level. Till the stock is not crossing that, I think the stock is going to consolidate, or maybe it is going to remain into that downtrend.
eClerx has a sharp downtick, 9.5% on open, so that's interesting. But Eureka Forbes is the other one, up 5% today, is a stock in news. Nirav, do you fundamentally track Eureka Forbes?
No, not Eureka Forbes, but we look at the entire water treatment space, and I think there's been a very good moment as far as all the players are concerned. Most of these companies have been doing quite well, water treatment chemicals, etc. So whether it is Thermex or whether it is Vatek Wabag or whether it is Eureka Forbes, I think all of them have done quite well in trading.
Metals are doing well this morning. Shrikant's call pre-open as well. At least pre-open, Hindustan Copper, NMDC sale, all looking set to have a pretty good start. Shrikant, any last calls that you see before we hit opening in about a minute and a half?
Yeah, I think in that space, JSW Steel also looks good. The reason is because, again, the stock is forming double bottom. The overall space is going to do well. From here, the stock can again bounce back to the levels of 900, because whenever there is a recovery in the stock, we see a recovery at least up to 7 to 8% from the previous low. So here also, I'm expecting stock to move upward towards 880 or 890. I think JSW Steel is a buy at current levels with a stop loss close to 815.
Sorry, Shrikant, reconfirming, is that your top stock call for the morning, JSW Steel?
Yeah, I think all the metal stocks, they should do well. In that, I like personally Jindal Steel and Power, on which I have given call. But apart from that, I think JSW Steel should also be on the watch list.
Oh, okay. So your favorite is, of course, JSPL, which is Jindal Steel and Power. Viewers just distinguish that. All metal stocks could do well, according to Shrikant. JSPL is his favorite. Now, the reasons could be many, but if you just look at what's happened in the last few days on China front as well, phenol prices have inched up, metal prices have come into focus, and which is why I think this move around all of these stocks have started. So just keep that in mind as well. As we said, a large equity trade on Eureka Forbes has happened. That stock is likely to start off about 5.5% higher, so remains a top draw. But let's start off with the large caps. This Thursday morning, we'll have a flattish start, very likely. Flat as flat can be, really. It's just bobbing between the red and the green. No big shakes. So the GIF implied open numbers didn't turn out to be true, very quickly into the red actually. The banks also just about status quo, no big changes there. Wonder if the broader markets have started off okay. Again, flattish moves. Doubt the small cap index is doing anything different. It was a bit more resilient in the mid caps yesterday. Bring up the BSE small cap if we can before we just pull up the heat map, because the small caps did reasonably okay yesterday relative to the mid caps, about 0.4% higher, so not a bad one. Let's get the heat map up on the screen and show you what's doing well and what is not. So Grasim is at top of the pile, up about 2%. Wonder if Asian Paints is somewhere in the losers list. Yes, indeed it is. Asian Paints is the top loser. This is a great contrast that we're seeing this morning, viewers. About a 5% difference on a pair trade if you did one. But Grasim up 2.5%, Asian Paints down about 2%. So that's the story of the morning. The paint companies have shown opposing forces at play. What else? There is weakness in Power Grid, weakness in HDFC Bank. There is weakness in BPCL yet again. So it was down yesterday, amongst the top losers on the Nifty yesterday, and down yet again today, BPCL. Aside of that, maybe a Dr. Reddy's, maybe a Titan, on which there were some sell calls yesterday, but maybe a little bit more green than red. You could actually argue it's even Stevens. Now, Asian Paints is actually deepening those losses as well. What is doing well? Axis Bank, and yesterday or day before, I think, yesterday SBI held fort. Today, Axis Bank is kind of doing okay. There's strength in Hindalco. We spoke about the strength in metals, very likely. Coal India from the metal index also up 0.8%. And IT, by and large, seems to be holding out marginally, but nothing great out there. So metals doing okay, Grasim doing okay, Asian Paints not so much, and BPCL continuing to sulk. That seems to be the summation of what's happening in the index at least, but the real action and the news flow at the broader end, Tamanna.
Absolutely. I would just add maybe a Maruti, not too bad this morning because of the city note perhaps. But let's start with seeing what's happening to sugar stocks. That's a space that we focused on all morning. On the face of it, of course, news that sugar producers will have to dish out more for their core ingredient, which is sugarcane. Looks like it's negative, but not too much of a hit, if I do say so. Balrampur and Chini about % down. Yes, they're all down in the red, but not very, very negative, I would say. But we could look at a few more of those sugar stocks and see what's happening there as well. Yeah, so between 1%, 0.5%, and maybe up to 2% in Mavana's case, down. So a little bit of a negative sentiment, but not a complete slam dunk. OMCs, we already addressed what's on the Nifty, but let's just look at what BPCL, IOC are doing. HPCL is okay. IOC and BPCL, the big losers this morning. So back-to-back notes which talk about weaknesses in OMC. It was Spark Aventus yesterday, it's CLSA this morning. So that outlook is looking negative on OMCs as well. Titagarh is the other one I wanted to talk about. A bit of news there this morning. They are investing 100 crores in the JV SP with Shivalix Metal. So let's talk about 1% up. Let's see what ABB is doing this morning. So it was the big closer, the stock of the day. Yesterday on trade, closed about nearly 10% up, 9-10% up. Nomura Note sees positives really sustaining from its Q3 numbers, and that stock up 3% this morning as well, already on the back of a big bump up yesterday. So ABB's in the pink of health, so to speak. South India Bank is the other one I want to talk about. They are looking at a rights issue. And it's a 1,151 crore issue. The record date is Feb 27th, and the ratio is 1:4, 4.5% up, not bad at all. And Paytm now on a downslide after showing a technical jump up for the last many sessions, is back in negative zone today. So quite a few stories out there this morning, but so much more happening, isn't it, Neeraj?
Yes, Tamanna. So Campus Activewear is up 4%. SBI Mutual Fund yesterday bought out that stake that was sold. That stock is up about 4% and is amongst the top gainers in addition to NBCC and HEG. So watch out for that one. By the way, HEG and graphite. So the graphite electrode makers seem to be doing okay this morning. So that's to be kept in mind. Essentially, anything related to China and metals is doing very well, and that has to be given credence to. It is showing some serious strength in trade. Wonder if Pratap Snacks is doing well on the note that has come in. Oh, whoa, that's 10% higher on a story in one of the dailies that ITC may take out PE firms. 47% stake in Pratap Snacks. That stock is up and active, and how I'm sure the volumes on Pratap Snacks as well have really inched up. So watch out for that. There's some weakness in Whirlpool yet again. So that's the other one. And some weakness in Devyani International as well. So those are the other two that people should be watching out for in today's session. But yeah, that's the sum and substance of how we've opened up. Just a quick word into the small caps and see if we've missed out on any big moving small cap. By the way, for whatever reason that ABB is in the small cap space, that one is doing well. But Grar and Whale is up about 15-16%, maybe on tepid volumes. No, actually not on tepid volumes. So that is doing well. Associated Alcohol is up. Marathon Next Gen is up about 8%. And Nelco and MTAR Tech. So I think the space companies, MTAR Tech is doing well. By the way, sorry, the last name before after MTAR Tech is Walchand Nagar. And see if Walchand Nagar Industries also is up in the green because of that 100% FDI, about 2.5% higher. Okay, quick opening thoughts. Actually, before I go to Nirav on the space companies, Shrikant, opening thoughts, any stock that catches your eye, or if a trade on an index if possible?
Yeah, I think after this specific opening, we are seeing some strength in IT companies, especially in those companies which are like really doing well, like HCL Technologies. I think there we are expecting further more activity. The stock has corrected back to the levels of 1600 when there was correction in the market. But now again, it is back to 1650, 1660. So I think, Neeraj, from here, the stock can easily move to the levels of maybe 1730 or 1750. So HCL Tech looks good to buy. And as you mentioned, I think all these PSUs, especially oil PSUs, are under pressure. So we can expect some further more weakness in this particular sector.
Okay. Fundamentally, Nirav, not a very large space, but the 100% FDI in space, have you guys analyzed any of the businesses in this pocket, and do you like anything there?
I think we've looked at Walchand Nagar, but I think it's very early to really identify any companies which could benefit in a very, very significant way. So we'll wait for some time. As things pan out, we'll be able to come out with something concrete in this space.
Yeah, but the whole pocket seems to be doing rather well for itself. So best kept in mind. Again, on the small cap space, in amongst the stocks that either have made the big move on the upside or the downside, or on the downside. Pratap Snacks is up about 10% as we highlighted. Marathon Next Gen from the real estate space is doing very well. So that's to be kept in mind. And Campus Activewear, a large block deal yesterday bought into by an AMC. The numbers haven't done that great for a Campus Activewear or a Relaxo or a Bata or some of the others. Nirav Asher, are valuations in your favor fundamentally, or would you stay away?
So I think Campus has been an underperformer since the time it got listed, and the stock has been under tremendous pressure because the results have been very disappointing. And I think at this point in time, at this valuation, I think it could be a compelling entry point on the hopes that the performance will improve in the ensuing quarters.
Let's just take a look at what's happening with NBCC. Interesting story there as well, because they have a 1,000 crore deal in the sense. Basically, the beleaguered Amrapali projects will have to be taken over and rebuilt. The stock is up today as well. Nirav, let me come to you first on what you make of an NBCC, and do you think this is now a long-term play?
Yes, definitely. This looks like a long-term play, and I think they will be able to capitalize on this opportunity with what they've got at this point in time. So I think one can have a fresh look at it.
Shrikant, you think NBCC were taking another look at as well?
Yeah, sure. I think here also, if we see the pattern, then there was deep cut from the levels of 175 to 120. So I think now the stock will take time to perform. But yes, with a very short-term view, we can see some range-bound sort of activity. I'm not expecting stock to cross the level of 150 so easily. On the downside, it has support somewhere close to 125. So I think it's a range-bound stock, and maybe after the news flow, it is better to take some profit on the long positions.
3% higher for this one. Okay, so that's with regards to NBCC today. KPI Green is up 5%, but Inox Green is down 3%. So that's one set of stocks to monitor as well. Interestingly, what's happening to some of these green pockets is very interesting. And I think Shrikant made this observation about how some of the IT names are doing well. It's percolating down to the smaller end too. Birlasoft is up about 2.5%. Nucleus Software I saw some time back was up about 2.5%. So some of these smaller names seem to be doing okay here. Just wondering, Nirav Asher, while people talk about the big four, etc., and what's happening, some of the growth numbers in the mid cap and small cap IT names were very strong. Have you guys looked at this pocket? Do you like anything from here, and why so?
Yeah, actually, the mid-cap companies have performed quite well. So I think we'd like to look at the L&T twins, and of course, we'd like to also KPIT technologies, etc. So some of these stocks look very exciting from a medium to long-term perspective.
Okay, well, watch out. Birlasoft and Nucleus are just amongst the others which have done well. And a lot of stocks this morning, like we said, IT is doing well. Space Tech, I mentioned Walchand Nagar and MTAR, but there is also Nelco, which is up 6.5. There is also a couple of others like Mishra Dhatu Nigam, which are up about a couple of percentage points as well. So keep an eye out for those stocks. Nirav, before we let you go, one fundamental idea from your end, which the house would have looked at in the last few days.
I think if ABB has done well, I think Siemens should also follow. So I think I'll go with Siemens.
Fundamental differences between the models of both the companies, Nirav?
Yeah, there are a lot of differences, but essentially both of them have got technology leadership, and technology leadership essentially will give them pricing power in the time to come, and that will lead to superior quality margins.
Before we wrap, last call from Shrikant on two, I think, tale of two paint companies, or one which is going to become a paint company as well, Grasim and Asian Paints. We saw that sort of divergent move, right at start. So Grasim now a little pared down, but about 1.5–2% up. Asian Paints 1.5% up. Shrikant, on the charts, what looks stronger?
Yeah, I think there is no doubt that Grasim is really doing well. And it's not that it is like in the short term performing. There was like uptrend since the last so many weeks and so many months. So Grasim, yes, we can expect furthermore upside. But I think now the downside for Asian Paint is also about to over, because now the news is out and the stock has spent a lot of time close to this 2,900 levels. So unless and until the crude is moving back to the levels of 90, I don't think that Asian Paint is going to underperform from here. Yeah, it will take time, but I think the stock is now very close to its important support levels. And if there are like any investments, I think it is better to sit on them or maybe to hold them with a long-term view.
Yeah, absolutely. Thank you so much, Nirav and Shrikant, for joining us on the show today. Just a quick look at one stock, and you're seeing that news flashing on your screen before we go into that break. SpiceJet has raised an additional fund of 316 crores. Their total investments now stand at 1,060 crores. SpiceJet, anyway, an interesting story. They want to give support to Go. Of course, Ajay Singh wants to run Go, or is bidding for Go in his personal capacity. But meanwhile, that airline and that company also shoring up its own resources. Very quick break, but on the other side, we have a whole set of interesting conversations. We'll be right back with PTC's Sachin Agarwal.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If if you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Well, we are seeing a lot of changes in multiple sectors in India. Company after company has come in and spoken about how the Indian aviation supply ecosystem is now truly becoming a global supplier. And we've seen multiple instances of that. One of the recent ones was Aeroloy Technologies, which is a subsidiary, 100% subsidiary if I'm not wrong, of PTC Industries, signing a long-term purchase agreement with Dassault Aviation for supply of titanium cast parts for the Rafale multi-role fighter aircraft. PTC is a manufacturer of precision metal components, and in this slide we thought it's best to get in Sachin Agarwal, who's the chairman and managing director of PTC Industries, and must be a proud man, joining us on the show today and telling us what this entails. Sachin, good having you. Thanks for taking the time out. Congratulations on this. It happened, I guess, about a month ago, but we got on a chance to talk now. Just tell us, what does something like this entail?
Good morning, Neeraj. Thanks a lot for inviting me on the show. This basically is an agreement that we signed with Dassault Aviation for their entire fighter jet aircrafts and even their business jets, Falcon. So all the titanium cast parts that go on these aircrafts would be manufactured by us in Aeroloy. As you rightly said, it is our wholly owned subsidiary. Over a period of next few years, these will be developed and will be supplied not just for the requirements in India, but for global requirements wherever they sell these planes. So it's a big deal. This is the first time they would be moving out of France or Europe for manufacturing of such critical parts that go on such type of very stringent quality requirements and technical requirements.
Is something like this multiple quarters or multiple years in the making, Sachin? And now that it's been done, what does this open up PTC Industries for? Within more supply to Dassault, as the case may be, or to other companies? Because I'm sure global companies will take notice of the fact that such a large company has chosen an Indian supplier. And tell us, what has life been since then?
Well, many such things have been in the background working for many years. It's not, yes, this came to fruition just about a month back, but the kind of investments that we are making and the areas that we are making in, and the kind of technologies we are bringing and have already brought is of interest to all aerospace and defense companies worldwide. All the primes, all the top tier and middle tier companies are interested because the biggest issue is supply chain. The supply chain is highly reliant on certain countries and very highly reliant on even certain companies, if I can say so. And this is a very big investment and a creation of capability, which of the scales and the magnitude and the end-to-end coverage of the entire supply chain, right from material all the way to components and systems, has not been seen globally. And so that's what excites them, and that's what brings them on to us, and to secure the supply chain for the future.
So Sachin, I mean, we unfortunately today have paucity of time, but I would love to therefore try and get a sense of what would something like this mean for PTC for the future. You've given us a sense of
how important supply chain, quality supply chain locking down means for some of these companies. You are right in the thick of things now. From where you are right now at PTC Industries, let's say end FY24, how do you envisage PTC to be like 5 years out? Let's say towards the end of the decade, or if that's too far, maybe 3 years out. Your vision for PTC?
So the vision for PTC is very simple. It's driven by a single word, which we have adopted as our dharma, is parity. So we want to put a capability in India, which puts India, the country, at par with the rest of the world in the domains, in the sphere that we are in. That is metal and metal components. Now, that means that to get into those technologies where there's a gap in the country, we only fill those gaps in the country. Something which some other companies are not doing, or where there's a gap in technology, capability, infrastructure, skill, knowledge, know-how, whatever it is, we'll fill that gap. And driving by that mission, we are able to identify things like titanium, superalloys, manufacturing capability within the country, which was not there earlier or hasn't been there for the last 70, 75 years. And in that sense, what we see over the future is a massive increase, a multifold increase in our capability and revenues and margins going forward. So the next 5 years are going to be a very interesting one, because lots of global as well as Indian defense manufacturing requirements driven by Atmanirbhar Bharat is coming to us. And we are really filling these gaps and filling these requirements for supply chain integration for foreign OEMs as well.
Got it. Sachin, a few people who might understand this space better would have already been investors, but for the larger investors who are trying to understand your company, I'm trying to be the bridge right now with this question of mine. I heard you say that multifold increase in revenues and margins are possible over the next 5 years. Your revenue numbers, for example, Q3 weren't the most impressive, but the margin expansion was visible and telling from 21 to 27%. I'm trying to understand, lay out the numbers for us from 27 odd % or wherever you are right now. What is the new normal like on an average over the next 5 years, if you will, or what are the numbers that you can reach? And when you speak about multifold increase in revenues, is there a vision statement that you've laid out for reaching a particular revenue number at the end of the next 2, 3, 5 years, as the case may be?
So the revenues will be driven. So in a sense, that investments we have made and we are making now are of very large capacities. If you look at the capacities that we're installing for aerospace materials like titanium alloy manufacturing and superalloy manufacturing and titanium casting, superalloy casting, single crystal castings, these are technologies which didn't exist in the country. Not just exist in the country, nobody would give these technologies to India. We have been able to manage to bring these capabilities within the country. That's a big thing. Now, just talking numbers, margins are going to improve. When you're saying 27%, I think we're going to be reaching somewhere in the region of 30 to 35% EBITDA margins pretty soon. And that's where they will stay. The most important part of this business is sustainability, not just sustainability of our ecosystem, but sustainability of margins as well. The sustainability of margins is very dependent on the type of business that you are in and the competitive scenario, not just in India, but globally. If you're a machine shop, there will be hundreds of machine shops that will come up over the next 5 years, and protecting the margins is going to be difficult. But the technologies that have not been there available for 70, 75 years cannot be assumed to be available again suddenly for a plethora of people for various reasons. Access of technology is one, absorption of technology is another, and the financial investments are another aspects where we have been able to get these technologies and equipment and infrastructure at a very, very low cost, almost 1/5, 1/10 of the investment that it would have required. So all this put together puts us in a very, very sweet spot where we, as I said, a multifold increase in revenues and sustainability of margins, not just being able to achieve margins for 1 year, 2 years, 3 years, but to be able to keep those margins for a decade or two.
20-second answer, because we're out of time completely, Sachin, but you did about 200, 220 crores, circa 220 crores FY23. Multifold could mean 800, multifold could mean 1600, multifold could mean 3000 crores as well. Any targets?
All those what you said. I'm just going to keep there at different points of time, of course.
Yeah, but so next 5 years, you believe you could be 5x what you were in FY23? Or more
Reasonably
than that?
possible.
Reasonably
possible.
Fair call.
Yeah.
Okay, Sachin, we wish you all the best with this and more. Thank you for taking the time out and speaking to us.
Thank you, Neeraj.
All right,
Thank you.
Well, that's PTC Industries, confidence personified, contract with Dassault, and margins likely to improve going ahead. Time for a short break. We'll be right back with the management of Endurance Technologies on a recent announcement that the company's come out with.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
All right, it's the fag end of the earnings season, but we're focusing today on the auto ancillary space and the Q3 numbers of Endurance Technology. This player is in aluminum die casting, suspension, transmission, and braking systems, as well as aftermarket. Now, in its Q3, revenues have been good, up 22%, EBITDA up 30%, net profits also looking solid, up 40% year on year, but margins have been quite flat. What is the outlook for this space? To speak more on this, I'm joined now by Ramesh Gehani. He's Executive Director and COO at Endurance Technologies. Mr. Gehani, thank you for speaking with us here at NDTV Profit. Let's begin by talking about the margins and where that pressure is coming in from. Have you also seen a bit of Maxwell's performance weighing in on the numbers?
Yeah, good morning. Let's keep Maxwell aside for the time being, because that's on an uphill trajectory as far as orders and businesses are concerned. And but otherwise, if I look into the console and standalone numbers, we've done fairly well alongside the industry. If you know that the industry has grown just about 5.8% and we have grown 15%, So the numbers are floating in, and I think we're pretty happy the way things are going. Even in January, if I look into the CRM numbers, they're fairly encouraging. So if this trend continues, I think we can all see a very promising year ahead.
Fantastic, absolutely. Two-wheelers are picking up as well. But just coming back to the margin number that you've seen, where we're up about 0.7% bips. Can you just give us more sense and more, clearer idea of that?
See, there are two ways of looking at this. On a quarter-on-quarter basis, it's an incentive, PSI incentive, which plays a role. Because on Q3, we don't book any PSI incentives. That's something we do on Q1 and Q2. So on a comparative basis, you'll find Q3 a bit subdued because it does not hold any PSI incentive. But on an overall basis, we have grown on margins, not only standalone, but even on a consolidated basis. At a PAT level of 7%, I think these numbers will surely improve further as the industry performance increases.
Yeah. One big change this quarter was also an incentive from the Maharashtra government. And that's something that, all of you have talked about in your con call as well. I want to understand how much of an impact it makes, because that incentive, if I'm not mistaken, is about 59 crores odd and is not continuing anymore. Is that right?
No, it's not that way. See, the total incentive that is booked under the PSI scheme, which is package scheme of incentives for endurance, this is scheme 2013. We have got an eligibility of 466 crores, out of which 327 crores has been booked. But what has been received is 240 odd crores. So what you will see in the coming years is a build up to 466. But once the 466 is totally booked up, then after that, there's no incentive on the current scheme. But we are also entitled, or we are, applying. We will be applying for the 2019 scheme also. So this package scheme of incentive, which is by the government of Maharashtra, is very attractive and very promising. So we'll be continuing with these incentive plans.
Okay, so you're saying that the incentive scheme is likely to continue. Of course, you have to reapply for it, etc. But that is a policy move that the government has talked about, and you're saying you're expecting that to flow in as well. Am I understanding that correctly?
Yes. So the 2013 scheme ends as soon as we receive the total amount of 466 crores, and then the 2019 scheme, for which the eligibility will start for 350 crores and above on capex. So we will be able to qualify that. On that number also.
Okay, let's talk a bit about the regional or geographical breakdown. From what I'm seeing in your numbers, India has been the power driver, and Europe business has slowed down a bit. Do you expect that to continue?
No, you've got to look at it from this point of view that Europe is now doing better. The numbers are floating in. There also the increase is somewhere around 13%, and the other situations, the working conditions are improving on a comparative basis when we talk about a year or year and a half back. Even the electricity prices, which were rocketing high, have come down quite substantial, although they're still higher than the pre-COVID levels. So these improvement in conditions, economic conditions, or even the working operating conditions are improving, and I see even Europe improving on not only the PAT numbers and on the revenues, but overall basis, you can have a good year for Europe also.
Okay, but relatively, where do you see the biggest growth coming from? Europe will improve, of course, on its base. But if I were to ask you for an outlook for the close of this financial year and the next, where do you see the engine of growth coming from?
See, there are many growth factors which we have for ourselves. One is premiumization. The most important part is premiumization. We took a very early start on the premiumization on our product lines, right? For example, high-end suspensions and high-end braking systems, where we've got orders booked even for high-end CC bikes and high applications for the suspension. Then ABS is something which we entered early 2 years back, on which we have already reached our capacity volumes of 400,000. So these are the growth drivers which will come not only from premiumization but also from regulatory norms and other things like better configurations on the vehicles, and EV taking a lot of space or finding traction into the system. That will also bring in new orders.
Okay, let's talk a bit about your new orders. From what I saw on your con calls, about 1,700 crore worth of inquiries from OEMs. Can you give us a bit more detail on that? How many of these you expect to come through?
Well, see, our normal strike rate has been on RFQs close to 20 to 25%. It depends on which product line is coming up on our RFQs, although we bid for all the numbers which are relevant to our business model. But total business wins for this year has been close to 1,000 crores or in excess to about 1,000 crores, out of which the peak capacity of this will be reaching close to end of next year.
Okay. Now let's talk about Maxwell. A tough quarter and EBITDA loss over there. And as you've mentioned, one of the main reasons is the postponement of EV launches. How are you expecting that, and why are you expecting that situation to improve?
See, there'll be a bit of peaks and valleys on the EV sector as we are experiencing, FAME 2 subsidies and so on. And I think the whole system is getting recalibrated as far as the market position is concerned. So we have got some handsome orders. We've already, in fact, Maxwell directly has booked 380 crores of orders on EV, and which is likely to be matured in full extent by 2027. And they are on the up move. The BMS is also taking a good shape, and as the volume move forward, as we find extra numbers coming in from the OEMs, you can definitely see better performances from Maxwell. I personally feel, and I'm pretty strong about it, that we should be EBITDA positive very shortly.
What would you define as very shortly, Mr. Gehani? Would you like to put a time frame on that?
You can say by Q1 of next year.
Okay, so that's not far away at all. So Q1 next year, you're saying you'll be EBITDA positive on Maxwell. That's an important take. Just last question, your outlook for the two-wheeler space as well. On an upside, but in fits and starts in terms of demand, etc., especially in the EV space, how do you look at two-wheeler demand panning out?
See, I would view it a bit differently. The peak that the auto industry, the two-wheeler industry has seen was 24.42 million. This year also they're expecting to close, if I annualize basis, I can see it's likely to close around 21 million. So if I just make a direct comparison, I think there's a headroom of 3 million vehicles to the peak that we had already achieved. But as we find EVs coming in place, there can be some extra numbers pouring in, which will carry on and find its balance in the coming years.
Okay. Thank you so much for speaking with us. That's the management of Endurance Tech talking about the quarter that went by and the optimism when it comes to a pickup in the EV space as well. That's all the time we have on India Market Open. It's a wrap on this show, but stay tuned. Talking Point up next.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Thanks for tuning into today's Talking Points, a special one because we've got the City think tank to try and to analyze what Q3 and the 9-month results have thrown up for India Inc. and what could calendar year 24 or FY25 hold in store from an earnings and a valuation perspective for the market at large and for specific pockets. Joining me on the show today are Surendra Goel, he's head of City Research India, Kunal Shah, Saurabh Handa and Atul Tiwari tracking banks, oil and gas, telecom, as well as industrials, electric utilities and property respectively. Gentlemen, all of you, thank you so much for taking the time out. I really appreciate you being with us in our studios. Surendra, if I can start off with you, end of Q3, are you guys more upbeat about the earnings reportage based on what was reported and the con call analysis that you would done for Q4, or are you a bit circumspect?
Yeah. So thanks for having us on the show. So to begin with, see, more than the earnings, we look at the upgrade to downgrade ratio, which again was positive both for FY24 and FY25 within our coverage. Okay, so that kind of tells you that things are progressing in the right direction. Okay, and if you look at the consensus Nifty earnings forecast, it has pretty much remained unchanged through the year. If you go back historically, we have started off high and then there have been downgrades. For most years, if you take the last decade, barring 1 or 2 years, that's been the usual trend. So in that context also, the earnings are holding up pretty well, and it's a fairly good level of earnings also, right? So as we go forward from here, there is generally an expectation that we still have around a 14% earnings CAGR for Nifty over the next couple of years. So to that extent, I would say that, yeah, sentiment has been pretty upbeat, but this quarter's earnings kind of supported that. Okay, and even the upgrade downgrade ratio, which I spoke about, everything kind of pointing to things trending in the right direction.
Not bad. But good to hear. Where is it that there has been the largest upgrades to your mind, Percy? Let's talk about the good news first.
Yeah.
And where is it that some of that might be priced in already?
Yeah. So if you look at sectors like autos, okay, that is where a significant upgrade came in, and again, a lot of it is driven by margins. Okay, so the mix and then in turn margins. So of that was one. And again, we have Saurabh here who can talk about energy. Those numbers have come in fairly strong. Industrials is the other one where again, certain stocks, etc., have done well. So these are sectors where there have been fairly good upgrades. In terms of downgrades, I think financials definitely at the margin, things have been a little soft. And again, Kunal is here, he can talk about it. So there I think we have seen some softness, and again materials is again some select materials, I would say, not broad based. There we have seen some downgrades. Other larger sectors, I would say pretty much kind of the same trajectory, no big changes.
Just a quick follow up to that before I get in the other gentleman in. What about where all do you reckon some of these upgrades are priced in, or that the downgrades have not necessarily made the stocks too unattractive because the prices may already have been baking some of the weakness?
Yeah. So for example, if you look at financials, right, and again, banks specifically within financials, if you look at the valuations in the context of history, the valuations are already pricing in some of this weakness. Okay, so if you look at versus 5 years or versus 10 years, banks are at a discount to those means and averages, which is not true for the broader market. So I would say there, I think some of the weakness is priced in. I think the question which people are debating is how much of this is like a 2-3 quarter thing, or is it kind of longer drawn out? So that's one sector where I think a lot is kind of priced in. In terms of some of the sectors like industrials, and again, select pockets within industrials, for example, yes, numbers are strong, but then the multiples are also quite elevated. Okay, so to that extent, I think there is a fair bit of optimism already priced in. And in general, I would say, I think when we talk to investors also, valuations is something that comes up in almost every discussion. Because like the market at 20-21 times is definitely higher than where it is historically traded. And to that extent, and the premium to other emerging markets is also significant. So to that extent, that's something which is there like front and center in every investor conversation. And that is something that people are also monitoring quite carefully.
Got it. And I think each of those subsets, we'll get each of them to cover as well. I'll go in the chronological order or the order of seating. Kunal, can I start with banks? Clearly, the space which is, to most people who are invested, befuddling them as to boss ye kab hilega, kab chalega. But no, the larger point being what's happening to these banks in terms of their earnings performance. And is it the supply side issues or the supply of paper which is keeping the prospects a bit subdued under the current context?
Sure. So when we look at it, maybe in terms of how they actually performed with respect to Q3 as well as the 9 months, headline earnings were better. But still, if we look at qualitatively, few of the trends which are worth highlighting, one is with respect to deposit growth, and that was underwhelming this quarter. And some moderation out there even on the loan growth side compared to what we had seen in Q2. Secondly, when you look at it, some inch up on the retail slippages, not for all the banks, but in some pockets, we have started to see increase in the delinquency levels, and that was reflected in the slippage run rate for this particular quarter. So maybe on qualitative aspects, it didn't go that well, and that's the reason there were some downgrades which have happened within the sector. If you look at it, there is definitely the supply side constraint. When we look at it even from banks' balance sheet perspective, now many of the banks are setting their narrative and anchoring the growth towards the deposit growth. There is a tightness in the liquidity, and there are challenges in terms of deposit mobilization. And if you are trying to anchor the entire asset growth towards the liability growth, some banks are definitely facing the problem on the growth side. But still, in terms of the earnings management, the focus still continues to be there. There was not too much of a disappointment on the margin, I would say, even in the last quarter. Even the outlook we need to see as to how it pans out. There are limited levers for margin improvement from here on. So that is the risk which is there.
You're being kind here, right? You're talking about margin improvement. You're being kind to them.
So in the sense, I would say maybe obviously the levers are not there at all for the improvement. In fact, there is a downside, but that's baked into the estimates. I don't think maybe there will be too much of a disappointment which will come in. So that's where we are seeing with respect to the margins. And there are, I would say, operating leverage delta which is still available, which can support the earnings growth getting into FY25 and FY26.
Got it. I'll talk about NBFCs later, but just a quick follow-up on banks, and which is this, that when one looks at the data, obviously, private banks have had an issue not just in the last 6-9 months, but relative to PSU banks as well. Last 1 year, 3 years, maybe even 5 years if I'm not wrong. As a benchmark index, the PSU banks have outperformed the private banks. So from a risk-reward perspective, is there merit in trying to own an HDFC? I don't know what your top list is, but is there merit in owning an HDFC Bank, Axis, ICICI, Kotak, etc.? Or would you believe that maybe a basket of PSU names or 1 or 2 of those PSU names, whichever you track, if you do, might give a better bang for the buck even now?
So interesting question, and that's what is there in everyone's mind, private versus PSUs. PSUs are generally cyclical. Private would always be more structural. When you look at it, PSUs, why they are doing well, in fact, in terms of the entire corporate asset quality stress that is behind them, they are seeing a lot of benefit on the recovery side, which is helping the overall earnings growth. And that's where when we look at it in terms of the ROA profile coming from the lows, we are definitely seeing an improving ROA profile. Compared to that, if you look at it, private banks, they picked out in terms of the margins, in terms of ROA in Q4 of last year. And since then, we have just been seeing the moderation in the ROA profile compared to the improving profile for PSU banks. And with respect to growth, given that there are constraints on the deposits for the private banks, there are maybe apprehensions with respect to sustaining similar kind of a growth, even though it's higher than the industry average. While PSU banks coming from a low base, they were much lower than the industry average. And given that there are no constraints on the CD ratio for PSU banks, because they were getting deposits at a much better rate compared to their loan growth, there is still a delta which is available to take some kind of a market share from private banks in the interim or in the very near term. So looking at both the aspects in terms of the improvement in the ROA profile, along with growth being slightly better compared to what they have done in the very recent history, there is maybe I would say positive sentiments towards PSU banks. But given where they are trading today in terms of the ROA and ROE profile which they can generate and the valuations which have got re-rated, we still believe like private banks over the next 12 to 18 months should do better compared to that of PSUs. So,
and your top list being?
So we like ICICI, IndusInd and HDFC.
Okay, perfect, great. Thanks. We'll come back on the NBFC's piece as well. But Atul, can I just quickly, before we take the break, invoke a conversation with you on industrials? Because, I mean, if I'm not making a gross error by including a big result boy that came in yesterday as a part of the industrials family, what's happening here? Surendra had a point to make that some of these are very well priced in, but the numbers in select cases just continue to do very well. The order flows look solid. How do you look at the bucket from a Q3 perspective and from what could happen going ahead?
Yeah, so see the Q3, across the board, big or small companies generally had good to very good order inflow growth, okay, and that continues to reflect the strength of capex recovery in India. So I think that trend we can see across different companies, big and small. Obviously within that, some of the more niche MNC names tend to be much more dominant in their space, and as a result, when ordering happens in that space, their order inflows get impacted much more disproportionately. So I think some of that is playing out, and some of it is obviously the scarcity factor that if you have technology and you are dominant in a particular space and your orders are very strong, then stocks can react quite strongly. So I think the way most investors are looking at is that yes, in some pockets valuations are quite punchy, but as long as orders are growing at 20-25% plus and ROCs are high and the cash flows are coming through, these valuations probably can sustain.
Well, one of the, I'm talking about ABB per se, but I mean some of the others as well, or some of the others in the industrial space per se, the order inflow was much higher than what was anticipated. They've improved their return ratios quite dramatically as well. So are these valuations prohibitive for a fresh investment, or do you reckon that as private capex comes in full shape and form, if it does, Surendra might have some thoughts, you might have some thoughts there, but with an assumption that it does, can these only stay elevated in terms of valuations and therefore the stock prices do well because earnings growth will kind of make up for the punchy valuations?
Yeah, so say for example, we don't cover ABB, so we can't comment on that.
Fine.
But like say in MNC industrial space, we cover Cummins India, which had an equally strong revenue and order inflow growth, and we have a buy rating on that one, despite substantial re-rating in P multiple, because it's a question of where you are in the cycle, right? So if market senses that the cycle is peaking out, and then probably these valuations will become prohibitive. But at this point of time, when you can see that you are probably still in the first half of this capex cycle, and with probably a few years of recovery ahead of us, I really doubt that people are kind of going to bother too much about valuations at this point of time. So for example, on Cummins, we have been quite positive, and it has related, and we remain positive.
Yeah, and I think Swatram was very constructive in his con call, as well as the interview that he did recently with us as well. So much more to talk about. I want to talk to you about property. I want to have to get in Saurabh into the conversation and get in Surendra's views on IT as well, but we need to slip into a quick break before all of that. Stay tuned, stay here, gentlemen, with me. Viewers, stay tuned. We'll be right back in just moments from now.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
back with Talking Point in conversation with the City Research Think Tank, and let's involve Saurabh Handa into the conversation as well. Saurabh, clutch of things out there. Surendra mentioned how one of the big surprises of the quarter was energy. Can you talk a bit about whether it surprised you as well relative to the assumptions that you had made, and what within that reportage surprised you, and what's the implication thereof, thereby, for the quarters to come?
Okay, so if you look at the downstream companies, which are the oil marketing companies, I would say all of them have by and large been reporting pretty strong numbers through the year. And there have been consistent earnings upgrades by us as well as the street. So I would say maybe around 6 to 12 months back, in general, people were fairly conservative and negative on the stocks because fiscal 23 was quite weak for them. They were making losses. There were concerns around pricing and government intervention. The whole thing has now flipped.
Right.
So we've seen a massive spate of earnings upgrades, especially in that space. The stocks have obviously reflected that there's been a massive re-rating. But we believe still there is room for the stocks to go up further from here. So we are still positive on a couple of these names, stocks like BPCL, HPCL. We still have buys on them. If you look at fiscal 25 earnings, the outlook for now seems fairly okay. Crude is range bound. It's gone up a bit, close to $80, $85, but our general view is it stays in the 70s, 80s, which is pretty okay for the marketing side of the business for these companies. On refining, our view is positive. We believe refining margins stay at mid to peak cycle levels, at least for this year. So the earnings outlook even for FY25 is fairly all right, and it opens up room even for upside risks. So I would think it makes sense to still remain positively inclined in these names. From a stock market perspective, obviously they've run up a lot in a very short space of time, so it's quite natural to maybe see some profit taking. We wouldn't be surprised, but we would be looking to buy into any dips that happen.
Interesting. There's a couple of your peer sets might have a different view, but it's great to know that how you're thinking about it. What about the non-OMC pack?
Yeah, so in that you can look at maybe the upstream names and say the gas names. So on upstream, ONGC is one stock which on an absolute basis has gone up, but it has relatively, say, underperformed compared to the downstream names. So we are positive there. Now in ONGC, you don't see too many earnings upgrades because the realizations tend to be broadly fixed at $75 oil, 6.5 gas. But in ONGC, it could be at an inflection point as far as its production trajectory is concerned. So ONGC last 10, 12 years, its production has been declining at like a 2% CAGR. That's at the cusp of turning around. And in fact, we might see that this quarter as well. So even though earnings are broadly in line, because production growth could start being positive for ONGC, we remain buyers on that stock. It's still one of the cheaper stocks on a price to book basis. It's still at only 1 times. It should give you 13, 14% ROEs. On the gas side, we have slightly stock specific views. So we are positive on names like GAIL, MGL, IGL. GAIL, again, the stock has done well, but a lot of their segments are now performing pretty well. And on the transmission side, there's been regulatory re-rating, tariffs have moved higher, and volumes are picking up because gas consumption is picking up in India. On trading, which used to be a concern for them in the past, that's been doing fairly okay. On the petrochemical side as well, they've been reporting losses. That seems to be turning around. So, a lot of things are falling into place for a lot of these companies across the value chain. But like in the gas space, we are also slightly cautious on other stocks such as Petronet LNG or Gujarat Gas, where we believe valuations are probably on the higher side.
Okay, well, that's in news, and telecom is in news as well. I'd love to come to you on that, but before that, Surendra, can I bring you in on IT? Because that's the other space that is, well, probably the most confusing because discretionary demand seems not present at all. And yet the stocks have done reasonably okay, maybe with the valuation supported. What's your thesis?
Yeah. So I think, so 2 parts to your question. Firstly, why have the stocks done relatively well?
Relatively well, yeah.
I think it's a combination of valuations in the India context being okay, say at the start of the year, last year. And then sometime towards the end of the year, people started getting more positive because of the Fed change in stance. Okay, and it was also a time when banks, which is the other large part of the index, started to struggle a little bit, right? So I think, so obviously that's important from a flow perspective. So when you put it all together, I think that's the reason why IT stocks have held up relatively better than what most people thought. Now from here on, I think the key is going to be the slope of the recovery. Okay, because I think most people, and at least everybody I speak to in general, the expectation is that FY25 will be better than FY24. But how much better, I think that is the key question. Okay, and there is a big assumption being made on the second half. So people who are positive are kind of building in that there is a fairly sharp recovery, particularly maybe in discretionary spending in the second half of the year. And people who are cautious like me, we really don't see any evidence of that at this point of time. So we are taking a view, and I think there is enough macro uncertainty, right? If you look at some of the recent events in the US also, direction of rates, when the rate cuts will happen, I think there is fair bit of uncertainty. And if you look at uncertainty, it's generally been a negative for people kind of releasing the budgets.
Yeah.
With that backdrop, it's very difficult today to build in a case for a strong second half recovery. So people like me are modeling in more moderate, more gradual kind of a recovery. And when you do that, then valuations look pretty full for the sector. And that is where our cautious view comes. So like in our India strategy, we're still running a underweight on IT services.
Yeah, we stood on the crutch of your note released in December, when I believe you spoke to a clutch of companies and gave out an idea of discretionary demand. And when the stock started rallying, we do a piece called Editor's Cut. And I question that what's changed between what Citi did in December versus now for the stocks to rally the way they did. So interesting to know that the stance is still the same. I wonder if the stance on the other part of BFSI, Kunal, is as similar as banks. There is value in private banks. What about the NBFCs?
So again, NBFCs, we have to look at it with respect to the product segments because I think the dynamics in different product segments are varying. When you look at it, in fact, like say for players, housing finance companies, now they are relatively better positioned given that there has been increase in the risk weights on the unsecured side, plus maybe there has been increase in the risk weights for bank lending to NBFCs, which is not the case for HFCs as such. So they are relatively better positioned at this juncture. Anything to do with the secured lending, they would be relatively better positioned. And maybe some of the diversified players, they have also corrected in terms of the valuation to like the decadal lows, both in terms of price to earnings as well as price to book, while still continuing a similar kind of growth profile as well as return profile. So those names are looking quite attractive given the valuations wherein they are, and what is the outlook getting into FY25 and FY26.
Which would these be, sorry?
So
yeah, we
recently upgraded Bajaj and Chola. So Bajaj at this valuations, it's at the decadal low, I would say. Chola is any which ways being at a relatively higher valuation, but Bajaj is looking again attractive within this space, yeah.
Okay. Viewers, please remember these are indicative of what the Citi team tells their clients. Please do your own research if you're indeed observing the show and trying to follow this. I have 3 more questions. We'll go slightly over on the show, but Atul, property, Pan-India, Southern India, what do you like? Because almost everybody is throwing out some great numbers.
Yeah, so far demand, whatever numbers have come till Q3, demand remains very strong. And especially at the premium end, it is very strong. The mass or so-called affordable is not doing that well. But the premium housing is doing quite well, and we have seen price rises as well. See, our sense is that because there are no signs of weakness immediately, it is difficult to say that weakness will happen very shortly. But at the same time, stock prices have run up quite a bit, and market is extrapolating, in our view, 15-20% kind of growth for next few years, from the developers. So we need to be a little cautious on the valuation front. But as far as underlying business is concerned, there is no reason to complain as of now.
But so is the concern on valuation strong enough for you to turn negative, or are you in a wait and watch or an observe mode?
We have very few buy-rated stocks in the sector. We are cautious. And our contention here is that historically through the cycles, we have seen, the residential developers, kind of struggling with ROEs and cash flows as well. So while say on the capex side, we just discussed that there also the valuations are quite punchy, but if you look at industrial companies, you get pristine balance sheets, very high ROAs, very consistent cash flow. So at least that comfort is there. Here on this side of my coverage, the comfort on these aspects is not there. So we are slightly more cautious here.
Okay, fair point, noted. I don't know how much can you comment on within the space of telecom, because there's only in technically one pure play telecom, or the other one struggling, the third one a mix of a conglomerate. But what did you observe out there? What is interesting?
Okay, so in terms of the telecom operators, we like Bharti Airtel, which is kind of the main player out there, standalone entity. Execution has been very strong. Their premiumization strategy has been working well. They've been delivering on market share gains. And from next year, you should start seeing a decline in capex intensity, which then translates into better free cash flow generation, deleveraging. So Bharti, we would be buyers even at these levels, even though the stock has done well. In an ancillary space, we do like Indus Towers. It's a contrarian buy call. We've highlighted it even in our strategy picks for the year. We had upgraded it last year because we felt the risk reward is quite okay. Now, there are still a few things that need to fall into place, but at current valuations, the stock is still looking fairly attractive to us. Vodafone Idea has started paying down some of its past dues. With Bharti's capex intensity coming down next year, even Indus should come down. So there is a possibility of free cash flow generation and dividends being reinstated. So that's a little bit of a non-consensus tactical call that we have. But overall, amongst the telecom operators, Bharti remains our core buy.
Okay. Before we wrap up, Surendra, 30 seconds. Net, you are more constructive about FY24, FY25 earnings at the end of this season. What is the worrying sign? Quick 30 seconds.
Yeah, sure. So see, our numbers have not really changed that much. Let me put it that way. I spoke about 14% CAGR in earnings. Again, the numbers, if you look at last quarter or the quarter before that, it's not very different. So I think the good thing is that at an elevated level, the earnings momentum is sustaining, and the visibility is there, and you feel more comfortable as time goes by that, okay, we can get to that kind of a number. From a risk perspective, I think there are still certain pockets where, like, for example, if you look at consumption, in general, there are obviously a few outliers, but that still remains quite challenged as a space. And it's a large enough space, right? So I think there are still pockets where you worry about, but in general, from an earnings trajectory perspective, things are looking pretty healthy.
Cross fingers for a lot of that. Gentlemen, thank you so much for being with us on the show today and giving us your thoughts. Appreciate your time.
Thanks.
And viewers, thanks for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
how to decide which is the one for you. First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. I am Agam Vakil and you're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space in Indian equities. A quick look at how things are faring in the markets, and the Nifty is at the moment weak. We have seen a considerable amount of volatility already through the course of the first 1 hour of trade, and well, it does seem like for now 22,000, at least in the near term in today's day of trade, has become, well, a sort of resistance of sorts, because if you can see on your intraday screen here, while we did open up with well, marginal gains, in fact flattish, then we went into the red, and that's when the market starting to recover, hit 22,000, and from there onwards we've seen that downward move. So at the moment it does seem like, at least in the first half, that will be there'll be a little bit of a resistance. But should the Nifty take out 22,000, where you never know where it can in fact go, that will also mean a lot of unwinding of positions being taken earlier in the trade today. And of course, at the moment we are also looking at a significant amount of writing around the 22,000 calls. Yes, so you can imagine that these strikes are changing so quickly as we speak. And that, of course, is your overall open interest distribution picture. But, you know, earlier we've been talking about how we have seen so much writing around the 22,200, 22,300, 22,500 calls even yesterday as well as today. Remember that we also saw a very sharp knock coming on the benchmark in the final hour of trade yesterday, and it does seem like there's been a little bit of a continuation in trend after you know, 15-20 minute period of coming through. That said, let's take a look at how the Bank Nifty is faring as well, and of course we are in a new expiry week as far as the Bank Nifty goes. But the weakness here is there for everyone to see as well. In fact, a little bit of an outperformance, because the Bank Nifty has taken a slight bit of a sharper knock as compared to the Nifty. That's down around 1% right now, and a little bit of an unwinding coming as far as the futures are concerned. Again, not too much to speak for, but can we take a look at the constituents of the Bank Nifty and see where in fact there is you know, a lot more to what's really dragging the indices. So HDFC Bank, once again, you know, looking at the weakness, along with ICICI Bank and State Bank of India, in fact, along with Kotak Mahindra Bank. So some of your relatively larger banks are weighing down on the index, save for something like an Axis Bank, which is trying to counter that weakness. But it's not been enough. At least in today's day of trade, we are looking at that over 400-point drop in the underlying. But on that note, let's get in our experts and see as to what they make of markets. We have Bhavin Mehta of Daulat Capital, as well as Nilesh Jain of Centrum Broking is joining us on the show. Good morning to both of you. Thanks for joining in. Bhavin, I start with you. Your view on the Nifty at the moment. How are you addressing this one, and how are you placing your bets? Okay, I think we have lost Bhavin, so I'll go across to Nilesh for that one. Nilesh, the same question for you. How are you addressing the key benchmark Nifty?
Very good morning, Agam. If you look at the structure now for the day, for the second straight session, we have seen some amount of selling pressure. Yesterday, Nifty on a daily time frame formed a bearish engulfing candlestick formation that itself indicated that there will be a follow-up selling. That is what we are witnessing in today's trading session. Today being a weekly FN expiry for the Nifty, I wouldn't be surprised if we see a sharp pullback from the lower levels. The next major support for the Nifty is placed at 21,800, where continuous put writing can be seen on this weekly as well as in the coming monthly FN expiry data. And 21,800 is likely to act as a major support. 22,000, as you have rightly pointed out, is likely to act as immediate resistance from intraday point of view. If at all Nifty sustains about 22,000, then there will be a short covering. But as of now, it looks like the expiry may span out in the range of 21,900 to 22,000. And also not to forget the volatility index India week, where we have seen some spurt in last few trading session. It is at elevated level. So a cause of concern is definitely advised at 16 level of weeks. We might see some more amount of volatility to continue.
Okay, and fair enough. It's an important point as far as the India VIX is concerned, because above the mark of 16, things can always get a tad rougher with the expectation of increased volatility too. And around the mark of 16, 17, 18, that's where things can be extremely challenging, especially for option writers. But let's get in, Bhavin, into the conversation. Bhavin, morning to you as well. What about you? What's your view on the Nifty?
Yeah, so what we have seen is good amount of outperformance from markets over last couple of trading sessions versus broader market indices. However, today we have reverted back to the mean, which is 20-day exponential moving average. Now the crucial point here will be how market behaves around this 20-day to 50-day EMA. So our broader trend for market continues to remain positive till the time we hold on to 21,508 kind of a level on the downside, which is your 50-day EMA. Only if we break that level, my sense is that we may move into that liquidation phase. If you look at the positioning wise, HNI retail longs on the single stock futures continues to remain close to an all-time high. Add to that, we are looking at a roll course slightly depressed this particular time. So it has come down to close to about 70 odd bips versus what we were looking at historically, close to about 80, 82 kind of a range. So this is something of a concern. Needs to see how we end this particular expiry, but we are keeping clear watch on January high, which is 22,124. We believe that if we are able to surpass this particular level on a weekly closing basis, there could be another leg of an upside for markets. Till that time, watching out on downside at 21,500 levels.
Okay, so both our experts are, should I say, a little bit more inclined towards the downside at the moment. But what about the Bank Nifty? And this is where the weakness has been a little more than the Nifty. Bhavin, back to you. Your view on this one.
Yeah, so Bank Nifty, what we have seen is that there was if you look at a daily chart, clearly there was a gap creation around level of 47,200. The gap down that we saw on back of selling pressure in HDFC Bank. Nifty tried to move above that Bank Nifty tried to move above that particular level, but is consistently over last 3 to 4 trading sessions facing supply around that particular range. Today we have broken down from an intraday channel, and this is indicative of a possible support around level of 46,200. And coincidentally, this also coincides with your 20 and 50-day exponential moving averages. So my sense is that we may retest that level of 46,200 on downside, and from there, there is a high probability that there could be a kind of pullback rally once again towards 47,000. Till the time we don't cross.
Okay, I believe we have an issue with Bhavan's frame. So, Nilesh, I'll come back to you on your view on the Bank Nifty as well. What are the key levels that you're watching for, and what is your view in general as far as this particular index goes?
So Agam, if you look at on 17th of January, there was a big gap down opening. So that is acting as a resistance zone. And we need a decisive breakout above 47,500 for bulls to regain the control. But as of now, the structure is hinting at a further follow-up selling in the coming sessions as well. So now today, it has broken down its 50-day moving average, which is placed at 46,800. So on immediate basis, if Bank Nifty closes below the same, then there will be another round of selling going forward. We might see the Bank Nifty, which will open downside towards 46,300 to 46,000. So as of now, the structure is hinting at further weakness on immediate basis, but it has a very good support near about 45,800 to 46,000. So we might see some pullback from those levels. But as of now, for the day, the structure looks slightly weak and sell on rise should be the strategy.
Okay, so that's your view as far as the benchmarks go. And again, there could be some more weakness before the Bank Nifty sees a little bit of a support at lower levels. At that point, perhaps there could be some amount of a bounce, maybe even leading to some amount of short covering, and that could perhaps determine the course of the index going in. But that said, let's take a look at all the stocks which are buzzing in trade. So I'm going to pick on all those which are looking at an increase in OI. And today we have continued strength in ABB. Now, this one has moved comfortably above the mark of 5,000 rupees per share. And we're seeing further increase as far as your futures positions are concerned towards longs. Then we have Birla Soft, where this one along with Indian Hotels are looking at longs too, and Axis Bank as one of the few banks which are in fact providing some amount of support to the Bank Nifty at the moment. Grasim, on the other hand, is down by as much as 2.3%. And looking at shorts there, of course, there is some positive news around Grasim because under the group company, we are looking at the Birla Group, in fact, launching their paint business. But Grasim really is not looking at that favorably, and currently it's down around 2.3%, 2.4%. What about stocks which are seeing unwinding in today's day of trade? Let's take a look at that as well. So we have unwinding at Ashok Leyland, BPCL, SBI and NTPC, and Metropolis on the other hand looking at short covering of sorts, but the underlying is advanced by less than 0.4%, so I wouldn't exactly call it that. But let's take a look at what our experts are recommending. And Nilesh, coming back to you, stocks on your radar now?
Right, Agam. So I have one buy idea on BEL, Bharat Electric Limited. So if you look at this particular counter, constantly we are witnessing a high top and high bottom formation, and this particular stock has witnessed a good rebound as well. So 0.5% OI addition, and it looks like it is heading towards the fresh record high. So from current level, we expect move to continue towards 200 sort of levels on the upside. A good support can be seen near about 188. So this particular counter can be added at current level and also on declines. So this particular stock looks positive. Apart from apart from that, one stock on a negative side that is on my radar is Hero MotoCorp. We have seen a good double top sort of formation in this particular counter near about 4850, 4900 zone, and we have seen a breakdown from this particular double top as well. So downside is open for 4350 to 4300. Currently it is trading at 4472 in the spot. Stop loss should be placed above today's high, that is somewhere around 4580. So Hero MotoCorp looks weak on the chart. Bharat Electric looks strong on the chart.
So one long, one short. And I believe we have the same for Bhavin as well. One long, one short. Bhavin, can you take us through your calls for the day?
Yeah, so looking at clear outperformance from Indigo over last couple of trading sessions, the stock has been holding nicely above 3000 range. There is consolidation in this particular level around 3100. My sense is that eventually stock is eyeing a move closer to 3300 on upside. On downside, we need to have a stop loss in place at around 3000 level. View continues to remain positive from close to about 2800. The stock has been slowly moving higher, and my sense is that eventually it will move past its all-time high in a very short period of time. On the other hand, I have a short recommendation on SBI card. So if you look at this particular counter since month of June, this name has been consistently witnessing a short development. Even last expiry, we have seen some aggressive short built up in this particular stock. While stock may witness some amount of uptick closer to 740, 745 range, one should look to short this stock for a target price of 710 on the downside first. If that level is broken, my sense is that eventually this is going for 640 to 650 on downside. So that will be a short idea on SBI card.
Okay, well, we leave it at that. On that note, going to take a moment to thank both Nilesh and Bhavin for joining us and taking us through their views on the markets and also giving us a few trading ideas. And well, on that note, we also slip into a short break. But on the other side, we get you the management of Sula Vineyards on the latest updates. Stay tuned and we'll be back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying.
Welcome back, and we now take a look at Sula Vineyards. So what we understand is that the Maharashtra government is set to revive the wine industrial promotion scheme for the next 5 years after the state cabinet approved the proposal. And this, of course, was introduced back in 2009 to promote Maharashtra's wine industry, and WIPS, as it is called, was paused during COVID-19 pandemic, but it is now set to continue. And this naturally means good news for all the vineyards in Maharashtra, in the state. The other advantage, of course, here is that the value-added tax for wineries, which is set at 20%, this will also have a 16% refunded as rebate under WIPS. But to talk to us about this development going forward and what it can mean for wineries in the state, we have Rajiv Samant, CEO of Sula Vineyards, who's joining us on the show. Rajiv, good morning. Thanks for joining in. Naturally good news for all vineyards in the state. Can you tell us a little more about if there are any additions or updates with respect to this promotional scheme?
It's excellent news, Agam. We've been waiting for this for a long time. There was a lot of uncertainty, and it brings a lot of relief and a lot of clarity to all of us. I just want to take a moment to thank the state government for recognizing how important, of outsized importance, the wine industry is in Maharashtra. Remember, it's 100% rural based. So the impact that it has on rural incomes, on farmer incomes, is tremendous. It's outsized compared to its size in terms of total revenues. So yes, the scheme has been continued for a period of 8 years. That is, remember, there were 3 years when it was sort of kept in abeyance, including those and up to March 24. That's 4 years. And then moving forward for another 4 years after March 24. That's the way that it's working right now. So 8 years more. And you know what that means for us, Sula in particular, is about 140 crores of past dues that will now be payable very soon. So it really makes a big difference to us. The money flows into our coffers. We can pay down debt. We can use it for capex. It's a big chunk of money for us.
Right. So Rajiv, if you could talk to us about what would have happened in the absence of the scheme. Now that we have a continuation of the scheme, are there any new additions to this one, any updates here? And what would it mean to the competitive environment as far as vineyards go in this particular state?
See, the absence of the scheme would have at this point been, I would say, almost a disaster, because we have taken some of the monies into our accounts over the last couple of years in the full hope that the scheme was going to be notified, which it has been just yesterday evening, and we are still studying the fine print. So that would have been a big hit, and so that is definitely big relief that this has come. In terms of the scheme going forward, they have put a cap of 20 crore rupees per unit. Now, I want to clarify that per unit does not mean per company. So Sula has 3 units technically under the excise definition at this point. And I would like to stress at this point. So there is a cap for the time being, though, of course, it's early days and this scheme could also morph in different ways moving forward.
All right. And again, what does it mean for the competitive environment? Does that mean that this scheme will perhaps encourage some of the newer players, or perhaps some incumbents which are relatively smaller, to also move into markets they're not exactly present in? And what does that mean for you in terms of competition?
Look, it's a rising tide that lifts all the boats in our industry. So it's great for Sula. It's great for the smaller players. It's great for everyone. Some of the smaller players have been struggling, so it might not make that much difference to some of them. In fact, you know that Sula has always been actively talking to these players. We acquired York Winery just a couple of years ago. That was a great acquisition for us, which has really boosted our wine tourism. So we are also in talks with some of these players to see how we can help out, how we can be of assistance. But all in all, definitely it's a big boon, especially to the smallest players who are really struggling for cash flow. They really depend on this WIPS refund, and it's 3 years that it's hanging fire. So it's really good news for everyone, and it's good news for the industry as a whole, and great news for grape farmers in Maharashtra.
Okay, Rajiv, we'll leave it at that. Thank you so much for giving us that clarity on the latest update that we have from the Maharashtra government. We wish you the best for the future.
Cheers.
Right, and there you have it. That's the management of Sula Vineyards telling us all about what the promotional scheme entails. But on that note, we've run completely out of time on the show. So it's a wrap on the F&O show, but don't go anywhere. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
welcome you watching at the Small and Mid Cap Show. I am Mahima Vajrajani and with me I have Harsh Saita. Well, Harsh, let's take a look at how the markets are panning out right now.
Well, yes, let's quickly pull up the Nifty 50 down around 0.4%, around 0.8%, 0.4% lower as we're speaking. It's below the 22,000 mark, very close to the day's low. Quickly on to some of the movers or stocks which are moving, at least the benchmark. Nothing much on the positives, but look at the negative contributors. Plenty of depth in terms of negative contributors. HDFC Bank, Bharti, ICICI Bank, Titan leading the charge in terms of the negatives. Not able to see Reliance, but let's quickly look at what Reliance is up to. Not much actually, absolutely flat, slight positive bias coming in on that one. But let me also quickly take it to where we are in terms of the mid caps. The Nifty mid cap and small cap definitely doing much better than the benchmark itself. We are seeing flat on the mid cap, but nothing much to complain about given that the depth on the benchmark is quite shallow. Sorry? And look at the advanced decline on the Nifty mid cap. It's pretty much even Steven on the Nifty mid cap in terms of advanced decline. If we can pull up the advanced decline ratio to get more perspective, I think that will clearly signal that the breadth is not as bad in the larger market as it is in on the benchmark itself. In terms of specific names, oh, there you go, quite poor actually on the depth. You're looking at 1,200 declines to 700 advances. Let me quickly take it though to the Nifty mid-cap, the top gainers. Yes Bank, Oberoi Realty, Sun TV are the three top gainers on the Nifty mid-cap 100. Yes Bank is up roughly 4%, so solid gains there. You're also seeing the likes of Delivery, Bank of India, in some bit of pain, down around 3% or thereabouts. Quickly on to the small caps, Graphite seems to be buzzing up nearly 4%. Graphite India, 8.5% higher in trade today. Those are some of the gainers on the small cap. JBM Auto, LG are some of the top losers, 3% plus in terms of the losers that the top losers on the Nifty Mid Cap 100. But with that, it's time to bring focus to the two stocks that we're going to speak to and two managements we're going to speak to on this edition of the Smith Show. Well, the first company, Raymond Realty Company, will develop a gated community in Bandra East worth 2,000 crore was the announcement that came through from Raymond. The stock is up and away, 2.5% higher. This came in yesterday, mind you, and or rather the day before, and therefore was part of yesterday's break. And in terms of revenue, they're expecting around 3,500 to 4,000 crore of annualized revenue over the next 4 to 5 years. Mind you, this is a company on a standalone basis, post the demerger, which had revenue in FY23 of roughly 2,700 crore. Now, to try and give us the larger picture, the larger perspective, we have the CEO of Raymond Realty, Harmohan Sani, with us. It's a pleasure having you on the Small and Mid Cap Show, sir.
Hi, Harsh. Pleasure to be here on the show.
Right, Mr. Sani. Okay, so let me first kickstart, try and understand as to how quickly is the demerger going to happen in terms of timing. I think that's something everyone's looking out for.
So demerger now, as you know, is a foregone conclusion. Now the court convened meetings are happening as we speak during this week. So it should be imminent, whatever time the process takes. Our current estimate is that in the next 2 to 3 months, it should be through. We are expecting listing sometime in June, July. That is what our corporate team has kind of estimated. But then process is process. It could be a few days here or there.
Okay, Mr. Sani. Well, Mahima this side. Firstly, congratulations on the launch of the new Bandra project. Just trying to get a perspective of how this project is going to pan out to be. What are the timelines and what kind of revenues are you expecting out of this?
Hi, Mahima. Thank you for your good wishes. So this project is very close to BKC. And it's going to be the largest gated community in that area as of now, and for the longest period of time. I mean, probably it is the largest in the last 20, 30 years or so. The estimated revenue, as you rightly said, is 2,000 crores plus. the timeline of this project, we will be completing this project, the entire project. It will be done in 2 phases, but the entire project will be done in about 5 years' time, total end to end. We launched it only day before yesterday evening in terms of sales. The construction has begun. This is a special project for us because this is the first time we are moving out of the Thana market and expanding our footprint into MMR, the larger MMR, and Mumbai. So Mumbai is always special because it's also our home city.
Sure. So, sir, 2-3 months to the demerger a foregone conclusion. I want to try and understand where Raymond Limited goes from here, because I'll remove Raymond Consumer for now from our discussion. So where does Raymond Limited go from here? 2,700 odd crore of revenue in terms of both real estate and engineering in FY23. Where does the number sit in FY24, and where do you go from here?
So Raymond Limited, as you know, will comprise of real estate as well as the engineering business. And I look after the real estate business, so I can talk more about that. Of the larger entity, I mean, as far as 23 is concerned, the numbers are already known. You yourself said that. And 24, also we are seeing growth which will be there. So the year is going to be ending soon. So I would request that let's be a little patient. I don't think we have a policy of making forward-looking statements, and but it will be a growth year for us. That is something I can share with you. Our pre-booking numbers are quite healthy. Up to end of Q3, the numbers are already there in the public domain. So that clearly shows that this is a growth year for us for both engineering as well as real estate business.
Yeah, but if I can, okay, so if I can have maybe a 3-year vision, and I won't push you on the engineering side of things, but a 3-year vision from the real estate business side of things, how many projects are you looking to take up? Given the capital that you have, you're going to be debt free, so that's the big positive as well. So maybe in the next 3 years, what's the kind of number that one should look for from the real estate business?
So real estate last year in terms of sales bookings, we did a healthy number. We did about close to 1,600 crores last year. Current year pre-booking will be a very healthy growth upon that. And next year also you would see growth. In terms of number of projects, we have already signed 3 projects, which is outside of Thana. Bandra being one, there is one in Mahim, and there is one in Siam that we have signed. These are all redevelopment projects that we are currently focusing on. That's where the big opportunity is in Mumbai. So the total GDV of the entire real estate, which we have currently signed up, is close to 30,000 crores today, where Thana itself is 25,000 crores. And outside projects, 5,000, hoping that we'll do slightly better than that. That's the current estimate. So that's anyway there. As far as the real estate business is concerned, we have kind of looked at almost a 25% CAGR, which is something, as of now, the numbers are holding good for the last 2 years. And I see the market being very sustainable for the next 3 to 5 years. For sure, all factors are aligned for an upswing to continue in real estate for at least for the next 5 years. So if the industry growth is going to be 16 to 17%, which is what the estimate is by market experts, we hope to do better than that, somewhere in the region of 25% CAGR.
Right, Mr. Sani. So as you mentioned that you're looking forward to a lot of projects and a lot of joint development agreements as well. And since you've mentioned that you've become net debt free, how do you plan to fund these projects going forward?
So, of course, we are net debt free, so we have access to debt. That's one obvious avenue that we have for access to capital. But the big advantage that we have is that we have a solid platform or a launching pad as far as our Thana land is concerned. We have signed 3 more projects on the strength of that itself. The cash flows which will be generated from internal accruals from the Thana project will fulfill a very large part of the need for equity infusion, which we have to do for this. So it will be internal accruals from there. For construction, anyway, funding is available at a much cheaper rate from banks. So we would be accessing that because that will be the prudent thing to do in terms of return on equity to be the maximum. So that's generally the plan. And our focus principally is on residential projects where buyer's equity also plays a role. So the projects get launched and a part of funding also comes from buyer's equity. So these are going to be the 3 avenues which will fund our expansion, internal accruals being the largest part, and then buyer's equity, and then the last is, of course, construction funding from banks.
Right, Mr. Sani, quickly on to profitability. Margins above 20% in the real estate business doable?
Oh, certainly. So it is going to be in the range of, as per our estimates, what we have done going forward. Obviously, as all organizations do, we have a long-range plan in place, and we are expecting margins to be in the region of 22 to 25%, depending on year to year, which project at what point in time kicks off. So it will be range bound within this 22 to 25%.
Okay, Mr. Sani, thank you so much for speaking with us at NDTV Profit and guiding us that your margins from realty business going forward, you expect approximately 22 to 25%. Thank you so much for speaking with us once again. Before we slip to a short break, my colleague Sajit Mangat has come up and he's speaking about Grasim Industries. Let's see what he has to say about it.
Grasim will enter the oligopolistic paint market with the launch of Guerrilla Opus today. The company will be operationalizing 3 units, one in Panipat, where we are standing today, followed by Ludhiana and Cheyar in Tamil Nadu. In total, Grasim will have 6 plants across the country. 3 more units will come up at Mahad in Maharashtra, Kharagpur in West Bengal, and Chamara Rajanagar in Tamil Nadu. The company plans to invest nearly 10,000 odd crores in the paint business to get us market share which will be second to Asian Paints. It has already invested nearly 2,600 crores as of March 2023 and now it will invest another 7,000 odd crores to make sure that it has a pan-India presence and the capacity which will be second to Asian Paints. All the 6 plants will have a minimum capacity of 200 million liters, and it plans to go launch the product in big cities and big towns to begin with. So the current launch would be from the northern India, where it is operationalizing the Ludhiana and the Panipat plant and the Tamil Nadu Cheyar plant. So major launch coming in from North India, and then followed by going down to Town B and Town C's, where it will expand its presence over the next few years. It's going to be a heavy investment from Grasim's point of view because its planned outlay is nearly 10,000 odd crores in the paint business, and this business, especially the decorative paint business, is nearly 67,000 odd crores odd, and nearly 75% of this is handled by the organized players. Grasim is looking to become the second largest paint maker in this business, and it plans to do that over the next 3 to 5 years.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call.
Welcome back. You're watching the Small and Mid Cap Show. Well, Poly Medicure is in focus. The company's reported good set of Q3 numbers where the profits have risen over 30% year on year, and their subsidiary Plan One Health SRL has also guided a growth of approximately 40% by FY25 and expects growth in critical care division and cardiology. The company has also guided the revenue growth of over 20% in FY25. Well, Himanshu Bey, the MD and CEO of Poly Medicure, joins us now. Welcome, Mr. Himanshu.
Thank you.
Right. So, my first question to you is that the domestic revenues have grown by around 18% versus the guidance of 20 to 21%, and your exports have grown by 24%. So, should this mean that you'll be focusing more towards your exports, as I believe they're more margin accretive?
Yeah, I think exports are definitely more margin accretive, but I think domestic, of course, we had some headwinds in our renal business, and probably that took the growth down. But I think we are seeing the growth coming back, and I think we are very bullish now for next couple of years in the renal segment, and hopefully that should see a 40 to 45% growth in next coming couple of years. So with that, the domestic revenue should come back to north of 20% plus in FY25 and 26. Even higher. That's what we would expect.
Sure, Mr. Bed, Harsh also joining in. What exactly, went wrong for the renal business, if we can understand that better, and what gives you the confidence of the growth going forward?
See, when we launched the business in 2020, at that time, the industry was not regulated. Only on 1st October 2023, every medical device sold in the country is now regulated. So there's a huge gap where imports could be freely coming into India without any standardization or regulation. But that has changed effectively 1st October 2023, and that has led to imports being regulated very heavily, and also the standardizations have come through BIS. So that will actually help the industries which are already regulated in India and also where we have standards already laid out. I think we'll come at par, and that will help us to then gain bigger market share. And that's a big change, I would say, in last 3-4 months. And because of that, we are already seeing a big traction, from the domestic market in the renal segment, and that will help us to grow there.
Right. Also, your Plan One Health SRL, which is a subsidiary, had a loss last year versus a profit this year. If you can guide us how you've ramped this up and what do you see? You've already guided a 40% increase by FY25, but if you can just guide us as to how have you ramped up this business?
So Plan One Health is an oncology business, and these are products used for chemotherapy treatments. And during COVID, in 2021 and early 2022, the treatment had dropped in Europe, and this is more Europe-centric business. And of course, we also bring these products to India now. So now a lot of things have changed, and after COVID, I think the hospitals the chemotherapy treatments have started back on track. People are more in hospitals now for those treatments, and the demand is increased. Also, we are getting more registrations done for these products. We were going through a completely change in regulation in Europe, and we have now got all the relevant regulatory approvals in a lot of new markets, and that is driving the growth. And also, a lot of pre-work is being done in India. The synergies which we looked at initially are now kicking in, and that is leading to additional margins in this business and also a rapid growth.
Understood, Mr. Bed. Let me try and understand both revenue as well as margin profile going forward. Revenue growth around 20 to 24% odd guided by you for FY24. How close are we to that? And in terms of FY25 to say FY27, if I take that 3-year band, what's the kind of CAGR expectation on the top line, and will you be able to maintain margins at 26%?
See, I'll be very upfront. So I think FY24, we've already seen 9 months of revenue. We have done growth close to 23%. I think the same momentum should continue for the rest of the quarter, the last quarter. And when we look at for FY25, we've already given a guidance of 20% plus. We think the momentum will continue. I can't guide you because we have not given guidance for 26 and 27. But I think the momentum will continue because you see a lot of aggressive capex happening from the government side also, and also at the private sector in India. And that is leading to, will lead to a future growth in our businesses. And we have also started 2 new businesses, critical care and cardiology. We've just launched very recently, a few days ago, and critical care a few months ago. So all these businesses will start topping up. Also renal, it seems to be more promising now. And so with all these 3 kickers, more aggressive capex coming at private sector and government, and Polymed also doing aggressive capex. We have just started 3 new plants in this financial year. 1 more is supposed to go live in the next few months. And then we have plans to add more capacities in the existing plants with which we have started recently. So all that is very positive for us. And then some growth coming from Europe and US also, in next few years. So all that will help us to, be in that range, what we have guided for FY25, and maybe 26, 27, we stay in the same range.
Right. So since you mentioned plants, can you just guide us to what your capacity utilization at present stands at? And also, since you mentioned exports growing, what is the outlook for exports, let's say for FY25?
See, our exports should grow at around 22 to 23%. This is what we think right now. And we are very hopeful because we've got contracts in place. We have a lot of new businesses which are shaping up right now in Europe and also in the rest of the world, and a lot of other important markets. So hopefully we should stay in that range. Of course, there are some headwinds because of this Red Sea crisis, because of trade issues. But I think this has been now existing for last 3 months. I hope things will kind of stabilize in the next few months, and so we'll see more traction coming there. Of course, some customers are getting impacted because of delay in supply chain, but I think once that is accounted for, I think then we'll have a regular cycle. And of course, India I've already spoken about. It looks to be more promising in coming years.
Right, Mr. Himanshu. Also, my last question to you would be, in terms of dialyzers, you've upgraded them and now 50% of the machine is locally made. So now I think you will be contesting for government contracts. So what is the opportunity growth here and what are the margins that you're expecting out of this government contracts that you'll be getting?
So I think dialysis, Government of India has launched a program to have a dialysis center in every district, and that is going in PPP mode. But I think also state governments are procuring more machines, and also semi-government agencies, and as well as when we look at government centers, they are trying to scale up the facilities. So once we have a more localized machine, we'll be a more preferred supplier, and because currently the preference was given to foreign companies which had CE FDA approvals, and that was a kind of a bottleneck for newer companies to be in new medtech business. So I think once we have more local content, I think we'll be able to circumvent that and go to the market with more aggressive approach. And also definitely once you have more localized content, the margin will definitely improve. I can't tell you right now, but as we scale up, we'll have a better visibility.
Understood. Thank you so much for all of that perspective, Mr. Baid. It's been a pleasure speaking with you. I'm sure viewers got a good insight on a lot of factors that we spoke about. But Polymed down around 1.5% in trade today, and with that we're completely timed out on this edition of the Small and Mid Cap Show. From Mahima, myself and everyone who puts the show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Let's very quickly take you through how the markets are faring right now. And as I look at my screen, you have cuts for the benchmark index of as much as 0.7%, very close to the low point of the day. But the broader markets are off the low point of the day. In fact, you have the mid-cap index that's trading just about flat, down about 0.1% or so. And even more so, that flatness is visible for the broadest index, which is the small cap 250 index. Of course, let's take a look at the advanced decline ratio as well, because that will give you a bit of a perspective on the trend that you're seeing, and that gap between the advances and the declines is narrowing right now. In terms of the sectors that are in focus, you see quite a bit of a crack for the PSU pack, and you have the PSU banking pack as a whole that is the biggest sectoral loser. Nifty Bank also losing a bit of ground today, down over 1% or thereabouts. On the other end of the spectrum, you have media as a pack that's doing not so badly, and you have the IT index, which has seen cuts in the recent past, which is gaining about 0.5% or so. I guess technology seems to be the theme globally after the Nvidia results, and that is being seen in the Asia Pacific region as well. But Smriti, we're talking about the sugar pack in the focus segment today. Why?
Well, first of all the sugar companies, the sugar stocks are down today after a cabinet decision that came last night. So the government has announced an increase in the FRP prices, which is the fair and remunerative price for sugarcane, and the increase is by 25 rupees. So it is now 340 rupees per quintal. So that's 8% higher than the FRP of sugarcane from the current season. Now, sugar recovery rate currently stands at about 10.25%. And we also, this morning, we spoke to the ISMA president. He said that there's an impact of due to the price hike of 8%, there's approximately an impact of 10,000 crore on the industry as well. If you look at some of the sugar stocks, if you can pull that up, you'll see the likes of Shri Renuka sugars are down to 2%, and Mavana sugar, Rana sugar, all down almost close to 3% in trade. So that's pretty much where we stand on the sugar pack. So considering it's a really regulated place. Now let's introduce you to the guests for today. We have Ashish Maheshwari of Arihant Capital Markets and Vaishali Parekh of Prabhudas Leeladhar joining in. Thank you so much to both of you for joining in. And we'll start off with the sugar pack, Ashish. Now, we've seen this increase, and according to ISMA, there's going to be an impact of over 10,000 crore rupees on the industry. How do you see this unfolding for the sugar stocks?
Yes, surely it is negative, and we are also witnessing like in entire sugar sector as such, stocks are not performing also. And again, the reason is this is election year. One thing we must be clear, and government at no point of time will like that sugar prices should go up, because this is item of general consumption. So I think the entire load of this 10,000 crore need to be borne by the sugar companies. So this is slightly negative for sugar sector as such. Only saving grace is the whatever amount they can sell to for ethanol, etc. is positive, but overall negative for sugar sector. Another thing which I can foresee positive, maybe this is going to be applicable for next sugar season, which will start from October. By the time maybe election will be over and verdict will be clear. So maybe government will allow export of sugar, etc. But this slightly long shot, but in short term, surely negative for the sugar companies.
Understood. All right, so that's the view on the sugar space. Any specific recommendations, Ashish, that you have? Any stocks that you like, or do you stay away, considering the cyclicality?
Yeah, because of cyclicality and the uncertainties involved in the sector, I think this is avoidable. Maybe you can go for companies like Praj Industries, which make machineries, etc., for this sector, instead of taking direct bet on sugar companies.
Okay, fair point. All right, let's jump straight into the queries then. And we've got several that have already piled up. I should have mentioned this at the start, by the way. You can watch this on any one of our social media platforms, and you can send the questions to us on chat, or in fact on the WhatsApp number that you can see on the screen right now. And we've got the first question that I'm taking from Shrikant, and he's asking about Devyani International, which he's bought 1,010 shares off at a price of 190, and the shares currently trading at 165.5. He has not specified his holding period, but he's asking whether to hold or to exit. So I'm going to go across to Vaishali on this one. Vaishali, on the charts, how does this one look, and should you hold on at this price?
Well, actually, frankly, this chart is quite weak. I mean, we are just seeing a bounce back. So I guess if he's waiting and we are expecting this bounce to continue, I think 180 should be the trigger point. 180 should be the level that one should watch for. If that level is showing tough resistance, he should be exiting, and or else wait, because it can go towards 200 level. So that is how I think he should plan his trading strategy.
All right. Next up, we're talking about Hero MotoCorp. This one's from Rajesh Maheshwari from Singapore. He bought the stock at an average price of 2,400. So there's a considerable profit there. But the stock has been in a downtrend in the last couple of sessions. In the last 5 sessions, it has lost 7% in trade. Ashish, what would you suggest doing from here on from a longer term perspective? Is it a good time to take some profits off the table?
Yes, I agree. This will be a good time to take some profit off the table, because you are making tons of the money, because the stock low, I remember, was 2,300 and you almost bought around that level. And after touching almost 5,000 rupees, now stock is where we can see some profit taking happening, because a lot of money is shifted to being shifted to Bajaj Auto and Force Motor, etc. in this sector compared to Hero MotoCorp. So Hero MotoCorp is a sale in my view, and you can look at Bajaj Auto on some decline, which will be a better bet.
Got it. All right. We've got Tarun Agrawal, who's writing in from Ranchi, and he's asking about JSW Steel versus Tata Steel. Okay, actually, let me read the whole thing. He's asking about Grasim, the fact that it's entered the paint business, and whether or not to buy Grasim from that perspective. And he's also looking at JSW Steel versus Tata Steel. So I guess this is a fundamental question. And Ashish, we've been debating this in the morning as well. It's not like anybody's expecting Asian Paints to be dethroned as the leader in this segment, but incrementally a challenger in the form of Grasim or a couple of other players in the space. Would you bet on Grasim, and which would you pick between JSW Steel and Tata Steel?
Yeah, as far as Grasim and Asian Paint is concerned, I think only the one issue comes when any new entrant with a lot of money comes in the fray. Companies like Asian Paint, they need to part some of their market share to new entrants. And this is something like worrying investors of Asian Paints. And I think it's positive for Grasim Industries. Though Grasim is down quite a bit today, but in my view, at 2,050 rupees, this will be a good buy. Asian Paint is a avoid at this price point. As far as JSW and Tata Steel is concerned, I think for quite some time, JSW Steel is moving in a very narrow range. And now, after a long time, we have seen in last trading sessions, a stock almost touch 840, 45 levels compared to Tata Steel, which is almost going nowhere for quite some time. So JSW Steel is a better bet. Keep a price target of 800 rupees to enter in the stock. Maybe in next 3 months, you'll get 900 rupees also.
Understood. Next up, we have a question from Satya, and he's talking about if this is a good time to buy NIIT. Now, this is from a longer term perspective, 1 to 2 years. The stock is, if you look at the last year's performance, it's been on a downturn and has lost 60% from last year. Ashish, would you suggest getting into the stock? Is there any upside, and is there a target that you have on the stock?
Well, this is again a laggard stock if you see the price performance wise, because the kind of the computer education, etc., what which was a core of theirs. This is not something that is exciting investors. We have seen a similar performance in AppTech also, where revenues, profit, they are almost at a stagnant level. So NITs avoid, and I think instead of this, you can look at more into frontline IT stock like Birlasoft looks up interesting at this point, as well as Tata Technologies is a good buy.
All right. We've got several short-term queries also coming through, but there's a question from Mohit on IOCL, and he's bought at levels of 77, and his time horizon is of 2 years. This is, of course, part of the oil marketing pack that has done incredibly well in the last a couple of months, particularly. The question is, from a perspective of 2 years, would you keep holding Vaishali? How does it look on the charts?
Oh, yes, actually the trend is very strong. Even when since the perspective is of 2 years, I'm seeing the longer term time period also. I think it should continue to do well. So having said that, but I would also say that yes, if 150 levels break, then that is negating the view. So that is the view for now, that one can buy, even add more with 150 as support, because now the projected targets that we are seeing would be 220 to 230 from here on. So that is how he should be taking the trade.
All right. Next up, we have a question on YouTube, and this one's from Shyam Sundar Gupta. They want to enter into Infosys and Amara Raja Energy. Now, Vaishali, if there are any buying levels that you would suggest for these two stocks?
Sure. So Infosys, as I said, we are quite bullish on this sector on the whole from here on. And I think the accumulation, such stock should be accumulated because this should be held on in your portfolio for a longer period of time. So I would say for now, 1550 to 1600 acts as a prominent support. So he can also do is as a SIP at keep buying at every decline, because once we see strong momentum, because IT index is yet lagging behind, it needs to participate for higher levels. So I think Infosys will go towards 2000, 2100. So 1550 should be the support and accumulate at every dip. That would be my view for Infosys. Now, let's see, Amara Raja, you said, right? So overall, battery stocks are doing very well, and Amara Raja still has a scope of going towards 1000 levels. So I would say yes.
Just want to clarify, sorry, we're talking about Amara Raja Energy and Mobility.
Oh, does it come as, okay, that is 830, that's the same
right.
thing.
Yeah.
Yes.
Okay.
So yes, the view is the projected target comes to 980 to 1000 levels, and this is currently a good support, but 800 acts as a very good support. So start accumulating, keeping this support as mine.
I've just always thought of this counter as Amara Raja batteries, my bad. All right, we have to slip into a very quick break. Ashish as well as Vaishali, do stay with us, and we'll be back, viewers, before you know it. Do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investment.
Welcome back. You're watching Ask Profit, and we are in the midst of the query segment. So if you've got a query for us, you can send it to us on any one of our social media platforms, or in fact on that WhatsApp number on your screen right now. The next question I'm taking is from Firoz Ahmed. He's writing in from Hyderabad and asking about Zydus Life Sciences, which he's purchased at a level of 828. Now, he's got 2,000 shares, and he's asking in the context of the buyback that was announced not too long back. The price for the 600 crore buyback has been fixed at 1,005 rupees per share, which is still a considerable premium to the current market price. The question is, Ashish, based on what you're reading of the fundamentals, should you attempt to subscribe to the buyback?
Yes, I think you can give the shares in the buyback once, because whenever prices are low, you can always buy. But still, I doubt, because the buyback issue is just 600 crores. How many shares will go is a question mark. Otherwise, very performant stock, almost at 52-week high. And you must appreciate 600 crore buyback they are doing on 800 crore quarterly profit company makes. So this is just a small buyback portion, and just again, a blue chip company on any decline should be added in the portfolio.
Next up, we have a question from Sid, and they're talking about Sona BLW. Now, they bought the stock a year ago, and the Q3 numbers were pretty decent. Now, if you want to hold the stock from a mid to longer term perspective, Ashish, are there any specific targets on Sona?
I'd suggest to remain invested here. After a long consolidation phase, the stock has again started performing. Almost 125, 130 crore kind of profitability is being maintained. And the way automobile companies' sales numbers are going up, these companies are bound to do well. Only thing is, these are the companies which moves once or twice in a month. But patience will certainly pay, because company is good. So my target will be around 750 to 800 in this year for Sona BLW.
Let's pull up Hind Petro and see where it currently is trading. And this is a question coming in from Sanjay. He's asking about whether to hold or book profits. The stock is currently trading at 530 or thereabouts. And he has bought at levels of 250. Hindustan Petroleum is the name of the counter. And Vaishali, based on the charts, what would you suggest that he should do?
Say the stock has really run up one way, and little bit of retracement is of course the way the stock moves. So if 500 levels are held on, I don't think there is any threat to the stock. But if 500 levels break, then I think he may book partial profit. So I would say keep a trailing stop loss, or keep 500 as your stop loss.
Okay. Next one is on mobile. This one's from Naman Deora, and he bought the stock at a slightly elevated levels of 110. The stock is currently trading at 84 rupees per share. Now, his time horizon in the stock is 6 months, Vaishali. What would you suggest Naman to do with it?
So the trend is definitely quite weak on mobile. It has been on our radar, and I think the on mobile, on weekly, monthly, all is showing a negative momentum. But I would say that if he's held on for so long, since it's already an oversold zone, wait for a bounce. Keep a stop loss of 80. If 80 levels break, then of course it calls for a lot of weakness. But for now, just hold and exit and bounce. Maybe he can see a bounce up coming up to 100. That would be the level to check.
All right, Vikram Prajapati is writing in from Anand, Gujarat, and he's asking about SR Shipping, not something that we talk about very often, Vaishali, but this is a stock that he's bought at levels of 11 and a significant quantity at that, 10,000 shares. He's wondering what to do at the current market price. Not significant, volumes are 143,000 for what I can see on the screen. Should he exit at this point?
I don't think so. Keep stop loss of 26, because anyways he's in gain. So 26 should be taken as a stop loss, because if the stock moves past 30, currently it is at a resistance level. So if it moves past 30, in all likelihood, this can go to 35, 38 levels. So I think stop loss of 26 and hold for a target of 35.
All right. Next up, we have a question on Natco, and this one's from Babu. They have held on the stock since IPO, Ashish, and...
No. Sorry, my bad. This is Coal India that he's asking. Natco we had taken earlier,
because I remember having taken Babu's question. This is on Coal India, and he's saying, considering the recent correction, can he buy for the medium term? So let's take that across to Ashish. Ashish, what's the view on Coal India?
Yes, I think decent correction has already taken place in the stock, where a lot of brokerages have come out with a report earlier and given 550 to 600 targets also. But I think the lower e-auction prices just spoiled the mood. And overall, there is some profit taking which is happening in PSU has brought the stock down, prices down. But looking at the profitability, there's Coal India is having and the positive outlook for power sector, I don't think so it will go down further. So 430, 435 will be good level to start accumulating Coal India. I think now downside is very limited here.
All right, got it. Next up, we're talking from a very short-term perspective, Vaishali. This is 3 months. The two stocks are JBM Auto and Electra. What kind of buying price, buying levels can you give for these two stocks?
I think JBM Auto currently also it looks very good, but I think keep a level of 1980. So 1980 should be acting as a strong support level. So either he can keep that as a support level and buy at every decline, or keep that as a stop loss. So JBM Auto overall the trend is very strong. So I think better to buy, since it's so run up, buy in trenches. So 1980 acts as a good support.
Okay, a couple of counters here on the fundamentals, and we've got Amol Tulse from Pune who's asking about this, and Patanjali and Life Insurance Corporation of India. Patanjali Foods has been bought at levels of 650 and LIC is bought at 883. Life Insurance Corporation of India, of course, moving past of its issue price and listing price and holding about the 1,000 level. On the fundamentals though, Ashish, would you hold on to these two counters?
Yes, I like to remain invested in both these counters, because the way these companies are growing and the kind of numbers which are coming in Patanjali Food along with LIC. Now a lot of institutional participation is also building up in both these stocks. In LIC, my target will be 1,300 in this year, and along with Patanjali will be around 1,900, because both these sectors are quite promising and these are market leaders in their particular area. So remain invested, or even on correction, add more.
Next up is from Nityanand Deshmukh, and we're talking about NHPC from a 6 to 12 months perspective. Now, is this the right time to buy? There's some weakness in the stock in NHPC. If you look at the last 5 trading sessions also, it's down about 3%. Vaishali, any specific, first of all, would you suggest buying into it at this juncture? And if that's a positive answer, then what are the levels that you should buy into?
I think so. Actually, after this stock making a high of around 114 levels, it has just come to a little bit of a corrective move. But I think the trend is quite okay. So this is the level that he can start buying, because once the stock moves past 114, 115 levels, I think this will give again great returns. So keep a support of 80, and right now we are at 91. Start buying from here on.
Got it. All right. Vaishali, thanks so much for that. And Ashish as well, thank you so much for joining in and for answering all of the questions that you did. A few of you, of course, I have said that I will get your question answered, but unfortunately, as you can see, we're completely out of time. I've pinned a few of those chats and we'll ping you tomorrow when we start the session. But like I said, completely out of time on this particular edition. Lots more coming up over the course of the day. Do stay tuned. This is NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, Profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Cover from day's lows but continue to trade in the red. Sensex is above sectoral indices in a free fall. Most sectors trade in the red, dragged by financials and oil and gas. IT, realty and metals only sectors bucking the trend. Sugar stocks crack in trade. This comes as the government unannounced, sugarcane FRP hike by 25 rupees. SEBI is likely to issue show cause notice to Z in fund diversion case next month. That's an NDTV Profit exclusive. And farmers suspend protest march for 2 days on the back of death of a 23-year-old farmer. Silent sit-in protest to continue. Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. But right at the top, we take a look at the markets which have come off their day's lows. And well, they're still trending in the red at the moment. The Nifty is well below the mark of 22,000. But we haven't seen a very sharp correction as one may have expected. Unwinding has been relatively slower at this point in time as far as the Nifty goes. But you know, in terms of how the constituents are playing out right now, maybe perhaps it is the banks which are weighing on the indices. As you can see, HDFC Bank, SBI and Kotak Mahindra Bank are the ones which are weighing down. And of course, Bharti Airtel is the other one, which is also looking at a decline, which is why we're seeing that weakness on the index. And on the other hand, we are looking at recovery of sorts for ITC, TCS, HCL Tech, and Axis Bank continues to advance in today's trade of trade, bucking the trend with respect to several of your peers coming through. That said, as far as your broader markets go, we are not seeing too much traction there. The mid-cap index is up by 0.3%, about 0.25% in fact, and the small cap index is also up by around 0.3%. So we are seeing a little bit of an outperformance as far as broader markets go, but even in terms of how things are panning out with respect to the broader markets, and do remember that there's been a little bit of a recovery since morning as far as broader markets go. We are seeing some gains in Yes Bank, which is up 3.5%. So another counter from the banking space, which is bucking the trend. Then we have Oberoi Realty, which is also up around 3.5%, and Container Corp up around 2.5%. On the losing end, we keep an eye on something like a Delivery, which is down 2.4%, and Bank of India, along with Indian Bank for that matter. Both these public sector banks are under a tad bit of pressure, down around nearly 2% in trade today. What are we talking about in this show? Well, we are addressing sugar stocks with respect to the latest update from the government on FRPs. Grasim, of course, will be in focus even as it goes ahead and launches its paint sector. And because of that, what kind of implications can it have when it comes to Asian Paints and Berger Paints, considering the kind of investments that the company has done? Brigade Enterprises, Sula Vineyards and Hindustan Zinc. These are a handful of names that we want to address in the show today. I start off with the sugar stocks. And of course, we want to address a whole lot of these names as well as themes with, well, Ashish Kapoor. He is the CEO at Invest Shop. And he's going to join us and perhaps take us through his views on the several stocks and themes that you want to address. But I'm going to go across to Mahima to tell us a little more about what's buzzing as far as sugar is concerned and what's the latest update from the government. Mahima.
Yes, Agam. So as you rightly mentioned, well, sugar stocks are facing some kind of pressure. Now, this is because the government yesterday had announced that it has hiked sugarcane price, sugarcane FRP price, which is fair remunerative price, by 25 rupees to 340 per quintal. Now, this price is around 8% higher than the last price quoted. Now, this is on sugar recovery of 10.25%. However, the government has also mentioned that the minimum price will remain at 315.1 per quintal despite of the whatever recovery the sugar gives. Sugar recovery basically means how much sugar you can recover from sugar cane. Also, the revised FRP will be applicable from 1st of October 24, and Mr. Anurag Thakur has said that this decision will definitely benefit around 5 crore farmers. However, this has impacted sugar companies a bit because sugar cane is the important raw material to produce sugars, and that is why their margins also might get a bit affected. And we also and this is also because that FRP increase has happened due to cost increase, one, and this might impact the sugar industry as a whole for approximately 10,000 crores. Also, because of this, we can expect some kind of increase in the MSP of sugar and ethanol since the raw material prices increase. So let's see how this pans out to be going forward.
Mahima, thank you so much for getting us those updates with respect to the latest on prices of sugar. Ashish, if you can come in on the sugar sector in general, a lot of ups and downs, also a lot in terms of volatility with respect to sugar prices. And while even sugar does have sugar prices do follow a cycle with respect to demand supply, yet there is a lot of government intervention. How are you placed on this entire sector, whether or not you like it or no, if there is a preference, a handful of names perhaps? Okay, I believe that Ashish, where we have a little bit of a glitch here. So, well, we'll come back to Ashish, of course. But, as Mahima was mentioning, with a price of around 315 rupees per quintal as a minimum price for sugarcane, the recovery standing at around 9.5%. Well, it does make things very challenging for a lot of these companies, and of course the recovery is standing at around 10.7% as well. But let's move on and talk about Hindustan Zinc as well. The government approval for Hindustan Zinc's demerger to come by April. Well, that's something that we are also keeping an eye on. Let's take a look at how the stock is doing. Of course, it's currently flat at the moment, and we aren't seeing as much traction there. But when it comes to the demerger, as far as April is concerned, we have an NDTV Profit exclusive where my colleague Sajit Mangat has spoken to the company's chairperson Priya Agarwal Heber and talked about the company's capacity growth outlook, and this is what they had to say. Listen in.
We're looking at a demerger at Vedanta, and the reason for this demerger is purely taking our shareholders' interest into account. We want to make sure that each and every entity, and we have entities that are unmatched in the country. These entities, are age-old, are entities that one cannot easily replicate. Whether it's zinc, silver, whether it's copper, whether it's aluminium, whether it's we're going into the technology sector in terms of display glass. And semiconductor, these are all industries that are, very special, and we want to make them pure play for the, if investors want to invest in just silver or just zinc or just technology, they have the choice to do that, and that really will bring these entities to their maximum potential. We're getting the best professionals to run each of these, ones who are experienced, ones who know and understand these entities and these industries, in depth, and we want to make sure that we maximize our potential and each of these entities really grow to where they deserve to be.
So you initially it was decided or indicated to us that Hindustan Zinc will demerge into three entities: zinc and lead, silver, and then a renewable recyclable business which is there. Right. Now it seems that only two would be happening, and this recyclable is still a maturing business, and we will keep it with you.
Right. So currently we're looking at zinc and silver, and recycling will be a subsidy, which we will eventually, recycling really is something that we want to focus on. We want to make it much bigger. We want to be one of the biggest recycling companies of the world because it really is important for our future, for sustainability. And as we grow, we will, possibly create a third entity in the future. But right now, we're just at the initial stages of it.
Of course, we get you the full conversation at 12:30 today, where of course Sajit has spoken to Priya Agarwal Heber around the company, the government plans around it, as well as divestment. A lot to talk about with respect to this particular company, and of course we'll be keeping an eye on that one. But let's go across to Ashish. Ashish, good afternoon. Firstly, let me take your views on the sugar sector. How are you approaching this one? If there is an approach at all, would you avoid, or do you think there's some opportunity here? Ashish, I believe you're on mute. If you could only unmute yourself, please.
Sorry. Yeah, okay. Can you hear me now?
Yes.
Yeah, okay. Okay, so what I'm saying is that the story is definitely on, because I mean we all know about the ethanol growth story going forward. So what is an issue with sugar stocks, and that has always been, is that it is a sector prone to political interference because it concerns farmers and it concerns agriculture. So that risk factor has always been there. In fact, according to me, I think with this factor getting played out now, the sugar stocks actually look quite good because they have kind of been sideways for a fairly long bit of time. And with this news coming in, I think you can more or less assume that the worst is kind of getting factored in the price. And this is nothing new. I think there have always been issues always with the price procurement and other details. I think from here, in fact, if you look at it, in my opinion, Balrampur Chini, Triveni Engineering, these kind of stocks look very good. If someone doesn't have them, you can look at buying opportunity on the downside. I think on the whole, sugar will remain a very precious commodity because of also the ethanol, angle, and the fact that the ethanol usage is going to keep increasing over the period of time. So definitely look at buying opportunities on the downside.
Okay, Ashish, stay with us. We slip into a short break, but on the other side, we get you a lot more in terms of the stocks we want to address. Stay tuned, and we'll be back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Welcome back. Well, we were tracking Grasim today, where my colleague Sajid Mangat brings us details about Birla Opus. Sajid, what does this entry of Grasim in the paint industry mean for the space?
Grasim will enter the oligopolistic paint market with the launch of Birla Opus today. The company will be operationalizing 3 units, one in Panipat, where we are standing today, followed by Ludhiana and Cheyyar in Tamil Nadu. In total, Grasim will have 6 plants across the country. 3 more units will come up at Mahad in Maharashtra, Kharagpur in West Bengal, and Chamara Rajanagar in Tamil Nadu. The company plans to invest nearly 10,000 odd crores in the paint business to get a market share which will be second to Asian Paints. It has already invested nearly 2,600 crores as of March 2023, and now it will invest another 7,000 odd crores to make sure that it has a pan-India presence and the capacity which will be second to Asian Paints. All the 6 plants will have a minimum capacity of 200 million liters, and it plans to go launch the product in big cities and big towns to begin with. So the current launch would be from the northern India, where it is operationalizing the Ludhiana and the Panipat plant and the Tamil Nadu Cheyyar plant. So major launch coming in from North India, and then followed by going down to Town B and Town C's, where it will expand its presence over the next few years. It's going to be a heavy investment from Grasim's point of view, because its planned outlay is nearly 10,000 odd crores in the paint business, and this business, especially the decorative paint business, is nearly 67,000 odd crores odd, and nearly 75% of this is handled by the organized players. Grasim is looking to become the second largest paint maker in this business, and it plans to do that over the next 3 to 5 years.
Right, those are the latest updates from Grasim's latest venture, and of course the brand name you have it is Birla Opus Paints. Ashish, can you come in on this particular move from Grasim's point of view? Grasim has tried out, of course it's a diversified company and it has its hands into many businesses. This latest venture, what do you think it can do for the company?
Well, I think overall Grasim actually has not been doing quite well. In fact, their net profits are under pressure over the last few quarters, and the cash generation from the core business, of cement and other industries is actually quite poor. In fact, Grasim is otherwise a concern as far as investment is concerned, and I don't think this is going to immediately make any difference. It's a very, like you rightly said, it's a very big company with a lot of interest in various industries, and I don't see any major pickup in their paint volume moment they enter. I think it will obviously take time. The market has a lot of players, including a lot of very well-entrenched organized players, and a lot of newcomers also. So it's not going to be such an easy cakewalk, and I don't see any difference that's going to make any significant difference that's going to make in the near or even the intermediate term on Grasim's fortune. So to me, it remains an avoid stock. I think there are many better ideas, and I don't see any difference because of this move in the Grasim's fortunes.
Yeah, sure. And, some well-made points there as well. Because of, this contribution, we don't really have a significantly long-term view on how things may, in fact, pan out in a sector which already is competing very intensively, because if you leave out the leader, Asian Paints, then of course you have Berger Paints and Kanza Narolac, and all these companies are also giants in their own way. That said, Ashish, if you can come in on the other paint companies as well. Now, of course, there's always been a case that Berger Paints and Asian Paints have always remained expensive, but How are you seeing their latest performances? And with respect to that, keeping that in mind, how are you placed as far as some of these stocks are concerned, even at these levels from a long-term standpoint?
Well, Asian Paints I quite like. I think it has underperformed for quite some time now, which is very uncharacteristic of the stock. And obviously, I think the market has concerns with JSW, Indigo, now Grasim. So many large players entering the market. Competition is increasing. And of course, the stock is also very richly valued. But to the best of my understanding, and where I have even discussed with some of the industry players, Asian Paints has a very unique, very well crafted, very deeply entrenched business model. I don't see anything really happening to their business model despite all these large players entering. It's a very well managed company, and I'm sure it will be able to overcome these challenges in the very near future. So Asian Paints, according to me, is a great large cap idea to buy on the declines now. It has also underperformed like some other large caps. It's not for a change. It's not so expensive also the way it has been over the last several years, and also not overowned anymore. So great opportunity. Maybe you can stagger your buying, but Asian Paints, according to me, is a buy on declines. Regarding Berger and other companies, I would say avoid, because this competition is likely to impact Berger and Nerolac and other players more than Asian Paints. So I would avoid the other players. I would only look at buying into Asian Paints.
Okay, sound advice coming in. Of course, as far as the paint sector is concerned, and of course, we're likely to see big changes considering that, well, Opus Paints, that is Grasim, is already looking to be the number 2 player. But, you know, with that, let's head across to Birla Opus Grasim Paints business launch event.
About a decade. The Aditya Birla Group's deep insight into the building materials ecosystem, honed over the years, offers us a unique vantage point. Our journey into the paints industry, therefore, is in many ways a strategic extension, connecting the dots from the foundation to the facade of homes across the nation. Yet the canvas is much broader. Despite a century-old presence, India's per capita paint consumption stands at a mere 3.5 kilograms. This contrasts starkly with the global average of about 10 kilograms and dwarfs against the 25 kilograms consumption per capita in developed economies. For a country like ours at the forefront of economic acceleration, India ranks in the bottom 10% of paint consumption. And this to me represents a galactic opportunity. With rising per capita income, a young population, a booming real estate sector, and shorter repainting cycles, the potential for growth in paint consumption is obviously immense. The path forward demands a commitment to long-term investment and a vision to redefine the industry with consumer-centric technologies and practices. Over the last decade, we have all witnessed the dramatic transformation of the Indian economy. In sector after sector, competition has spurred incumbent players to significantly improve the quality of their services and in turn upgrade the lives of every Indian. And it is with this spirit of transformative impact that the Aditya Birla Group steps into the paint sector. To put our launch in a global context, no paint company globally has ever launched in one shot. Factories, operations, products, and services at the scale that we are about to undertake. With an investment of more than 10,000 crores, we are building grounds up 6 state-of-the-art plants across India, and this is 40% of the total existing industry capacity built over the several decades. At 1,332 million liters per annum, our capacity in the very first year of operation will be greater than the combined current capacity of the second, third, and fourth largest players in the industry. Despite the option to scale up gradually, Birla Opus chose to establish aggressively pan-India operations from the very outset. We are also prepared to increase our capacity by nearly 500 million litres per annum at our existing locations in the next phase, that too at a significant lower incremental capital cost. Our manufacturing facilities span the breadth of the nation, strategically located for optimal reach and efficiency. 2 in North India, Panipat and Ludhiana, 2 in South India, Cheyar near Chennai and Chamarajnagar near Mysore, 1 in West India, Mahad near Pune, and the final one in the east at Kharagpur in West Bengal. Today, I am pleased to dedicate to the nation 3 of our plants in Panipat, Ludhiana, and Cheyar.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit Exclusive. My guest today is the chairperson of India's largest and world's second largest integrated zinc and silver manufacturer, Priya Agarwal Heber. She is the chairperson of Hindustan Zinc. Priya, thank you very much for joining us on NDTV Profit. We are at the SK Mines. It's one of the most mechanized and digitized mine in the country. Take us through how big is this mining operation here?
Firstly, thank you, Sajid, for having me. It's really, really wonderful that you've come to visit us. Welcome to SK.
Thank you.
So a little bit about SK, a little bit of Hindustan Zinc history. 2,000 years ago, zinc was first discovered in India at our Zawar mines, and we still till today, if you go there, you'll see the first ever zinc discovered, placed there. It's such a beautiful historic mine. 18 years ago, SK mine was, was given to Hindustan Zinc. At that time, it was really seen as the one mine that can provide a lot more silver concentrate for the country. And today it really is, today we're the world's 5th largest silver provider production and soon to be 3rd largest.
And how is its mining operation evolved, over the last 18 years? Because technologies have changed, people have changed. So what is the kind of development that happened with respect to mining? Because when you took it over, for many years it wasn't being explored much.
So it's an absolutely amazing story. Today, like you said, we're the 2nd largest integrated zinc producer in the world, 5th largest silver producer in the world. We have a roadmap, and we truly believe we can be the largest. India has all the resources, required to really be, create that kind of that Atmanirbharta that we talk about. Talking about the operations, when we go down there, you'll realize that mining is no more at all as to what we used to think it used to be. Today, it's with the kind of technology, the kind of innovation that we've had, and we are very proud that Hindustan Zinc is at the front of this. Today we've been rated #1 globally in the S&P Global Index for Sustainability and Innovation. We're really, really, proud of the kind of innovation that we have. Today, we can almost compare it to, medical. We can compare it to an open heart surgery. Back in the day, it used to be, an open heart surgery. Today, it's done robotically. So in a similar fashion, today when we mine, it's minimally invasive and it's completely regenerative. We have mines that we have regenerated, and today they are biodiversity havens, even more than they used to be before. So as long as we do it responsibly and well, mining can be a green initiative, and it can even, with the right technology use, we can go on to make it even greener than it was before.
It is one of the most mechanized mine globally, also top 5.
Absolutely.
It comes under top 5 if I'm not wrong. How do you bring in more mechanization and digitization in this mine? Because mining operation per se is more manpower heavy. So how have you transitioned from a manpower centric or labor centric to a capital centric?
So today, almost all of our operations is done from the office. Most of our vehicles are autonomous. They can fully be run in the office. It's wonderful because the kind of number of people that used to be underground several years ago, today it's 50, 60, 70% less, and everything done underground, when we go, we'll see is done in a way where technology is put at the forefront. There is no such thing as hard manual labor anymore. Everything is done with machines. Everything is done with the top possible safety mechanisms. In fact, what we've done also to progress this further we have an initiative called Spark, Vedanta Spark. And with that initiative, we involve around 100 startups every year to come underground, to come to our mines and create even more and new innovation. We give them, verticals such as sustainability, efficiency, and we see what they can do best with that in terms of innovation. And the kind of innovation that these young startups have come with is phenomenal. Today, safety is no problem, because the kind of technology that one of the startup Safety AI gave us, everything is controlled by cameras, everything is controlled with high-tech equipment. If anything even close to unsafe is detected by the camera, they're alerted immediately. So it's the way mining has evolved today is astonishing, and it's absolutely amazing. And we're proud that Hindustan Zinc is really leading the way here.
Tell us more about this mine with respect to the capacity it has, and within your portfolio, how big is this, and how the mining capacity has gone up year on year?
It's amazing that just last year, Hindustan Zinc crossed 1 million tons of metal. And SK is responsible for 25% of that, approximately. And, we have a goal of reaching 1.2 very soon, and soon after that, 1.5 million tons. So really, really, we have a very, very ambitious growth trajectory here. And honestly, it's the need of the hour. India being, the fastest growing economy, the way the infrastructure is growing, the way the country is growing, the demand for zinc is only getting higher and higher. So we're very proud that domestically we're able to provide a lot of that.
Let's want to walk in to the mines, and
Sure.
then we can do the next round there.
Okay.
Come. So Priya, we are inside the mine. It's more of a silver concentrated mine, right?
Right, zinc and silver, correct.
And what component is more coming out from these mines? Is it zinc or is it silver?
So it's predominantly a zinc mine with a lot of silver concentrate as well. So, it also depends upon us and how we want to use the ore. Sometimes we want to increase a number of silver content, we can do that as well. But predominantly it's a zinc and also silver ore that comes out of here.
Can you take us through the mechanization which is happening in this mine? Because it's one of the most mechanized and digitized mines
Right.
for you.
So like I said earlier, we are really ahead of the curve globally in terms of the kind of innovation and technology that we're using. When we walk ahead, you will see, for example, we have a machine called Solo, which is a fully autonomous machine, which is the drilling machine. And there is nobody manually handling it on ground. The individual handling it is sitting in the office and handling it. It's state of the art, and that is what we're trying to do. Get as many people as we can out of the mine. They're working from the office. The vehicles are autonomous. Everything is getting electrified. We're going towards an absolute green future. We want to make sure everything that we do is with our ethos and focus on zero harm, zero waste, zero discharge. We want to be certified, and we're proud of the fact that we're going towards a fully green future. Like I said earlier, we've already been rated #1 in the world in this area, and lots to go. There's new innovation coming out every day.
What about the net zero carbon target that you have for Hindustan Zinc, and as a whole, the group also as well?
As a group, we have committed to net zero before 2050, and Hindustan Zinc aims to reach there much before. In fact, we have tied up with Serentica for 450 megawatts of renewable power, which will take care of 50% of our energy, of our power needs. So by June 2025, next year, we'll already have reduced our carbon emissions by 50%, and this is already a huge step. And we are sure that very soon after that, we will be completely decarbonized.
Just to understand that currently you use your power from thermal coal.
Right.
And that would be replaced
by renewable power. Correct.
And once that happens, you're bringing down your carbon footprint and also making the operations green.
Green, absolutely. So, and by June 2025, we look at bringing it down by 50%.
And that will also have a synergistic benefit with respect to cost of production as well.
Absolutely, because when you have renewable power and when you have consistent renewable power, that will bring our costs down. More than bringing the cost down considerably, it will make it consistent. So currently, how the prices of thermal power and power changes and fluxes up and down, which which causes deviation in our output. The good thing about renewable power is that it will be consistent. If it's $5, it will always be $5.
I know this is a solo machine which you were talking about, right?
This is a solo machine, one of a kind.
It's an autonomous mining machine.
Yes, the person handling it is sitting in the office right now. There is no one physically there handling this at this time.
And is that the thing across all mines, or you have? It's a gradual process of mechanization.
This is a gradual process that we will do across all our mines. We've already implemented this in most of our mines, and this will become something that we do across each and every one of them.
Give me a sense of your businesses, right? I mean, zinc, silver are the main businesses for you. You said that this mine is basically something which has more high concentration of silver.
Right.
Your entire silver production, does it come from this mine?
70% of it comes from this mine, 30% from the other mines, but this really is the largest, like I said, and this is the reason why this mine was so special when we got it 18 years ago, because of the high concentration of silver.
You're now looking at a demerger of Hindustan Zinc.
Right.
How will that work, and why are you looking at a demerger at this point in time?
We're looking at a demerger at Vedanta, and the reason for this demerger is purely taking our shareholders' interest into account. We want to make sure that each and every entity, and we have entities that are unmatched in the country. These entities, are age-old, are entities that one cannot easily replicate. Whether it's zinc, silver, whether it's copper, whether it's aluminium, whether it's we're going into the technology sector in terms of display glass. And semiconductor, these are all industries that are, very special, and we want to make them pure play for the, if investors want to invest in just silver or just zinc or just technology, they have the choice to do that, and that really will bring these entities to their maximum potential. We're getting the best professionals to run each of these, ones who are experienced, ones who know and understand these entities and these industries, in depth, and we want to make sure that we maximize our potential, and each of these entities really grow to where they deserve to be.
So you initially it was decided or indicated to us that Hindustan Zinc will demerge into 3 entities: zinc and lead, silver, and then a renewable recyclable business which is there, right? Now it seems that only 2 would be happening, and this recyclable is still a maturing business, and we will keep it with you.
Right. So currently we're looking at zinc and silver, and recycling will be a subsidy, which we will eventually, recycling really is something that we want to focus on. We want to make it much bigger. We want to be one of the biggest recycling companies of the world, because it really is important for our future, for sustainability. And as we grow, we will, possibly create a 3rd entity in the future. But right now, we're just at the initial stages of it.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Give me also some indication of how the gender demographic has also changed in mining.
Yeah.
It's supposed to be a man industry.
Right.
Now you have women coming up.
Yeah.
You are chairing that company. So how has it changed?
This is a topic very, very close to my heart. There is absolutely nothing a woman cannot do. And this is something that we truly believe. In 2019, women were legalized to come underground, and Hindustan Zinc was the first company to get women underground. Today, we have over 500 women working. Close to 200 of them are women engineers, and we want to go towards mines that are fully led by women. We want women-led mines, and these are women who are running forklifts. They are doing things that one could not imagine a woman could do back in the day, but today they're doing everything. They're achieving. They're breaking their own mental barrier and doing work that they or their family once could not imagine. It's absolutely phenomenal. In fact, the first rescue team of India, all women, was produced at Hindustan Zinc, and we want to make sure that this trend continues. We want to we have a goal of 30% women in the business by 2030. We're already close to 20%, and I'm sure by 2030 we'll cross that number.
So you spoke about barriers which you looked at when you entered this entire thing in 2019, and when the entire mining was opened up to women. How did you manage to overcome those barriers?
So it's wonderful. When I first entered the boardroom, when I became director, there were only men. I was the only woman there, and over time we sensed, as a company, that this needs to change. If we really want to progress, if we want that kind of innovation that we're thinking of, the kind of ethos that we're going towards, we need diversity not only in the boardroom, across our operations. And that's when we decided that we want to start with a goal of 30% women underground, and not only women. We've gone beyond that. We're talking about policy for LGBTQ. We've created a policy where I was 2 years ago. I was here meeting some of our transgender employees, and I was asking them, what is it that you would like us to include in the policies. So they actually recommended that one of the things that is very, very important to us is our gender transformation surgery. And so we decided that day that we're going to include a policy where we will spend 200,000, 2 lakh rupees towards their surgery and give them 1 month of recovery time during that. So we're really breaking. We're not looking at diversity and as just women. We're looking at far beyond that, whether it's women, whether it's LGBTQ, whether it's different cultures, different levels of thinking, disabilities. We want to involve. We want to make sure we truly are inclusive, and we're really taking inclusivity, and we're ahead of the curve in this area.
So hiring is one thing,
right?
how do you sustain that with the remuneration that given to women? Breaking the glass ceiling and giving them parity with the men who are working in an industry which is male dominated.
So when we're talking about these facts, first and foremost, the vision is clear that it does not matter. What we want to head towards is that it does not matter if you are a man, if you are a woman, or if you come from any spectrum of diversity. If you have the capability to be here, you will be here. You are judged purely by your capability, your passion, and whether it's remuneration or anything of that sort, it's done equally. It's done according to your passion, your determination, your qualification, and your structure within the organization.
And how does the training happen? Is it along with them, or is it specialized training that you undertake for women participating in mining industry? Because it's going to transform. It's a transformation that is happening in the mining industry, not just from mechanization and digitalization, but also the workforce which is coming into play. More educated in that way, so you're getting more engineers coming into it. But going down the lane where unskilled workers are there, how do you get more women there? So far, it's not not legal. But at some point in time, if women are coming underground for mining on an executive role, they can go for unskilled as well, right?
Absolutely. I'll repeat myself again. That in fact, I'll give you a story. There's a woman who's leading our security practices here at Hindustan Zinc. And last year, she told me that she only had 2 dreams in the world, in her life. She's part of the LGBTQ community. She said she wants to adopt a baby girl and she wants to get her mother a house. And just a few months ago, she achieved both. She got her mother a house and she adopted a baby girl. So when you're talking about differentiation and when you're talking about, all of that, it's all, India is changing. We're an aspirational, young community of people. This is a woman from a rural part of Rajasthan, and this is the way she's thinking. She's thinking, in ways that one could not imagine many years ago, and is being fully supported by her family for it. So when it comes to training, when it comes to everything is done in a sense where we do not differentiate women, we do not differentiate men. Everything is done together. Everyone is given the same level of training, and no one enters a mine unless we believe that they are fully skilled and equipped to do so. It does not matter what gender or what part of diversity spectrum they come from.
Being a mining company, how do you manage the local environment? Because when we talk of mining, the biggest impact that happens is to environment. Now, in your case, it's underground mining which is there, but it still has a ramification, not now, maybe over a period of time. How do you ensure that there is sustainability, there is no impact on the environment?
So, in fact, Hindustan Zinc takes care of Vedanta as a whole. I'll talk about close to 50 million people are looked after and taken care of and directly impacted positively by our social impact exercises. Since Hindustan Zinc, has been existing, our communities are flourishing. There is no, our communities, whether it's women and children, whether it's women skilling, whether it's education and healthcare and nutrition for children, whether it's skilling individuals to get jobs not only in Hindustan Zinc but beyond. We're taking care of our communities, much beyond CSR. They are our family, they are our responsibility, and we want to make sure that we are taking care of them just with that space in mind.
Is there specific projects that you have which are pet to you, and how in this space?
Under Anil Agarwal Foundation, we have 5 verticals. 1 being for women and children, 2 being healthcare, 3 being animal welfare, 4 being skilling, and 5 being sports. These are all areas that are very, very close to our heart and areas that are very, very important for our communities and beyond.
So within the Vedanta group, you have set a target of 30% women workforce. How do you go about that? Do you get enough skilled women workforce available, or you set up training programs for them?
Absolutely, we get the women that we want. In terms of engineers, we already have close to 200 women engineers. So in terms of skill, there is enough and more women out there. Of course, in terms of specific skilling when it comes to the mining operations. Yes, we do have training, but that training is, there regardless of man and woman, because that training is required for any engineer that comes into our, into our organization. So I wouldn't say there's anything special or unique for women. This is done for men and women are, now participating much more than they used to before.
And when you meet them, what is the change that you see yourself? Not only women working, but their peers when they're working with them. Is there a drastic change in the way they are working?
Absolutely, and from the beginning, it's very important for any organization to ensure the policies are in place where there is no and absolutely no discrimination. We are a zero discrimination tolerant organization. So you will, the way, and as I said earlier, so what matters really is your passion and determination to be here, and that's what really matters, and that's how each and every individual is. If there are strict policies against, especially, for example, when I was talking about getting transgender individuals, it's very, very important to ensure that there is zero discrimination against them. And it's absolutely wonderful how Hindustan Zinc as a unit, as a family, follows these, and you will never ever find any such discrimination over here.
You have a
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Understanding amounting to 5 lakh crore rupees. Out of these, 53 projects worth more than 90,000 crore rupees of investment are ready for the groundbreaking ceremony or GBC 4.0.
उत्तर प्रदेश व्यापक संभावनाओं वाला प्रदेश है। इन संभावनाओं के माध्यम से हम उत्तर प्रदेश के अंदर फिर देश और दुनिया को अपनी ओर आकर्षित कर सकते हैं।
The double engine government in UP under CM Yogi is preparing for employment generation through artificial intelligence, deep machine learning, Internet of Things and data analytics for more than 81,000 people. These IT sector projects are coming up in Noida, Greater Noida, Mathura, Ghaziabad and Agra.
Benchmark benchmark indices recover from day's low but continue to trade in red. Sensex above 72,300 while Nifty tests 22,000 mark. Sugar stocks crack in trade. This comes as the government announced sugarcane FRP hike by 25 rupees. And average salary is projected to increase by 9.5% in 2024 as against 9.7% in 2023. NBFC and engineering sector to see the highest increase. Farmers suspend protest march for 2 days on the back of the death of a 23-year-old farmer. Silent sit-in protest to continue. Hello and welcome. You're watching Market IQ and I'm Smriti Chaudhary. Let's quickly see where the markets are currently at. The indices are trading with cuts of about 0.5%. It's a weak day for the benchmark indices at least. However, the broader markets are doing better than the benchmarks. If you look at the Nifty mid-cap index, that's up about 0.2%, while the Nifty small cap is also up about 0.2% as well. Among sectors, there's some weakness in the PSU bank sector today. The Nifty bank is down over 1%, while there's positivity in the Nifty media sector that's up about 0.7% as we speak. This comes on the back of recovery in Z shares. There's Nifty metal about 0.5% up, Nifty IT also 0.5% up. Let's also look at some key contributors among the Nifty 50. We have the likes of Eicher Motors, HCL Tech and Hindalco, and even ITC above 1% in trade. There's Coal India also seeing an uptick and is up 1% in trade as well. On the loser side of it, we have IndusInd Bank that's down over 3%. Then there's BPCL down about 2.5%, Grasim down 2%, Titan down 2% as well. Let's also look at some of the movers in the mid-cap index and see where they are currently at. Now, for the broader markets, it's definitely a better day than the benchmark indices. But among the mid-cap index, we have, among gainers, we have the likes of Oil India, that's up 3% in trade, followed by Oberoi Realty, that's also up 3% in trade. Indian Bank doing well as well. Then there's among laggards, we have Bank of India that's down 2.5%. There's Delivery down 2% in trade as well. There's Tube Investment also down close to 2% in trade. So that's pretty much where we're at in terms of markets. Let's also see the breadth of the market and where we currently stand. So we have 15 on the Nifty, we have 15 advances while 35 are declining. So that's fairly where the markets are currently trading at. Now, before we move on to more stock-specific action, my colleague Tamanna Inamdar, who is in conversation with Rupang Chaudhary, he's the partner Talent Solutions India at Aon on the salary survey in 2024. Over to you, Tamanna.
Thank you. What is the kind of average salary rise you are expected to get or companies are expected to give this year? So salary surveys usually are put out in the beginning of the calendar year. The Aon India survey is quite well watched out for. And according to this, you're going to see an average of 9.5% increase in salary in 2024. Now, remember, this is still a slight drop from what the actual increases were in 2023 at 9.7%. What is the breakup of this? Which are the sectors which are likely to pay better? To speak more on that, I'm joined now by Rupang. Rupang Chaudhary is partner Talent Solutions India Aon. Rupang, great to have you here on NDTV Profit. Let's begin by understanding why we are seeing this slight drop in the average salary compared to 2023 and which sectors are going to actually reduce their average salaries.
Great. Thank you so much for having me here.
Yes, you're right. The number has dipped a little from last year, but if you go back a year before, in 2022, the number was more than 10% when we had seen double digit. It dropped to 9.7 last year and dropped further this year. I think there are a couple of reasons why we are seeing this marginal dip. The business sentiment has waned in some sectors, and these are largely some of the services sectors, largely driven by technology, IT consulting services, and that's a large chunk of the workforce. And when the salary increases had also gone up high in the last 2 years, it was largely driven by the tech sector as well. So it's but obvious that when the tech sector is seeing recessionary winds and is on the wane, we have also seen the business sentiment come down, and as a result, the salary increments also have been coming down. Some of the other services sectors also continue to show a slight downward projection. If you look at retail, if you look at e-commerce, they're also talking about a slight lower number than last year. On the other hand, core sectors, more traditional sectors like manufacturing, engineering, FMCD, life sciences, auto, chemicals, they've either maintained the salary increase that we had seen last year, or in some cases even gone higher up. That's largely been driven by the business sentiment in these core sectors, the business growth, and also the focus on domestic consumption and spending. So there is clearly coming out to be a divide between some globally impacted services sectors, which are projecting downwards, and some of the locally facing manufacturing sectors, which are hiring, which are doing well, which have a better business sentiment, and are also looking at a salary projection upwards.
Interesting. And now inside the tech space, Rupang, because you talked about it, product companies or product jobs are going to get a slightly higher increase than services. And you're right to put it in perspective because you saw a huge, poaching, attrition rates, etc. right after COVID, so the base is also higher. Do you expect the trend to move downwards, though, and the difference in these two segments within the tech space?
So, we have to again go back to what happened, I think, the last 2 years. I think there was a lot of buoyancy, and I think companies went overboard when they were hiring. There was this whole great resignation. People had multiple offers. There were high premiums being paid. A lot of this hiring was happening for projects and for work which didn't come in, and it went into excess capacity, excess hiring. As a result, we saw some layoffs. We also saw some bit of right sizing that happened, and companies obviously cutting down heavily on cost. I think what we are seeing in the tech space is some of the organizations which are large scale in nature are cutting down on cost and becoming far more frugal. Some in the mid segment or the smaller segment are still giving high increases because they're still hiring people. So I think we are seeing a bit of a divide within this sector between large companies and small companies. And then obviously the second sort of divide is between the three separate subsectors. For example, if you look at technology platform and products, that number has fallen from 9.9 to 9.5, but that's not so much of a dip. If you look at tech consulting and services, that number has fallen from 9.1 to 8.2. That's almost 1% down. So that's obviously a big change, and that tech consulting and services also has been impacted globally. So that's, I think, one big part. If you look at global capability centers, the GCC, that has fallen marginally from 10.1 to 9.8 because there is still a lot of work coming the way of India. So I think one is that sectors which have more orientation or dependence on global, businesses are going to take a bigger hit. And then the second differentiation is going to come in the size of the organization.
Manufacturing, on the other hand, is out of all the sectors that you've tracked, is seeing a 10% growth in salaries. Now, put this into perspective for us. Are you seeing more upbeat kind of hiring in the manufacturing space?
Yes. So I think when COVID had hit, I think manufacturing had taken a big hit, and we had seen hiring and salary increase numbers also sort of come down. I think the last year and a half have been good for some of these core sectors. And when we look at manufacturing, we are talking about a lot of sectors which come under the larger range of manufacturing. Now, some of these are core manufacturing, auto, engineering sectors, which are seeing a strong clip at around about 10%. Auto is down from 10.6 to 9.9%, but it is still quite high, close to the double digit and higher than the India average. If you look at chemicals, it's same at around about 9.7%. Interestingly, life sciences, pharma, FMCG, FMCD, which are again core sectors largely driven by domestic demand and domestic spending, are doing reasonably well. So yes, hiring has gone up. These sectors are looking at much bigger plans, bigger investments, and we are seeing after almost 2-3 years salary increases being stable or actually going up in these core manufacturing sectors.
I just want to talk a bit about attrition rates. We saw attrition rates coming down in 2023 compared to 2022. I know it's difficult to maybe put a clear figure for what we could see in 2024, but are we going to see that trend continue? Lesser salaries or lesser salary hikes and maybe slower attrition as well?
So I think I'd put it into perspective. I think attrition was very high and it was artificially inflated because of what we saw in the tech sector and the great resignation and so on and so forth. Look, but if you look at the attrition numbers that we had sort of, been comfortable around between 2015 to 2019, it was hovering around about the 16.5% number. It's fallen from 21.4% to 18.7%. It's a big drop, no doubt, but it's still not close to the 16% number that we had seen in the previous year. Our sense is that eventually over a period of time, as businesses stabilize and unless we see some really big black swan event, the numbers will start to stabilize around the pre-COVID levels of around about 16.5%. And I think the same would go for salary increases. In the pre-COVID level era before 2019, we had seen numbers close to 9.3, 9.5%. Then COVID happened, it dipped down to 6.5, went up to 10.5. Our sense is, again, it will stabilize around the 9.5% number. There will be more and more companies clustering around that. We will see volatility in some sectors, where there are pockets of variation, especially because of the global headwinds. But eventually, we see both attrition and salary increases start to stabilize around the numbers that were prevalent prior to 2020.
What about overall hiring trends, Rupank? How do you see that panning out? IT is going to see some rationalization on hiring. Those are the initial sort of sense, that's the initial sense coming in. Do you think hiring trends also might be a little muted?
Yes, I think for the next 2 quarters, I think companies are adopting a wait and watch approach. I think they are not going all out. And also, I think we are having a sectoral split. As I mentioned, in some of the services sectors, we are seeing, some bit of a wait and watch approach. But then some sectors in services like hospitality, which was struggling during COVID, are doing really well. They are hiring restaurants, QSR, even retail. There is enough attrition and enough hiring going across in these particular sectors. Engineering and manufacturing core sectors are hiring as well, and for large, important critical roles. Within the technology, IT consulting space, I think for the next 2 quarters, we are going to see some bit of cooling down. And possibly after maybe a couple of quarters, we'll start see hiring pick up again.
All right. So you're going to see a bit of a cool down in hiring trends. Next 2 quarters at least, salaries are likely to grow at 9.5% on average, but you're seeing a moderation over the last couple of years. Thank you so much, Rupank, for joining us with all the analysis and insights on that very interesting report. But that is back to you, Smriti. And, with the news that it's good for companies if they have to spend less on employee costs, but maybe not as good for the employees themselves.
Well, definitely, Tamanna. But it's great news for the manufacturing sector that's going to see the highest increase. However, not so much for the technology and consulting services, where the hike is going to be minimal. But it's time for a short break. After the break, we'll get you an update on the farmers' protest. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Welcome back. You're watching Market IQ on NDTV Profit. Now, let me quickly mark a stock that's up about 7% in trade, which is Electra Green Tech. Now, this is on the back of an order win. They've just got an order of 2,400 electric buses from Mumbai's Best. This is for supply operation worth 4,000 crore and it will be delivered in the next 18 months. We can see the stock moves sharply up after this news. It's up about 6% or so right now. There's also Grasim that's entered into a negative territory as we speak. However, today they launched their paint business, the Birla Opus, and according to Kumar Mangalam Birla, he said that it's going to cross 10,000 crores in revenue in the next 3 years and it's going to become profitable as well. Now, we saw some commentary from Jefferies as well on this. It's a competition to the likes of Asian Paints that have been in the business for quite a while, and Jefferies also mentioned how in a very short period of time the paint capacities have increased massively. Now, on that note, Grasim has broken status quo in the paints industry, as I said, and its Birla Opus range of products. The company inaugurates 3 facilities at Panipat, Ludhiana and Cheyyar. My colleague Sajid Manga joins us live from ground zero. Sajid, tell us, what does this Grasim debut means for the company and its peers?
That's right, Smithy. You know, it's a very close-knit industry. The paint industry is oligopolistic, with Asian Paints having the largest market share in this, followed by the other companies like a Berger or a Nerolac or a Dulux, which have a smaller market share. What Grasim is trying to do is to disrupt the entire industry with nearly 10,000 crores of investment into the paint segment. Over the next 1.5 years, it will see nearly 6 plants being set up across the country. Nearly 1,300 million liters of paint capacity, which is nearly 40% of the industry capacity. And if you want to put it in perspective, the capacity will be much more than the second, third, and fourth paint maker in the country. So it will be the second largest by paint. Mr. Birla has been addressing this today as the launch at the Panipat facility, which is getting operationalized, and he says that by July, they will cross over 100,000 population towns, and by next year, it will be over 6,000 towns that they will be covering. So it's a pretty massive and aggressive distribution push, which is been planned across, and it's a pretty aggressive targets also in revenue terms in that sense, because it's launching today, and they're saying that in the next by the next third financial year after operations begin, the revenues will be more than 10,000 crores, and the paints business will be profitable as well. So it is breaking the status quo, as you said, and there is going to be challenge for Asian Paints going forward as they go into multiple distribution points and try to disrupt the industry.
Thank you, Sajid, for that. Mr. Birla talking about how they're going to achieve a revenue of 10,000 crore in the next 3 years from the paints business itself. Now, moving on to some economy news, HSBC Flash PMI indicates that India's economic activity is at a 7-month high in February. Pallavi Nahata joins in to tell us more about this. Pallavi, over to you.
Hi, Smriti. So that's right. The pace of acceleration in the output of India's manufacturing as well as service providers combined was at a 7-month high in February. The HSBC Flash India Composite PMI Output Index rose from 61.2 in January to 61.5. So not a dramatically large increase, but a rise nevertheless. Manufacturing PMI was at 56.7, while services PMI was at 62, both doing a little bit better than what we saw in January. Now, this was likely because of continuingly buoyant demand conditions, investment in tech, efficiency gains, expanded clientele, as well as favorable sales conditions. Export orders too rose. That's a good sign, especially because it was led by goods. Input prices rose at the slowest pace in 3.5 years. Another good sign. All in all, a good set of figures to have come in, and also indicating continuing business optimism going forward.
All right, thank you, Pallavi, for that. Overall level of business confidence remains intact, and that we can see in the numbers as well. Now, PM Narendra Modi attended the Golden Jubilee celebration of Gujarat Cooperative Milk Marketing Federation. PM inaugurated 5 projects worth 1,200 crore rupees while highlighting the uniqueness of the brand Anand Milk Union Limited. PM Modi also congratulated Amul and noted its contribution to India's dairy sector. Prime Minister also highlighted the contribution of Gujarat in India's dairy sector and in turn fueling the country's growth as well. Now,
हमारा फोकस है छोटे किसान का जीवन कैसे बेहतर हो. हमारा फोकस है पशुपालन का दायरा कैसे बढ़े. हमारा फोकस है पशुओं का स्वास्थ्य कैसे बेहतर हो. हमारा फोकस है गांव में पशुपालन के साथ ही मछली पालन और मधुमक्खी पालन को कैसे प्रोत्साहित किया जाए. इसी सोच के साथ हमने पहली बार पशुपालकों और मछली पालकों को भी किसान क्रेडिट कार्ड की सुविधा दी है. हमने किसानों को ऐसे आधुनिक बीज दिए हैं जो जलवायु परिवर्तन का मुकाबला कर सके।
Well, speaking of the farmer welfare, let's get you an update on the farmers' protests as well. Now, this is happening at the Haryana border today. Farmers have suspended the protest march towards Delhi after the death of a 21-year-old farmer at the Haryana border. Farmers will continue with their silent sit-in protest again against Centre's 5-year proposal on MSP and other demands. Now, that's all we have on this edition of Market IQ, but lots more coming up on NDTV Profit. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide?
Hello and welcome to the Mutual Fund Show on NDTV Profit. I'm your host Neeraj Shah. As always, this show aims to bring you expert commentary from the mutual fund industry and the planners so that you can make smart choices when it comes to investing your money through the mutual fund route. Talking about smart choices, We're asking this question whether people should continue their tax-saving funds or depend on the new tax regime for the tax-saving ability. It's a bit of a personal finance question into the mutual fund show because it involves mutual funds, of course. So today on the show, to talk about that and more, we're joined by Rohin Pakriwala, founder of Pakriwala Investments, and Shweta Jain, who is the founder of Investography. Both of you, thanks so much for taking the time out and being with us on the show. There's lots more to discuss. We'll have queries from our guests, from our viewers as well, which we'll urge you to answer. But can I start off with this? It's a bit of a personal finance overlap on the MF show, which is not something that we usually do, but it becomes important right at the nick of time, and also maybe for FY25, which is that should people continue with tax-saving funds and thereby be in the old regime, or should people move to the new regime entirely and not depend on tax-saving funds for tax-saving purposes? Shweta, can I start off with you on this? What are your thoughts?
So thanks for having me on the show, first of all. And it's a great question. And I love the angle of personal finance in any mutual fund show because that's where it all starts. So tax planning per se, we like to link it with goal planning. We like to link it with behavioral aspects. So for anybody looking to better their behavior, I think ELSS is a great start for them. And if it has to be done through the old regime, I think that's a great place for them to start off with, especially for newer investors, especially for people who are young and are looking to start their, investment journeys, life journeys. So I think ELSS is a great way to start. The 3-year lock-in gives them a good kind of experience. The volatility in the ELSS because it's equity gives them a good experience, but they can't withdraw that money. So they'll stay and they'll learn through that. So I think when you combine all of this, I gravitate towards the old regime, also because the old regime sort of incentivizes you through reductions to save and invest. And anywhere where the behavior is towards saving and investing, I gravitate towards that. So I think especially for younger investors who are just starting their journeys, ELSS is a great way to start. An old regime is the way I would go.
Okay, Rohin, would you stick to the old regime or are you going for the new regime? And therefore, if you're sticking to the old regime, I believe tax-saving funds become a bit of a no-brainer. Or am I wrong?
No, you're right, and I think tend to agree with Shweta's views as well. I think the first question, though, that the investor must, or rather the taxpayer must answer is which regime he wants to go for. In my observation, people with higher salary incomes will tend to prefer the older regime because net that saves you a little more tax. And if you're going for the older regime, I think Section 80C funds, ELSS funds are a no-brainer choice. They've historically shown that they give the best returns. They also have the lowest lock-in period. So if you're going with the old regime, definitely ELSS funds are the best choice. For people who go with the new regime, obviously there's no point doing ELSS funds because there isn't much performance difference anymore between ELSS funds and let's say flexi cap funds. There's a very marginal difference in returns, and for which I don't think a lock-in period is justifiable.
Interesting, Rohin. There are some proponents of the tax-saving funds who say that it's a great way to invest all your money as well because by default it locks you in for a period of 3 years, and mutual fund investing should be done with that kind of a perspective. Now, I for one believe liquidity is as important because we all invest money so that it's useful for us when we want. I'm just trying to understand, independent of the tax-saving benefits, do tax-saving funds become an interesting choice for people, or if not bound by the tax-saving rules, you would rather choose the non-tax-saving funds?
I'd like to say it split in two ways. If you're a novice investor, if you're an absolute new investor and you don't have, let's say, somebody guiding you or educating you on the need to be invested for the long term, then I think, ELSS funds are okay because they'll help you remain invested for 3 years and therefore eliminate any behavioral biases that might tempt you to, withdraw the money earlier. Having said that, if you have a financial planner helping you, or a distributor helping you, or an advisor helping you, then I think it's their job to educate you on the need to remain invested for the long term, and you shouldn't force your hand by being in ELSS funds. So that's the only that's the only difference. Lock-in is a negative in my opinion, because it's forcing you, and you will not have the liquidity come what may. If you have an advisor or a planner who's talking to you, then it's their job to educate you and help you remain invested for the long term, despite any volatility.
Okay. Shraddha, the same question to you, really.
So I have a little bit of a different opinion. I would still allocate some part of it to ELSS, especially seeing how especially new investors react, right? Whether it's just seeing markets go up, and then where the time horizon when they came to us would be, say, 10 years, 20 years, or 5 years, or whatever, right? Long term. But then suddenly they see this portfolio with good gains, and they're like, okay, let me cash in and spend it or whatever. So I have seen parts of portfolio where there is a lock-in that's still there without really impacting their lifestyle or anything. But the part that was free is really something that they liquidate because they feel that markets is heated up or on highs or whatever, right? So some part of the portfolio, I would still guide towards ELSS, even if there was no tax benefit, especially for newer investors, because that sort of helps them save from themselves, or save their money from themselves.
And viewers, in some sense, this boils down to the kind of discipline that you believe you have within yourself. And if you believe that you're disciplined enough that if you allocating some money for investments and you allocating it at the start of the allocation with the belief that you will hold it for 5 years, and mota moti, if you can do that for 5 years, then ELSS funds need not be the way to go to. You rather have the choice under your control. But if you are somebody who that you might be falling prey to some temptations here and there for liquidating investments, and ideally MF investments should be for a slightly longer term, then by all means, if you're a novice investor, then tax saving funds might be a good option because they lock you in for 3 years. Even if you want, you cannot liquidate the funds until the 3 years are over. So please keep that at the back of your mind. Okay, now moving on topics. The other one is around healthcare funds. And this is a bit of an investing angle coming in out here as opposed to it being pure play MF advice. And I don't know if you guys have a view on the sector, but if you do, I would love to understand, Rohin, for example. Let me start this with you. A lot of market experts and fund managers have come in and said that healthcare is a space or a juncture from where the space could give good returns. Have you been able to analyze any of the healthcare funds, and are you recommending them to people who are not averse to taking a slight bit of risk and investing in thematic funds?
Yes, Neeraj, to answer both your questions, in both cases, yes. In fact, I've had some of my clients move to healthcare funds about a month and a half ago. The reason for that is, twofold. One, healthcare valuations, even after the recent rally, are still what I'd call fair valuations. We also think that the healthcare sector is structurally poised for growth, given improvements in the US market, given a lower cost for the sector. So definitely, I think some part of the portfolio, if the investor can digest a little heightened risk, I think there's opportunity in healthcare, and you could make money from some allocation to the healthcare sector. Let me add also that in case, given that the overall market valuations are high, healthcare, and if the markets overall turn negative, healthcare still acts as a good defensive option. So in both ways, whether for the upside or for the downside, I think healthcare is a good option at this stage.
A slew of funds out there. I'm not asking for particular recommendations, Rohin, but a broad list of funds that people can look at and study, or maybe ask their advisor as well.
I think Quant Healthcare stands out simply for its performance, and Quant across all equity funds has been stellar with its performance. I think Birla has a healthcare fund which has also done really well. So between the two, maybe the investor can pick one.
Okay, fair call. And viewers, remember, if you have a financial advisor, please ask your financial advisor for the same. But yes, Rohin's recommendations are indicative. Please do your own little bit of due diligence as well. Shweta, same topic before we take that break. Healthcare funds, are they a no-no or are they a yes for you?
So I like to keep my life simple and investors' life simple as well. So I really avoid thematic funds, and as a philosophy, we stay away unless we can, get their entry and exit right, which is quite tricky, so to speak. For investors who are really looking to get this exposure, we could recommend maybe up to 5% of their portfolio, but we usually don't sort of recommend thematic funds itself. Pharma, of course, is one of the better thematic funds because the sector itself is a little bit of a defensive one. So people do tend to invest up to 5%, but usually they go by our advice and avoid this.
Okay, fair call, and understandably so. But so if you are a risk-averse investor, if you don't know too much, yes, thematic funds should be an avoid. But if you are willing to take a little bit of risk, then Rohin believes healthcare is not a bad idea. Shweta believes that too. A couple of funds for your perusal as well. We need to slip into a quick break. On the other side, we talk about a new offering from a marquee fund house and a few of your queries that you sent us over the course of the last few days and this today as well. Coming up with our guests on the other side. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
back with the Mutual Fund Show right here on NDTV Profit. Now, we'll address some queries that have come in. The first one is from Sudhir. And the query is that he's planning to start a monthly SIP of 1,000 rupees for 10 years. Sudhir's monthly income is 20,000 and approximate monthly expenses are 18,000. Sudhir, you need to save more. But Sudhir says, I do not have any mutual fund holdings right now. So what company fund would you suggest to me? Okay, Shweta, here's a 49-year-old man who has very little disposable income left post the monthly expenses, wants to allocate half of that 2,000 rupees of savings to mutual funds. He's a newbie, doesn't have any holdings as of now. What would you recommend?
So I don't know other part of his portfolio or savings. So if I assume that he has some bit of emergency funds, then I would say he could start with investing in equity, because that's something that people look to mutual funds for. So then he could start with something like a UTI Nifty 50. It's a passive fund, a good experience from a large cap point of view, from a new investor point of view. That is something that he could do. If he doesn't have any liquidity at his disposal, so I would recommend at least 2 to 3 months of expenses, if not more. Then he can start off with a liquid fund. He could look at something like an ICICI liquid fund or a short-term fund as well. So he has some bit of experience in mutual funds, but my experience is when people come to mutual funds, they actually mean equities, and that's why he could start off with the Nifty 50.
Okay. Sound advice per se as well. We work with the permutations and combinations that we have. So yes, even we don't have the idea about what other investments, but safe to assume that some bit of investments would be there, considering the gentleman is 49 years old. Rohin, what would your view be? Maybe a category, maybe a fund, or maybe both?
Yeah, I'd sort of like to tend to agree with what Shweta said, that assuming that he's coming into the category for some bit of equity exposure, I think he can maybe start an SIP in an index fund, or potentially even a flexi cap fund. Parag Parekh is one name I can suggest. There are several other flexi cap funds. Almost all fund houses have one, so he could pick a name from any of them. Parag Parekh is a good one to start with.
Okay. Well, Sudhir, in some sense, I hope this helps you. A Nifty fund or a Parag Parekh flexi cap fund might be good starters, with an assumption that you do have some emergency contingency funds, and therefore being in equity even at 49 is a great idea, because it'll speed up your wealth creation process. Now, the second one is Anil. The second query is coming from Anil. Anil is 32 years of age. His monthly income is 20 lakh rupees a month. Currently does not have any mutual fund holdings, has a small cap PMS and has invested about 1.5 crore in it, and has gotten a whopping 39% CAGR return. I don't know over what time frame, but I think the question is that Anil wants recommendations for a small cap fund, a balance advantage fund, and a flexi cap fund, where he can invest about 2.5 lakh rupees as an SIP or lump sum, as the case may be. Because Anil's goal is to provide for his lifetime needs, including travel and other expenses. So a really long-term portfolio creation, starting right now, considering that he's got the wherewithal to invest 2.5 lakh rupees per month, and Anil is only 32 years of age. Rohin, it's a bit of a complex query, a few things that he needs. I don't know what all can you advise, but between a BAF, a small cap fund, and a flexi cap fund, what would you recommend as a combination? He's got sums large enough to invest across the three in whichever proportion you would deem fit.
So what I'd like to first tell Anil is that the return that he's so far gotten from the PMS, which is a small cap PMS at 39%, is something that he should not expect going forward, right? While he's had a good experience, he's got to temper his expectations down. To that extent, I don't even think any further SIPs or any new SIPs in small cap funds are a good idea, given their valuations at this point. But if we'd still like to go for a small cap fund, then a quant small cap is probably a good fund to go for, maybe an SBI small cap as well. In a balance advantage, HDFC balance advantage, ICICI balance advantage are all good funds. Sorry, I'm missing the third part of the question. What was the third investment?
Flexi cap fund. A flexi cap fund you
flexi
already
cap fund
recommended.
Correct. I've already mentioned Parag Parikh, so I'd suggest you can go with that. But just a word of caution, small cap valuations are very high, so
Yeah.
I would think twice before putting more money in small caps at this point.
Rohin, quick 30-second answer. Parag Parikh flexi cap no longer is a tiny tune, 5, 6, 7,000 crore AUM. It's a very large AUM. You think they'll be able to outperform even now?
Well, that's a question that only time will tell. That's an answer that we'll only get with time. But Parag Parikh has done well so far. Their performance is mostly attributed to their international exposure. So to that extent, it's a slightly differentiated fund strategy. But I'd like to go with a time-tested name, so therefore I'm recommending Parag Parikh.
Fair call.
So I'd stick with that.
No, fair call. I'm just wondering. Shweta, what would your recommendations be for Anil? He's got the corpus and he wants the flexibility.
Interesting that he's seen this amount of return already and now he's wondering. So I would first of all ask him to cut down some of his exposure to the PMS, book some profits there maybe, but allocate more towards large and mid cap. So while he's asked for these specific categories, I would really like him to build a good core portfolio of passive funds and definitely adjust his return expectations a little bit, because while he has a good income that is coming in monthly, I would really like to see good growth from his portfolio on a regular basis, right? So a good Nifty 50 would be something that I would definitely recommend him to start off with. Small cap, like Rohin mentioned, valuations, and also he has seen good returns in his small cap PMS. So I would definitely say he could start off with smaller amounts than he is thinking, but that's something that he could do. I would say a Nippon small cap is something that he could do. Balanced advantage, I'm not sure why he likes that category or what he's thinking about. Maybe he should figure out his goals and then figure what kind of liquidity he would need and then adjust his portfolio accordingly. But if it's balanced advantage funds in particular, he's seeing ICICI is good, HDFC is good, Edelweiss has done pretty well as well. So these are three funds that he can definitely look at.
Anil, it might also pay to take advice of a financial advisor who can advise you on such sums so that you don't go wrong and the losses or the underperformance is not very large for you. But unfortunately, we are completely out of time on this show. Would have loved to talk about an offering from the Parag Parikh house, which is a new thing that they're doing. Maybe we'll try and take it on tomorrow's show or the show next. But Shweta as well as Rohin, thank you so much for taking the time out and being with us and giving us your thoughts. And with that, it's a wrap on this edition of the Mutual Fund Show.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit.
Benchmark indices recover from day's lows, Sensex above 72,600 while the Nifty tests 22,000. Sugar stocks crack in trade. This comes as the government announces sugarcane FRP hike by 25 rupees. An average salary to be protected to increase by 9.5% in 2024 as against 9.7% in 2023. NBFC and engineering sector to see the highest increase. And Grasim is ready to take on the likes of Asian Paints and JSW Paints with the launch of its paint business, Birla Opus. And farmers suspend their protest march for 2 days on the back of death of a 23-year-old farmer. Silent sit-in protests continue. Hello and welcome. I am Agam Vakil and this is Last Trades. In this show, we take you through all the stocks that are buzzing on account of bulk deals, block deals, as well as volumes. But first, let's take a look at markets. And at the moment, we have seen a sudden surge in the Nifty, which has moved back into the green and with a lot of strength. So while we did see a lot of weakness through the course of the day, it has moved back into the green, and it has moved back into the green very, very quickly. This also means that it has taken out a lot of the call writers which were, well, settling in throughout, and perhaps the last 15 minutes we've seen a considerable change in the complexion of the markets overall, and that perhaps is something that we're going to keep an eye on now, because a lot of factors in fact have changed even as the Nifty inches towards the mark of 22,100 as we speak. You know, there's certainly going to be a lot more covering. It does seem like it, considering the kind of shorts that we saw earlier on in the session. That said, you know, let's take a look at the constituents. Have things changed there? Let's bring that up as well. And sure enough, we have seen an improvement in the likes of ICICI Bank. L&T is now moving from the red to the green, and that perhaps could be a key contributor in terms of the key movers in today's day of trade. Besides that, we are also keeping an eye on, well, ITC, which again has seen a little bit of strength. Though, mind you, HDFC Bank continues to weigh on the index in general overall. That's something that we should be watching out for. But let's move on and talk about the broader markets. How are things panning out there? Now, have things changed? So do remember the broader markets had recovered earlier on in the session, and from there on we are seeing some further improvement as far as these indices go. So both the small cap and the mid cap indices are doing well, advancing in trade as we speak, and even in the mid cap index, well, we are seeing gains in Vodafone Idea. That's up around 5.2%. Cummins is moving up significantly. That's up around 4.3%. We have the likes of Indian Hotels, which is up around 4.3%. I'm going to very quickly take a look at what's happening in the capital goods space, because Thermax is the other one, which is at a life high right now as we speak. And yet we see a surge in volumes even in today's day of trade. So a significant up move, and a lot of these counters contributing to this up move as well. But from there on, let's talk about all the stocks that we want to address. And, well, we start off with, well, of course, Campus Activewear, where we have seen some steady buzz coming through. We also want to address what's happening with Tirumala Chemicals. As you can see there, we are looking at a gain of around 7%. It's not to mention, we are keeping an eye on the likes of Grasim. Of course, it's a tad bit under pressure today. And, of course, Electra Green Tech as well, on account of yet another very large order coming through. Of course, Electra Green Tech has been moving from strength to strength. But let's start off with the first stock that we want to address, and that's Campus Activewear. Now, it has come off from day's highs. It started off with significant strength, but it is now, well, gaining by just as much as 1% as we speak. However, it is buzzing on volumes, and there is plenty of traction with respect to, well, buy and sell out there. Let's get in Mahima to give us a perspective on Campus Activewear. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly mentioned, the stock has come off its day's highs. However, it's buzzing in volumes. Now, this is because of one large trade that has taken place today of approximately 1.39 lakh shares, and total volumes traded are approximately 82 lakhs today. And the average traded price is around 259 rupees. Now, this is on the back of yesterday's large trade as well. Yesterday, approximately 1.3% of Campus's equity exchanged hands in pre-market trade. 40.7 lakh shares approximately were traded. The sellers known were QRG Investments, sold around 40.65 lakhs, and the buyers were SBI Mutual Fund, who bought the shares, and the shares were bought at 245 a piece. Now, talking about how the Campus Q3 performance has been, well, the numbers don't look really good. Margins have significantly dropped from 19% to 11%. Net profit has been down over 48%. Now, this is because of there's a change in the channel dynamics, which is why they're facing this kind of degrowth. And sequentially, however, they've performed well because the Q3 season was a festive season. And also it's very important to note here that since Campus is into shoe wear, it is facing very stiff competition, and it's also losing its market share at present. And with Foot Locker entering in India, it might pose a very huge competition to a brand like Campus. Also talking about its stock performance, where it's trading around 4 times its 30-day average volumes today. 5 days it's been up 3.4%. However, 1 year the stock has been nearly down around 30%. If we talk about analyst recommendations, it's a mixed bag. Well, 4 say buy, 2 say hold, and 2 say sell. So it'll be very interesting to watch out how Campus performs in the next coming quarters, considering the stiff competition.
Right, absolutely. And you know, the point that Mahima was making when it comes to competition, not only is it about that intensifying up move in the kind of product lines that are coming through, but also pricing to a certain extent, while there is a little bit of pressure as far as inputs go, specifically rubber prices. You know, a lot of these things make things complicated for a whole host of these companies. Well, Mahima, thank you for joining us and taking us through what's really ailing Campus Activewear at the moment. And from there on, we talk about Thirumalai Chemicals, which is also advancing in trade, gaining as much as 7%, trading near days highs and on large volumes. Let's get in Varsha to give us a perspective here. Varsha, what are you tracking here?
Hi Agam. So as you rightly said, so Thirumalai Chemicals is in focus today. Company has seen intraday high of almost over 7%. And if you see stock movement in last 6 months, company has given returns of almost 27%. And last 1 year, stock price have moved almost 46%. Volumes are at over 3x of its 30-day average. Now, if you see little background about this company, so this company is a part of Thirumalai Group, a leading producer of PA, which is used in agriculture, fungicides and industrial chemicals as well. Now, if you see, company has recently, so Q3 results were announced, wherein you see company has reported weak set of numbers. Now, this was due to what is happening with the chemical industry. So there was fall in the end product prices of PA, and Chinese players were dumping this product at very low prices. Also, if you see the EBITDA margins for this company, we have seen volatility in the EBITDA margins. So over the last decade, average EBITDA margins have been around 14%, bottom margins have been around 4%, and peak margins have gone around to 22%. Now, if prices, we are seeing some recovery in prices. China dumping is also expected, to stop by Q4 FY24. So if prices now start to recover, we can see margins, going forward to their 15-16% in FY25.
Sure, there's some very interesting ones in terms of this margin trajectory. Of course, we'll be curious to know as to who the parties are who are actually, in fact, delving into Thirumalai Chemicals. Varsha, thank you for joining us and taking us through, some of those aspects with respect to this particular company. But from there on, we move on to Electra Green Tech. Well, there are some news updates here, but it's also advancing in trade with a decent amount of volume traction. Perhaps the update here is not too surprising, because it's the reason why we have seen that substantial gain in Electra Green Tech over the last couple of years. But I'm going to say no more and bring in Mihika to talk to us about that. Mihika.
Yes, so the stock did surge up to more than 7% intraday, and it's shown some strength in the past month, up 36%, and volumes were over 2 times the 30-day average, and the total volumes today stood around 37.07 lakhs, where sellers did outnumber the buyers. Now, the surge in pricing was with the latest order win, where the company did receive a letter of award from BEST. The order was for the supply, operation and maintenance of 2,400 electric buses, which is an order win on a gross cost contract basis. The order is set to be delivered over the next 18 months, and the order value is set at 4,000 crores. As of Q3, their order book, net order book was of 8,088 electrical buses, and they target to deliver about 650 of these buses in the upcoming quarter itself. In terms of manufacturing capacity expansion plan, they have a plant at Sitarampur, which is under construction, and the pilot production was set to start in the first week of February, and the new plant capacity is ready to to add a capacity of 2,500 buses in the next fiscal. In terms of future plans and outlook, it's looking strong. The strong demand continues as they're getting more orders from the MS RTC of over 5,150 buses, and they expect to double their turnover in the next 2 years. And lastly, the company is also currently taking hydrogen buses under a trial. While there's no concrete deadline for the same, they are expecting good traction from that once it's the results are in.
Yep, absolutely. Well, Mihiga, thank you for joining us and giving us those updates on electric green tech. Something which has been evident that across state governments at the center, as well as a handful of private players giving the kind of orders to electric green tech, which of course deals in manufacturing, green buses. So that's another one to track, of course. It's not gone without any notice considering the surge in prices that we've seen for the shares of this particular company. But from there on, we talk about Grasim, and that of course has been in focus because of, it's the company launching its paint business. Now, I was looking at the volumes profile. It was seen the highest volume since last September, mid-September in 2023. So it's at a high, 5-month high in terms of an intraday. It's not to speak for, but yet the stock is under pressure just to a certain extent. It's in the red. It's down by around 0.8%. The real question is, what does the paint business bring to Grasim? We've spoken to a lot of analysts, and they suggest a wait-and-watch approach because with the kind of ambitions that Grasim has when it comes to, being the number 2 player, at least in the near term, it's not without its set of challenges. Do remember, you already have very well-established, large incumbents like Berger Paints and Kanza and Aerolac, not to speak of Asian Paints, which of course is a mammoth in its own way. But there's going to be plenty of challenges for the company, which is why I suspect that a lot of these traders as well as investors are suggesting a wait-and-watch approach on how the new paints business for Grasim pans out. That said, they have also mentioned that they've seen the most aggressive capacity expansion plan that anyone in the sector has seen. So it's going to be an interesting one to keep an eye on as to how things develop here. But speaking at the launch of the event, Aditya Birla Group Chairman Kumar Mangalam Birla spoke about the current scenario in India's paint industry and the growth trajectory as well as the opportunity. Listen in.
India's per capita paint consumption stands at a mere 3.5 kilograms. This contrasts starkly with the global average of about 10 kilograms and dwarfs against the 25 kilograms consumption per capita in developed economies. For a country like ours at the forefront of economic acceleration, India ranks in the bottom 10% of paint consumption. And this to me represents a galactic opportunity. With rising per capita income, a young population, a booming real estate sector, and shorter repainting cycles, the potential for growth in paint consumption is obviously immense. The path forward demands a commitment to long-term investment and a vision to redefine the industry with consumer-centric technologies and practices.
Well, on that note, we slip into a short break, but on the other side, we get you lots more. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
Welcome back. Well, after a massive re-rating, is there room for oil and gas stocks to grow further? Speaking to our colleague Neeraj Shah, here's what Citi Research's oil and gas analyst Saurabh Handa had to say. Listen in.
So if you look at the downstream companies, which are the oil marketing companies, I would say all of them have by and large been reporting pretty strong numbers through the year. And there have been consistent earnings upgrades by us as well as the street. So I would say maybe around 6 to 12 months back, in general, people were fairly conservative and negative on the stocks because fiscal 23 was quite weak for them. They were making losses. There were concerns around pricing and government intervention. The whole thing has now flipped.
Right.
So we've seen a massive spate of earnings upgrades, especially in that space. The stocks have obviously reflected that there's been a massive re-rating. But we believe still there is room for the stocks to go up further from here. So we are still positive on a couple of these names, stocks like BPCL, HPCL. We still have buys on them. If you look at fiscal 25 earnings, the outlook for now seems fairly okay. Crude is range bound. It's gone up a bit, close to $80, $85, but our general view is it stays in the 70s, 80s, which is pretty okay for the marketing side of the business for these companies. On refining, our view is positive. We believe refining margins stay at mid to peak cycle levels, at least for this year. So the earnings outlook even for FY25 is fairly all right, and it opens up room even for upside risks. So I would think it makes sense to still remain positively inclined in these names. From a stock market perspective, obviously they've run up a lot in a very short space of time, so it's quite natural to maybe see some profit taking. We wouldn't be surprised, but we would be looking to buy into any dips that happen.
Interesting. This, a couple of your peer sets might have a different view, but it's great to know that how you're thinking about it. What about the non-OMC pack?
Yeah, so in that you can look at maybe the upstream names and say the gas names. So on upstream, ONGC is one stock which on an absolute basis has gone up, but it has relatively, say, underperformed compared to the downstream names. So we are positive there. Now in ONGC, you don't see too many earnings upgrades because the realizations tend to be broadly fixed at $75 oil, 6.5 gas. But in ONGC, it could be at an inflection point as far as its production trajectory is concerned. So ONGC last 10, 12 years, its production has been declining at like a 2% CAGR. That's at the cusp of turning around. And in fact, we might see that this quarter as well. So even though earnings are broadly in line, because production growth could start being positive for ONGC, we remain buyers on that stock. It's still one of the cheaper stocks on a price-to-book basis. It's still at only 1 times. It should give you 13, 14% ROEs. On the gas side, we have slightly stock-specific views. So we are positive on names like GAIL, MGL, IGL. GAIL, again, the stock has done well, but a lot of their segments are now performing pretty well. And on the transmission side, there's been regulatory re-rating, tariffs have moved higher, and volumes are picking up because gas consumption is picking up in India. On trading, which used to be a concern for them in the past, that's been doing fairly okay. On the petrochemical side as well, they've been reporting losses. That seems to be turning around. So, you know, a lot of things are falling into place for a lot of these companies across the value chain. But like in the gas space, we are also slightly cautious on other stocks such as Petronet LNG or Gujarat Gas, where we believe, you know, valuations are probably on the higher side.
Right, moving on, we also spoke to Endurance Technologies ED and COO Ramesh Gehani on how Maxwell Energy Systems will turn EBITDA positive and the outlook for EV demand. Listen in.
See, there'll be a bit of peaks and valleys on the EV sector as we are experiencing, you know, FAME 2 subsidies and so on. And I think the whole system is getting recalibrated as far as the market position is concerned. So we have got some handsome orders. We've already, in fact, Maxwell directly has booked 380 crores of orders on EV, and which is likely to be matured in full extent by 2027. And they are on the up move. The BMS is also taking a good shape, and as the volume move forward, as we find extra numbers coming in from the OEMs, you can definitely see better performances from Maxwell. I personally feel, and I'm pretty strong about it, that we should be EBITDA positive very shortly. See, I would view it a bit differently. The peak that the auto industry, the two-wheeler industry has seen was 24.42 million. This year also they're expecting to close, if I annualize basis, I can see it's likely to close around 21 million. So if I just make a direct comparison, I think there's a headroom of 3 million vehicles to the peak that we had already achieved. But as we find EVs coming in place, there can be some extra numbers pouring in, which will carry on and find its balance in the coming years.
Right, moving on, PhonePe launches its Indus App Store, a homegrown Android app designed as a challenger to Google Play. My colleague Rishabh caught up with the CEO Sameer Nigam on what this means for the company. Listen in.
Billion-person smartphone market, mobile first. We believe that the App Store is a very critical part of the entire internet ecosystem of discovery. It's a young market with a lot of aspirational app developers, and we wanted to make sure that we can innovate in the zone of localization and personalization. Because we are a very diverse country, you can't build one app, one description for a billion people. And I think it's been a long time coming. I think whether it's food tech, ed tech, health tech, fintech, shopping, we've got global and domestic competitors, and they're creating a very vibrant market together. This is a market where we felt that we don't have enough homegrown solutions, and we wanted to just actually put out a challenger.
Interesting. Talking about you being a challenger, how do you see competition increasing? Do you really expect Google to sort of sit up and notice and innovate accordingly, right? The innovations you have here in terms of Indic languages, by when do you expect that to happen? And also, just what's your fine print read on that?
Well, I absolutely expect that any competitor, whether it's us or anybody else, I think the minute you have two of a kind, you have to innovate. That's just life. And in payments, UPI, 150 apps have come in, and we've competed against Google Pay and WhatsApp Pay and Amazon Pay and Paytm and Cred and everyone else. So I think the best of startups and tech companies, East and West, large and small, have all competed. And I think the winner is the country and the consumer, right? I mean, everyone can use a different app, and that's a great market. And I think our very presence will create more impetus on them to innovate.
Interesting. Sameer.
And with that, it's a wrap on this edition of Last Trades. But on the other side, we get you India markets close. Stay tuned in.
Or do you see them active?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others...
Welcome, you're watching India Market Close, and it's looking like an afternoon of a muted kind of a consolidated move on the key indices. The Nifty now in the positive territory, but it's been circling in a range. The Nifty and the Sensex both. Broader markets though showing some kind of movement. Don't mistake this for a day that has not been completely newsy and has not seen action. That's not the case at all. So much has been happening, from sugar stocks that have been reacting negatively to the government increasing FRPs for sugar cane. Grasim has been the big story, as has Asian Paints, and we'll get through all of that. But you would not perhaps see that if you looked only at what the indices were doing. So the broader market's performing relatively better than your top lines, but let's pull up the heat maps as well to see what has been working in today's market and what that story is panning out to be. Now, at the bottom of the barrel in that sense is BPCL, and OMCs have been stuck there over the last couple of sessions because of an anticipation and uncertainty on whether most of the gains have already been priced in. Two notes are backing that feeling as well. Hero Motor is sliding once again. This has been a continued trajectory that we have seen over the last, most of this trading week actually, on concerns of slowing sales compared to its peers, but it's the banks today that are weighing down the market, which is otherwise not really so negative. HDFC Bank would be one of them, and if I pull up top contributors to the Nifty decline, you'll definitely see HDFC Bank in that list. So would a Kotak Mahindra Bank make it to that list. There you have it, HDFC Bank pulling down 42 points all by itself, as is Kotak Mahindra Bank, SBI. So banks are weak. Tech is doing okay. Tech is doing okay relatively in the market today. ITC is up because of a news report that it's eyeing a stake in Pratap Snacks. Advanced decline ratio, just let's take a look at that very quickly and see what's happening there. And you're seeing the kind of volatility on a day like that. We've started on a positive note, quickly turned the tide, and then you've seen that gap narrowing all through round. Not too much of a difference right now. Your bulls have a slight edge, but that could truly change. So range-bound, volatile trade with a bit of consolidation. But like I said, don't mistake it for a day with not too much news, because so much has been happening. And Harsh has most of those details, isn't it, Harsh?
Well, yes, absolutely, Tamanna. Let's pull up some stocks which are really buzzing in trade today. And let me start off first with ABB, which hit it out of the park yesterday. Did that today, has done that today as well. There you go, 8% higher on ABB, 9% higher on South Indian Bank. Rights issue at 22 rupees a share, currently sitting at 35 rupees a share. So fundraising, never a bad thing for a bank from a perspective that it means growth is here. I'm going to quickly move on though. You have the likes of an NBCC, Salasa Techno, Home First. Home First, of course, and a lot of this being also order wins. Home First on the back of the fact that they now can get into the insurance distribution business. Oil India on the back of favorable note from Motilal Oswal is buzzing. Outside of that, notes continue to trickle through. You have Z Entertainment as well, which I want to mark out today, and Paytm. Those are the two stocks that have dominated headlines over the last week or so. But look at the way both of those are moving. Not much of a movement in both of those today, and that's why they make it to our stock list. Let me also take it to Pratap Snacks ITC. Pratap Snacks up and away in trade on the back of a possible 45% plus stake that ITC is going to pick up, if at all, basis media reports, of course. Then you have the likes of a Eureka Forbes, which is buzzing on the back of news. You also have MTAR, NIBE. Now, some names within the space pack buzzing because 100% FDI allowed post approvals, of course, within the space pack. And you have MTAR as well as MIBE, both of which are up and away in trade. Last off, we have Bajaj Hindustan, Uttam Sugar, Sri Renuka, all of the sugar stocks which are in focus on the back of change in MSP for sugarcane, and that will impact some of those stocks. And you'll see 2.5% knock on Bajaj Hindustan as a back on the back of that, Tamanna.
In fact, let's take that conversation forward, and I'm glad you wrapped up that entire relay of stocks, Harsh, with sugar stocks, because we're speaking now with Atul Chaturvedi, Executive Chairman of Sri Renuka Sugar, to get a sense of the extent of the hit that we could see. So, Mr. Chaturvedi, thank you so much for joining us here on NDTV Profit this afternoon. Can you hear me? Can you hear me, Mr. Chandra?
There's hardly. Your voice is very, very feeble.
Oh, all right. I'm not feeling very feeble, but I'll try and be louder and hopefully.
Now it's much better. Now it's much
hopefully,
better.
you know, our producers can turn the volume up. Okay. So let me understand from you how much of a problem is the FRP increasing by 25 rupees. To put it in perspective, I believe last year the increase was 10 rupees. It's 8% higher than what was expected in a, maybe that was on par in a pre-election season. What is the margin hit for a Sri Renuka sugar?
No, I don't think there's any margin hit going to be there. This increase is going to be effective 1st of October. It is for the new season. So as far as the current season or current crushing period is concerned, it will have practically no impact. It might actually end up having a little positive impact in the sense that we were earlier anticipating that the production in the country is going to be anywhere between 29 and 29.5 million tons, which now seems to be closer to about 32 million tons. And that was putting a little pressure on the sugar values currently. So I think this is a positive step. And secondly, what we also anticipate is that the farmers will now be not discouraged in planting more and more cane, and with the next year's monsoon likely to be a normal or a good one, it's a better time for the sugar industry, contrary to what many people in the who are covering this sector think. So I think it's a positive sign. If the farmers are going to be doing well, the industry is also going to do well.
I understand what you're saying, Mr. Chaturvedi, and you're right. You have to look at it holistically. If 5 crore farmers do get a higher remuneration, that's good. So it's not black and white. But having said that, the fact is that your input costs are going to go up. There is no visibility on whether you can charge more or whether the MSP will go up. I could stick my neck out and say it's unlikely right now that before an election, any government will want to increase the minimum, sale price of sugar. So how is this not going to impact your margins, and why would you say it's positive?
No, at this point of time, the FRP increase has not come. It is going to be coming effective 1st of October with the start of the new crushing season. There's many months in between, and by the time the next crushing season starts, the elections will be over and done with. And we are positive and we are 100% sanguine that the MSP will also get increased. And secondly, the price of ethanol will also get increased, because the understanding all along has been whatever is the FRP increase, there will be a simultaneous increase in ethanol price as well as in MSP as well. So we are not too worried on that count.
Okay.
And it's still quite a way off.
Okay.
So whatever is being planned or whatever has been announced, it's normally this time of the year you don't have this announcement of a FRP, but this year things are a little different in the sense that the farmers' agitation is already on in northern India, and the government wants to send a signal across to the cane farmers that of UP that your interest will definitely be protected, and the cane farmers' interest is also linked with the industry's interest. So I'm sure ये जो चोली दामन का साथ है, we can't wish one away.
No, I understand that, and I think it's very clear why this is happening now. The question is that how do you see production panning out, Mr. Chaturvedi? Because, like you said, production levels have been above expectation. That also impacts prices. So, how do you see the situation shaping up to October?
No, our crushing season is likely to be over and done with by mid of April this year. And earlier we were anticipating a crop of about 29 or 29.5 million tons. But we had not factored in the wonderful rains during the month of October and November, and we were basing all our decisions basis the lack of rains in August. But now what we are seeing, and the crushing season is almost something like 75-80% over, that the sugar production is likely to be closer to about 32 million tons, and add to that another 2 million tons of diversion towards ethanol. So in terms of sucrose, what we are talking is something like 34 million tons. And it's important that government diverts some more of juice into ethanol, so that we don't need to carry the baggage of excess sugar into the next year. So I think, and secondly, with the increase of FRP already announced by the government for the next season, I think this will sufficiently enthuse the farmers to stick to cane production and vis-a-vis the competing crops, because the farmers are getting very good returns, the payments are in time, and so I think it's a win-win situation for both the farmers as well as the industry.
Sure, Mr. Chaturvedi. Harsh also joining in. I want to try and understand, where does ethanol production go from here? Are you expecting to see a bump up from here? Of course, the base has flattened a little bit, if I can call it, if not fallen, but it's flattened of sorts. Do you expect it to start to creep up, and by when?
No, we would want it to happen right away, because currently the crushing season is on, and the juice will only be available only during the period when the crushing season is on. And the government had based their calculations basis that sugar production is going to be very low, which is now subsequently is now getting proved that it is not correct. So I think the government also needs to take a course correction, and we've been requesting the government that you need to come up with more allocation of more diversion of cane juice and B-heavy molasses into ethanol. Otherwise, we'll end up creating more and more sugar at the end of the year. So, which is not going to help anyone, because the government will, as a country, we need only about maximum 5.5 to 6 million tons of stock levels, which is sufficient for about 3 months. So beyond that, having stocks doesn't make sense.
Sure, understood. Thank you so much for all of that perspective. Sugar stocks buzzing today on the back of that news, but all of that perspective given by Mr. Chaturvedi seems to suggest that it's not as bad as the market seems to be reacting on some of these counters. But let me quickly take it across. Welcome both our guests on this show. We have Vijay Chopra, who's the MD and CEO Enoch Ventures, and we have Rajesh Palvia as well, who's the Senior VP Technical and Derivatives Research at Axis. Rajesh, let me come to you first. Markets volatile. What's your sense at this point?
So generally, this is the common phenomena especially on weekly expiry days. Yesterday, we seen again volatility due to Bank Nifty expiry, weekly option expiry, and today it's Nifty weekly option expiry. But looking at the overall structure for market, it's on the bullish side only, as we have protected the important support area of 21,900. That's the major put-based concentration for Nifty. So that level is intact, and again, we have seen pullback action from those levels. Though on the higher side, 22,100, 22,200 are the major call concentration area. So major short covering move will play out only about 22,150 mark. If we able to take out those level on Nifty spot, then we may see another round of short covering action, and then possibly Nifty can scale up to the new all-time high trajectory also. But till the time, we believe that some consolidation is likely to be there in Nifty. On the Bank Nifty, 46,500, that was the major put-based concentration, and again Bank Nifty took support from those level, and pullback action is visible in the today's session. On the higher side, 47,000, 47,200 are the major call concentration area. If we able to take out those level, in this pullback, then possible short covering we can see towards 47,600 to 47,800. So both indices are holding the ground based on their important support area for near-term trend. So trend is likely to remain on the bullish side, and towards the end of this Fab series, we expect this momentum can extend, and maybe again we can see Nifty to scale up to new all-time high trajectory also in the continuation of this uptrend.
Sure, Rajesh. Vijay, if I can come to you, we just had a chat with Atul Chaturvedi to try and understand sugar better. I'm not sure if you had a chance to, listen in on a piece of that. But your sense with regard to this, this change in the sugar space, if you can give us some of your thoughts on what you feel.
Well, I think that there are a lot of turbulences as far as the sugar sector goes. First they had a ruling on ethanol. Now they are increasing the MSP. This is primarily political in nature. But yes, I think I just heard a couple of sentences from you. I joined in the midst of that interview that the input cost is going to go up. And Mr. Chaturvedi was iterating that, we have a crushing season in October. So it is, we have a lot of time, almost about 7-8 months to go. So during this time, probably they have confidence that something else would come up, or they might do some kind of a I would say miracle where sugar companies will start making money. Definitely in the last 4-5 years, sugar companies due to ethanol have completely changed their balance sheets. Gone are the days when they were deep in red. But now I think that this new ruling and the increase in MSP of farmers definitely would hurt the balance sheets, especially the bottom lines. So let's see how this works out. Overall, I think that sugar prices have gone up in the open market as well, in the global markets as well, and the retail prices have gone up. So the pressure has been passed on to the end customer. Today, sugar, you want to buy sugar, it is about 50-51 rupees a kg, while 2-3 years back it was about 38-37. So there's a huge increase in the sugar prices, which has been passed on to the end customer. I think this would also be passed on to the end customer. Why would any company take the brunt? So overall, I think that it's in the consumption theme, and companies would definitely come out of this these woods, and they would do definitely something to bring down their costs or pass on the cost to the end customer.
Right, absolutely. You saw that confidence in what the Sri Renuka Sugar Management was saying, that this FRP change is going to be implemented only by October of this year, and by that time he is expecting the MSP, or the minimum selling price, to also be at par and everything to be passed on. But there are a whole lot of stories that we want to cover on this show today. We're going to be talking about what 100% FDI in space sector actually means. We'll be having a conversation with the Walchand Nagar management in just a bit. We have to talk about the whole paints business and what's happening there with Grasim's entry with the Opus brand. What does it mean for Asian Paints? All of that after a very short break. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
Bank Nifty showing a spot of weakness just a bit before close in markets today. But, I would say a decent recovery from the day's lows on the Nifty. Look at that chart, 0.5% up. Not quite at the day's highs, but closing in on it. So the last bit of trade, last about 30 minutes odd of trade doesn't seem to be too negative. One sector which is definitely in focus today is because of a cabinet discussion or a cabinet announcement, more or less, which sees FDI norms easing in the space sector. Now, there are certain categories where 100% FDI has been allowed via the automatic route. It already existed via the government route, but now even without government approval, you can have 100% automatic FDI in satellite system manufacturing, ground and user segment, 74% automatic FDI in satellite manufacturing and data products, and 49% in launch vehicles and space ports. You've seen a whole host of companies in the space jump up today as a result of this, including Walchand. And we're speaking now with Mr. Chirag Doshi. He's the MD and CEO of Walchand Nagar Industries. Mr. Doshi, very good afternoon. Thank you for joining us today on NDTV Profit. Just want to get a sense from you where the opportunities lie here for the private sector and for your company.
Yeah, so thank you for having me. I think this cabinet decision has brought a lot of clarity to the opportunities that exist in the space sector. I think there are certain areas that Walchand Nagar focuses on, which is launch vehicles, where they've capped it at 49%, because that's a very critical part of the entire space ecosystem. And I think with government approvals, we can, of course, take that beyond 49. But for satellite communication equipment and some of the more sort of component level equipment, they've even gone all the way up to 100%. So I think the first thing was we needed clarity, which we've now got. And I think now that gives us the opportunity to go out there and look for foreign investors who see the potential in the space program to actually come in and commit some funds for private expansion, as the government itself is keen on.
Right, and so if Harsh also joining in, trying to get perspective, what's the kind of interest that's there from foreign investors into investing in a space like this? You, of course, will have your ear very close to the ground, but even outside of Walchand Nagar, is there a lot of foreign investor interest in this space?
Yeah, so Harsh, you're right. I mean, as part of founding members of ISPA, we also get the opportunity to deal, and I personally get the opportunity to deal with a lot of startups. And I think they were the ones who were really having a hard time trying to get clarity on where they could raise funds from, and to get foreign investors excited about wanting to invest in their businesses at a component level or at a sort of a satellite as a service level. And I think that clarity now gives the startup ecosystem a huge opportunity to really get foreign funds excited about India's entry and growth into the space sector. As far as established companies like Valchanagar are concerned, we already have investment in our public entity. And so, yes, it will probably create the opportunity for us to get a new group of investors. But I think the startup ecosystem is really going to get a boost from these decisions.
Give us a sense on what exactly from these categories which have seen FDI loosened up will see the most interest, and how would it benefit a Valchandnagar, for example?
Yeah, so I think the number one area is people. There was the telecom regulatory authority that also came up with its judgments on spectrum auctioning and or non-auctioning now. But I think the satellite ecosystem for both telecommunication usage as well as for geo surveillance is going to get an incredible boost. We already know that India is one of the cheapest places to launch satellites from. And therefore, I think as a result of the growth that's going to come from the satellite sector, India's privatization of PSLV, SSLV, and ultimately GSLV, I think that entire upstream value chain is going to get a big boost in the next 3, 4, 5 years to come.
Definitely a space to watch out for. Thank you so much, Chirag Doshi, for speaking with us. He's MD and CEO of Valchandnagar. That stock up about 5% today. In fact, the entire space, MTAR, Mishra Dhatu, all of them are doing very well on the back of that. That's really, in a sense, the new frontier, every sense of the way. Let's just pull up what's happening with your telecom companies. Data was out for the month of December, and we could see some of those statistics. You saw them on your screens as well, where you had user numbers out for the month of December. So net additions were 4.32 million users, up from November at 3.18. Reliance Jio net added about 3.99 million users versus 3.45. Let's look at what Idea did. Net loss was 13.7 lakh users versus a loss of 10.7. So that has actually deepened, no difference that is making to Vodafone. Really, but a lot of speculation around Vodafone separately as well, where there was one note which said that Hindalco may use some of those proceeds from the Novelis IPO to revive Vodafone Idea. I'm not sure if they're going to do it, but perhaps that's what's boosting the stock as well. Bharti Airtel is something we should look at very quickly. Net additions have grown, not massively to be honest, 18.5 lakh users versus 17.5 lakh users in November. Let me just quickly go across to our analysts for the day, Rajesh Palavia and Vijay Chopra still with us. Rajesh, anything in the telecom stack or space that you track?
I think after this corrective move, Bharti is now recovering from its day low, and looking at the overall structure, the stock is in bullish trajectory across all time frame. The stock is now approaching to its 20-day moving average. If at all stock manages to cross above 1150 mark, then it may continue its uptrend, and then possibly we can see again all-time high trajectory for Bharti Airtel. So overall structure is bullish in this volatile market. One should use this decline as a buying opportunity. We believe that going forward we can see target towards 1200 to 1240 on the Bharti Airtel. So one can look to buy this stock with stop loss of 1080.
All right, speaking about this space, and of course, we mentioned Vodafone Idea. Right now, Kumar Mangalam Birla is at a press conference in Panipat, where he's talking about Grasim's latest foray, this time into the paints business. They say they're going to add 40% industry capacity and want to reach a revenue goal of 10,000 crore rupees in the next 3 years. Remember, there's already one very dominant player in this business. Let's listen in to what Kumar Mangalam Birla is saying.
An affinity with the dealers, the dealer network. You saw many of them over here. They've been our partners for, like I said, 30-40 years, and that's our right to win, one of our rights to win, which is what made us look at this industry. I don't think that we're looking at synergies with any other business. I think this is a strong enough synergy. And I think the fact that we've been able to sign up 3,000 plus dealers even before we've started to sell, I think is a huge testament to that.
Sir, Tarun from Z Business, sir. Sir, there are two questions. First on, is there any plan to bundle with the cement and paints? Will you give
No, none at all.
Not at all. Secondly, sir, can we, you are talking about the decorative paint segment. Do you have any plan to enter into industry and as well as the commercial part of that?
No, there is no plan at this point of time.
Just follow up on, being the second largest player by the end of 3 years. Paint is also a valuation driver from a stock market standpoint. Would you at some point look to demerge the paint business and unlock value there?
No. We're just about launching and just creating a new division in resin. We've really not got any thoughts about demerging. I don't think that that's in the offing at all.
So I think, as I mentioned, our focus is our pricing will be consumer centric, and there'll be assurance written all across the consumer. Consumer for us, the first and foremost frontier that we have to win the hearts of consumers. We have to reach this paint into homes of consumers, and our belief is that at the bottom end of the pyramid, there is a crazy battle, but at the top end of the pyramid, the luxury and premium end, which is where India is going, there is hardly any options available for consumers. The quality of products that we have designed allows us to be able to focus in a large way on the luxury and the premium end of the consumers. And we will make sure that consumers love us at that end.
सर मैं आलोक प्रियदर्शी हूँ CNBC आवाज़ से। सर मेरा सवाल है कि आपने अपने स्पीच में एस्पिरेशनल क्लास की बात की थी कि एस्पिरेशनल क्लास और खासतौर से हाउसिंग सेक्टर का ग्रोथ काफ़ी अच्छा जा रहा है। तो मैं बताना चाहता हूँ कि एस्पिरेशनल क्लास प्राइस सेंसिटिव भी काफ़ी होता है, हालांकि वो कोशिश ये भी करता है कि वो लग्जरी सेगमेंट की तरफ मूव करे। तो क्या कंपनी के पास प्राइसिंग को लेकर ऐसी कोई योजना है या कोई ऐसी प्लानिंग है कि जो ये एस्पिरेशनल क्लास को लग्जरी की तरफ मूव किया जा सके, या कोई फाइनेंशियल कोई स्कीम या कुछ ऐसा हो?
तो देखिए, पहली बात तो ये है कि हमारे जितने प्रोडक्ट्स आ रहे हैं लग्जरी, प्रीमियम और इकोनॉमी, अगर आप इकोनॉमी के भी प्रोडक्ट्स को देखें, जो पेंटरों और कॉन्ट्रैक्टरों ने उन्हें यूज़ करके देखा है वो बोलते हैं कि ये तो हमें प्रीमियम प्रोडक्ट के जैसा लग रहा है। तो क्वालिटी काफ़ी अच्छी है। तो हमें तो ये लगता है कि जो लोग डिस्टेम्पर कैटेगरी वाले भी हैं वो इकोनॉमी रेंज में अपग्रेड कर जाएंगे, और जो इकोनॉमी वाले हैं उनको प्रीमियम वाली फिनिश मिलेगी उसमें।
Right, let me quickly mark out some stocks here. You look at the likes of an Indigo Paints down 2.5%, AkzoNobel down 1+% in trade. So you're seeing a bit of that launch taking some bit of steam out of some of the paint companies. And we'll talk more about that on the other side of this very short break. Also, buy now, buy today, sell tomorrow ideas, F&O Qs, we'll look at the whole hog.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
Welcome back. Smart recovery in the markets. Nifty, closing in on the 22,200 mark, up about 141 points. But the IT pack are the winners of this afternoon, undoubtedly. Look at an HCL Tech, up in trade about 3%. At TCS, Wipro, Tech Mahindra, the entire lot of them having a good afternoon. But what's happening in the F&O space? Agam, I suppose there are quite a few people who are not having a good afternoon looking at the recovery in the Nifty.
No, certainly not. Tamanna, what's really happened is that sharp recovery in the Nifty has led to a lot of call writers running for cover. And at one point in time, when it comes to just today's day of trade, well, there were nearly 4 calls written for every 1 put written, which means that there is a significant amount of people out there who are traders out there who have written those calls and have been completely forced out of their positions, and that's evident in the kind of up move that we've seen in the last half an hour of trade. For the Nifty now back above the mark of 22,200, and that was a highly improbable level, at least earlier in the morning, to have achieved that, because do remember that at one point in time we were testing 21,900. So that recovery has certainly taken a lot of traders by surprise. That said, that's evident in the futures addition in open interest as well, nearly 5% added there. Let's talk about the Bank Nifty and see how things go. And we are looking at a near 0.25% cut there. So this does seem like an expiry move on the Nifty, not so much about the recovery in the broader markets. And of course, the Bank Nifty is seeing some amount of longs unwinding coming through as well. Now, I'm going to talk about the options market, and this is where, as I was telling you earlier, we had a significant amount of positions around 22,200, and it does seem like the Nifty at the moment is currently trading about that, which means the whole lot of the calls written around 20,000, 20,100, all of those calls will be forced to be unwound, and perhaps not on desirable premiums for all those who have sold those particular options. Put writers, of course, on the other hand, are certainly making a reasonably good day of trade, especially when the start was very bad. Do remember that we saw a sharp cut as far as the Nifty is concerned earlier on in the session. And moving on to how things have panned out in today's day of trade. We need to move. We have this isn't the correct picture. Naturally, we're starting to see a lot more put writing through the course or the latter half of the session. But let's talk about stocks then. And that's where we, in fact, do have longs in Indian Hotel and ABB. ABB moving up another 9%. So moving from strength to strength. Kotak Mahindra Bank, Jubilant Foodworks and Grasim, on the other hand, under a tad bit of pressure. And as far as your OI losers are concerned, we're looking at short covering in Ashok Leyland, RBL Bank, REC, NTPC and Tata Communications. In the earlier slide, we have Grasim, where it's very interesting that while the underlying hasn't moved substantially, we are not only seeing considerable amount of volumes in the cash market, but also an addition in open interest as far as futures go. So if you could just pull up the earlier slide and very quickly take a look at Grasim. So there you have, that's where Grasim is. It's actually declining by, or rather advancing by less than 1%, less than 0.5%. So it will be interesting as to in which direction are these traders and, a lot of these other investors are building their positions as far as Grasim is concerned. But as far as the Nifty goes, a surprise move in the last 1 hour of trade.
Yep. Perfect, Agam. Thank you for that. While he was speaking about Grasim, interesting thoughts coming through. Let me take it to Rajesh as well, taking his views with regard to both Grasim as well as the larger paint sector. How is it looking on charts, on technicals, Rajesh?
So Grasim is now breaking out its consolidation zone on the daily as well as on the weekly chart. So looking at the overall structure, Grasim is looking positive, and we believe that if the stocks holds about 2160 level, then possible upside target we can see towards 2250 to 2300 in the continuation of this up move. So overall, stock is moving in upsloping channel. So I think one should hold their long position, and possibly we can see this uptrend is likely to continue further. If we talk about other paint stock like Asian Paint, so there is a pressure still in the Asian Paint, and the stock is consolidating at the lower band of this down move, which we have witnessed in last couple of month. So for Asian Paint, the major hurdle at this moment is around 3060. Until the stock not crosses those level, it may remain in the consolidation for some more time. So I think Grasim is well placed. One should look to buy that stock, and we can see a momentum to continue in short-term basis for Grasim.
This whole Grasim versus Asian Paints kind of narrative, I would say, and also because the companies pitched it that way, that we want to become the second largest player, 40% capacity addition, 10,000 crore revenue, target in the next 3 years. And in fact, they want to exit year one with double-digit market share. Vijay Chopra, is it doable? Can an Opus challenge an Asian Paints in the market?
Well, challenge, yes. Possible, I would say likely. It would be difficult though. Getting a double-digit growth in year one. They are Aditya Vikram Birla. They can definitely, have they have the distribution channel in place due to their cement business. But again, to topple down Asian Paints, I think that definitely is going to be a challenge because Asian Paints has its deep inroads already. And so although I think that competition is always good for the industry, good for the customer, maybe the pricing, there would be price wars and the pricing would come down. This is quite likely. But all said and done, I think that, I would buy an Asian Paint around here at around 3,000 odd, rather than going for a Grasim for paint business, because Asian Paint definitely has corrected, from the top of close to about 3,600, it is available at about 3,600 rupees, gone from the top. So I would say valuation-wise, Asian Paint also looks very enticing. And if somebody wants to buy for a longer-term perspective, let's buy Asian Paints, nibble into Asian Paints. As far as Grasim is concerned, yes, they are quite aggressive. They have to give aggressive numbers, otherwise the street won't accept it at all. At this stage, if they are getting into a new business, so they have to, they put all their, they have to go full throttle in case they want to achieve those numbers. But that time would tell whether they are able to achieve or not. But yes, I would recommend a buying on Asian Paint rather than Grasim, especially for the paints business.
Understood, Vijay. And Vijay, just very quickly with regard to the structural story in paints, some of these valuations that we are seeing on some of these paint stocks, 40 plus earnings multiples that we are seeing. Structurally, does the story change? Do margins change? I know crude is stable, and which is a big positive, but over the longer term, it's not going to be likely. That's what history tells us. But structurally, do you see the story seems to have changed in terms of pricing as well as margins for some of these companies?
Well, I think the margins are huge because the price increase has been passed on to the customer. When the crude prices have come down, paint prices haven't come down at all. So there are margins for sure, and that's the reason why a behemoth like a Birla company is getting into paints business, and in such a huge way. So, but again, it would take time for them to establish. It's not easy to establish a brand in the minds of people. We talk a lot over TV shows and we know what's happening, but the scores of Indians, billions of Indians, who have Asian Paints right on their tongue, they go to a shop, they will ask for an Asian Paint. So I think that it would take some time before people accept it and the top of the mind recall happens. So I think this business is good, great, with the housing market increasing, with the real estate market increasing, and the size is increasing. A lot of infra stuff is happening across India. I think next 20 years we're going to see a lot of infra development happening. So paints goes along with infra and housing, and of course automobile. So all these three sectors are great consumers of paint. So the paint story is intact. Yes, there would be a price war for sure. If as I said earlier, that it's going to be good for the customer. The customer will get a good product at a better price, I guess so.
I'm just asking, and I'm just actually chatting with my colleague Ajit Mangat, who's in Panipat right now and covering that press conference. And this is exactly what I asked him. What's the pricing going to be like? Are we going to see a price war? So pricing is going to be released in the first week of March, is what he tells us. And it will be based in the less for more coverage. As I understand that means it will have to be competitive. And that's what we will see. You will see some sort of a price war. The question is where it would pan out. So that's the whole paint story. But there's so much more happening in the market today, and I just want to focus on a small cap called Pratap Snacks. There was a report this morning in the newspapers that says that ITC could be eyeing a pie, or I would say a bite, of Pratap Snacks. The stock surged massively over the day. Nearly 14% at one point. It's pared down now, up about 3% even so. But the story is that ITC is possibly buying 47% stake in the company through a venture fund. Mahima is joining us with more. Mahima, interesting to understand why ITC would be interested in Pratap Snacks.
Right, Tamanna, so as you rightly mentioned that ITC might look for a bite in Pratap Snacks. Well, as you rightly mentioned, it might acquire 47%. Now, why is this? I mean, this could be a strategic step by ITC to expand its presence in regional markets. One, because Pratap Snacks is spread over in the tier 2 and tier 3 cities. And also, if we check the trajectory of how the revenues of Pratap Snacks have been by, well, Pratap Snacks revenues somewhere in FY23 stood at 1,600 16,600 crores. And if we talk about ITC's FMCG sector, it was around 19,000 crores. So this forms approximately 8 to 10% of its revenue. So overall, Pratap Snacks will add over 8 to 10% revenue to the ITC's FMCG segment. And if we talk about the net profits, the bottom line of Pratap Snacks is nearly 20 crores. So the revenues, however, will add 8 to 10%, but net profit, the bottom line addition won't be very significant. However, also this is very important because this has happened after when Pratap Snacks was actually eyeing to acquire Haldiram, and this did not happen because of the high valuations. And also a very important thing to note here is that this would trigger an open offer of additional 26%. So at present, this is all we have on Pratap Snacks and ITC, but let's see how it pans out to be once the press release comes out.
So there's been nothing official on it. I just want to pull up the day chart for Pratap. ITC doing very well. I mean, if the size of ITC pushes up to 2.5%, then you have a superb thing. By the way, just let's not lose focus of the big picture here. Nifty is at a record high, 22,233. Look at the way that index has moved through the day. The last 20 minutes has been the game changer, hasn't it? And, you know, we must get a technical view on that as well. What do you think is going on in the market right now is the big question, Rajesh?
So a broad-based rally is taking place, and most of the large cap stocks which were consolidating since last couple of trading sessions now are given the breakout. And short covering action is clearly visible in most of the call writers for 22,200, 22,300 strike is also witnessing call unwinding. So that clearly short covering is taking place on the Nifty, and I think this short covering can continue further as most of the call writers were confident since last 2-3 trading session that the market won't be able to take out this 22,200, 300 zone. But the kind of rally which we are seeing in the most of the large cap stock, that clearly shows that this really can extend further, and towards the end of this FAB series, we can see furthermore higher level from here onward. So I think this rally can extend for tomorrow also. One should now trail their stop loss towards 22,100 to hold their long position.
Hold your long positions right now, you know, with the kind of up move you've seen. Rajesh, any views on Nifty IT and Bank Nifty? I mean, divergent views. Nifty Bank also really recovering, I must say, but Nifty IT up 2% today. Any views on both these indices?
Yeah, Nifty Bank is also showing some kind of, short covering action, but still the important level which we are keeping an eye, that is 47,000, 47,200. These two levels are very important and critical on Bank Nifty spot. Until these levels not taken out, Bank Nifty may remain in consolidation because still the pressure is there from HDFC Bank, and some of the large cap banks are still not contributing to this up move. So Bank Nifty may remain for consolidation for some time, but Nifty is clearly outperforming. If we talk about the Nifty IT, that is also showing good traction, and the kind of buying interest which we are seeing in most of the large cap IT stocks, that clearly shows Nifty IT can scale up further higher, and possibly we can see a level of 38,500 to 600 for Nifty IT. So I think stock like HCL Tech, Mahindra and TCS, these three stocks are looking promising at this moment, and I think even Wipro is also looking promising. So I think these IT stocks may contribute to this Nifty IT, and possible one should look to buy this stock as we see that near-term setup is positive for HCL Tech, Mahindra and Wipro.
Right. IT, of course, in focus. We continue to build on all-time highs. But let me quickly have a look at where sectorally we are at. And what you'll see is broadly all sectors pretty much in the green, except the Nifty Bank, around 0.1% lower. So slight negative bias there on that one. But outside of that, just look at some of the gains that we've posted. And from the bottom, we've really seen a strong rebound across sectors. But let me again take it to the FMCG pack. Vijay, plenty of action happening with regard to consolidation. We've seen several purchases made by the likes of a Tata Consumer. The larger ones really pulling out their shopping basket and doing their shopping. ITC and Pratap Snacks, your view, is this firstly doable? And secondly, what is the kind of synergy? What do each of the companies get? Because for now, both of them are 3% higher.
So first things first, you talked about synergy. I think that ITC has a large brand called Bingo, in which they have the likes of whatever, Pratap is making. I think a lot of products Bingo has also launched, and Bingo has, spread its wings over the last 10 years, wherein, I think that it is one of the preferred brands today as compared to, the likes of Haldiram's or whoever is there in the market. So apart from Bingo, they have Sunfeast, where they have a lot of biscuits and stuff. So I think that there might be certain local pockets or regional pockets where Diamond or Pratap Snacks is strong. I'm sure that Maharashtra, Gujarat, they are very strong. So probably those markets ITC wants to capture. And there are times when bigger companies take over smaller companies and they quash the brand completely. So it might be a case, Samsonite and Aristocrat, these are classic examples. So I would say that synergies definitely lie because they are in the same industry, and ITC definitely wants to have a larger share of the pie. So who knows that they take over, Pratap Snacks completely. But again, I've not been confirmed through official channels. This is just a news going around. ITC has not confirmed as yet, but let's see. If at all it happens, I would say that they would definitely want Pratap Snacks or Diamond to be a much smaller brand than theirs. So that's one. Secondly, you were talking about FMCG companies. I think that, there's a lot of hoopla around the valuation part of FMCG companies. Look at ITC. I think that it's at mouth-watering levels. Look at HUL, Dabur. These are great companies to latch onto with a longer-term perspective. No problem at all. I think that we're going to have a normal monsoon this year as well. Interest rates seemingly, last night we had a commentary from US, and even our RBI governor is talking about bringing the interest rates down. This would definitely cheer up the market to a great extent. Inflation has been more or less in control in India. So the inflationary pressures due to which the input costs were going high for FMCG companies. So I think that's more or less in control. So FMCG should rebound. So my top picks would be definitely HUL, Dabur, ITC, and Tata Consumer.
Got it. Okay. Thank you so much, Vijay. I'm sorry I'm going to have to cut you off, but if I can come back to Rajesh. Rajesh, your very quickly, buy today, sell tomorrow ideas.
So first one is Bharat Electronics. We are expecting target of 205 for BTST point of view. Keep stop loss of 192. Second stock is Eicher Motor. Stock is rebounding from its 20-day moving average. We are projecting target towards 4,050. Keep your stop loss at 39.10. And the third stock is Geo Financial. That stock is also breaking out of consolidation. So we expect this rally can extend towards 315 to 320. So Geo Financial is buy with stop loss of 297.
Yeah, absolutely. Thank you so much, Rajesh, and of course, Vijay, for joining us. But let's turn focus to the last couple of minutes before close. And what a closing it has been. New levels have been breached on the Nifty. Look at that number, 22,223. In fact, 22,250 has been breached for the first time on the Nifty. And all of this, I would say, in the last half hour or so, we should actually pull up the line chart to get a line graph to understand what the day has been like and how things have changed so dramatically just in the last bit of trade for the markets. Complete, rock and roll kind of show right in the end. What has pushed the markets up? It's the IT stocks all the way. A surge in the last 20 odd minutes or so in the Nifty IT as well. You can see 2% up, but if you look at the heat map, you'll get a clearer idea of what has been boosting the markets. Suffice to say that all of the stocks which were firing at the start of the day did not really make it to the end. Coal India has jumped right in the end, up about 3.5% during close. Bajaj Auto, stellar run continues. Eicher, it's also the BTST idea that, Rajesh Palavia gave us. ITC on the back of a news report on maybe inorganic expansion, but all of it in HCL Tech, TCS, all of them doing fabulously. And Indus seeing a bout of profit booking, but it's not just an Indus story, whether it's an HDFC Bank, a Kotak Mahindra, and SBI, all of them seeing a bit of pain, but more green definitely on the screen rather than red today. Just BPCL again showing signs of pain. I want to quickly see if we can check what the other OMCs did at close, either an HPCL or an IOC, because that was the recurrent theme. And did they really do any better because of the way markets zoomed? Not really. HPCL also down, as is BPCL and IOC as well. So that pain continues, but the broader market's doing even better. So this is a broad-based story today, Harsh, and something has changed in that last half hour.
Absolutely. Let's look at the advanced decline as well, and what you'll see is it's extremely interesting the way the day has progressed. There you go, look at the fag end here, Tamanna, and what we're seeing is a dramatic reversal. So definitely we take home the goods. I mean, it's a positive day. But let's quickly shift focus to the broader markets. Let's look at the Nifty mid-cap in terms of where it stands. There we go, 1% higher on the Nifty mid-cap. Pretty much the Nifty mid-cap has moved along with the benchmark today. So as the benchmark has recovered, the mid-cap index has recovered as well. There you go, the Nifty small cap 0.6% higher as well. Let's look at some specific names, tons of them, Tamanna, in trade today. Let's start off with an ABB, which was stock of the day yesterday, continues to rule the roost, if I can call it. 2 days in a row. I think between the 2 days, up about maybe 18-19%. Yes, nearly 20% higher over the 2-day period, and that one is, of course, on the card. South Indian Bank being a solid performer in trade today. 9.5% higher on that one as well. You had NBCC, Salasa, Techno, Home First, all of which are doing very, very well as we close out the day. But let me focus in on some of the other names. Let's pull up something like an MTAR. Let's pull up something like a Midhani. They've also done fairly well on the back of specific news.
So then we should see our sugar, how our sugar bunch ended at the end of it. Shri Renuka,
Bajaj Hindustan, if we can pull that one up.
All of them down in the red.
Correct.
So the themes were very clear. Bad day for sugar, great day for anything linked to space, even defense to that extent. Grasim and Asian Paints in the news for various reasons, so is ITC. But all of those are spots of what you've seen in the market. The overall trend towards the end, the mood has completely changed, and you have seen a fabulous close at 22,217. We have to wrap this show. So from Harsh, me and the entire team that puts together India Market Close, thank you so much for joining us. But stay tuned, a lot more coming up on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Hello and welcome. You're watching at the Small and Mid Cap Show. I am Mahima Vajrajani and with me I have Harsh Saita.
Now to try and give us the larger picture, the larger perspective, we have the CEO of Raymond Realty, Harmohan Sani with us. It's a pleasure having you on the Small and Mid Cap Show, sir.
Hi, Harsh. Pleasure to be here on the show.
Right, Mr. Sani. Okay, so let me first kickstart, try and understand as to how quickly is the demerger going to happen in terms of timing. I think that's something everyone's looking out for.
So demerger now, as you know, is a foregone conclusion. Now the court convened meetings are happening as we speak during this week. So it should be imminent, whatever time the process takes. Our current estimate is that in the next 2 to 3 months, it should be through. We are expecting listing sometime in June, July. That is what our corporate team has kind of estimated. But then process is process. It could be a few days here or there.
Okay, Mr. Sani. Well, Mahima this side. Firstly, congratulations on the launch of the new Bandra project. Just trying to get a perspective of how this project is going to pan out to be. What are the timelines and what kind of revenues are you expecting out of this?
Hi, Mahima. Thank you for your good wishes. So this project is very close to BKC, and it's going to be the largest gated community in that area as of now, and for the longest period of time. I mean, probably it is the largest in the last 20-30 years or so. The estimated revenue, as you rightly said, is 2,000 crores plus. The timeline of this project, we will be completing this project, the entire project. It will be done in 2 phases, but the entire project will be done in about 5 years' time, total end to end. We launched it only day before yesterday evening in terms of sales. The construction has begun. This is a special project for us because this is the first time we are moving out of the Thana market and expanding our footprint into MMR, the larger MMR, and Mumbai. So Mumbai is always special because it's also our home city.
Sure. So, sir, 2-3 months to the demerger a foregone conclusion. I want to try and understand where Raymond Limited goes from here, because I'll remove Raymond Consumer now from our discussion. So where does Raymond Limited go from here? 2,700 odd crore of revenue in terms of both real estate and engineering in FY23. Where does the number sit in FY24 and where do you go from here?
So Raymond Limited, as you know, will comprise of real estate as well as the engineering business. And I look after the real estate business, so I can talk more about that. Of the larger entity, I mean, as far as 23 is concerned, the numbers are already known. You yourself said that. And 24, also we are seeing growth which will be there. So the year is going to be ending soon. So I would request that let's be a little patient. I don't think we have a policy of making forward-looking statements, but it will be a growth year for us. That is something I can share with you. Our pre-booking numbers are quite healthy. Up to end of Q3, the numbers are already there in the public domain. So that clearly shows that this is a growth year for us for both engineering as well as real estate business.
Yeah, but if I can, okay, so if I can have maybe a 3-year vision, and I won't push you on the engineering side of things, but a 3-year vision from the real estate business side of things, how many projects are you looking to take up? Given the capital that you have, you're going to be debt free, so that's the big positive as well. So maybe in the next 3 years, what's the kind of number that one should look for from the real estate business?
So real estate last year in terms of sales bookings, we did a healthy number. We did about close to 1600 crores last year. Current year pre-booking will be a very healthy growth upon that. And next year also you would see growth. In terms of number of projects, we have already signed 3 projects, which is outside of Thane. Bandra being one, there is one in Mahim, and there is one in Siam that we have signed. These are all redevelopment projects that we are currently focusing on. That's where the big opportunity is in Mumbai. So the total GDV of the entire real estate, which we have currently signed up, is close to 30,000 crores today, where Thane itself is 25,000 crores. And outside projects, 5,000, hoping that we'll do slightly better than that. That's the current estimate. So that's anyway there. As far as the real estate business is concerned, we have kind of looked at almost a 25% CAGR, which is something, as of now, the numbers are holding good for the last 2 years. And I see the market being very sustainable for the next 3 to 5 years. For sure, all factors are aligned for an upswing to continue in real estate for at least for the next 5 years. So if the industry growth is going to be 16 to 17%, which is what the estimate is by market experts, we hope to do better than that, somewhere in the region of 25% CAGR.
Right, Mr. Sani. So as you mentioned that you're looking forward to a lot of projects and a lot of joint development agreements as well. And since you've mentioned that you've become net debt free, how do you plan to fund these projects going forward?
So, of course, we are net debt free, so we have access to debt. That's one obvious avenue that we have for access to capital. But the big advantage that we have is that we have a solid platform or a launching pad as far as our Thane land is concerned. We have signed 3 more projects on the strength of that itself. The cash flows which will be generated from internal accruals from the Thane project will fulfill a very large part of the need for equity infusion, which we have to do for this. So it will be internal accruals from there. For construction, anyway, funding is available at a much cheaper rate from banks. So we would be accessing that because that will be the prudent thing to do in terms of return on equity to be the maximum. So that's generally the plan. And our focus principally is on residential projects where buyer's equity also plays a role. So the projects get launched and a part of funding also comes from buyer's equity. So these are going to be the 3 avenues which will fund our expansion, internal accruals being the largest part, and then buyer's equity, and then the last is, of course, construction funding from banks.
Right, Mr. Sani, quickly on to profitability. Margins above 20% in the real estate business doable?
Oh, certainly. So it is going to be in the range of, as per our estimates, what we have done going forward. Obviously, as all organizations do, we have a long-range plan in place, and we are expecting margins to be in the region of 22 to 25%, depending on year to year, which project at what point in time kicks off. So it will be range bound within this 22 to 25%.
Okay, Mr. Sani, thank you so much for speaking with us at NDTV Profit and guiding us that your margins from realty business going forward, you expect approximately 22 to 25%. Thank you so much for speaking with us once again.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching the Small and Mid Cap Show. Well, Poly Medicure is in focus. The company's reported good set of Q3 numbers where the profits have risen over 30% year on year, and their subsidiary Plan One Health SRL has also guided a growth of approximately 40% by FY25 and expects growth in critical care division and cardiology. The company has also guided the revenue growth of over 20% in FY25. Well, Himanshu Bey, the MD and CEO of Poly Medicure, joins us now. Welcome, Mr. Himanshu.
Thank you.
Right. So, my first question to you is that the domestic revenues have grown by around 18% versus the guidance of 20 to 21%, and your exports have grown by 24%. So, should this mean that you'll be focusing more towards your exports, as I believe they're more margin accretive?
Yeah, I think exports are definitely more margin accretive, but I think domestic, of course, we had some headwinds in our renal business, and probably that took the growth down. But I think we are seeing the growth coming back, and I think we are very bullish now for next couple of years in the renal segment, and hopefully that should see a 40 to 45% growth in next coming couple of years. So with that, the domestic revenue should come back to north of 20% plus in FY25 and 26. Even higher up. That's what we would expect.
Sure, Mr. Baid, Harsh also joining in. What exactly, went wrong for the renal business, if we can understand that better, and what gives you the confidence of the growth going forward?
See, when we launched the business in 2020, at that time, the industry was not regulated. only on 1st October 2023, every medical device sold in the country is now regulated. So there's a huge gap where imports could be freely coming into India without any standardization or regulation. But that has changed effectively 1st October 2023, and that has led to imports being regulated very heavily, and also the standardizations have come through BIS. So that will actually help the industries which are already regulated in India, and also where we have standards already laid out. I think we'll come at par, and that will help us to then gain bigger market share. And that's a big change, I would say, in last 3-4 months. And because of that, we are already seeing a big traction, from the domestic market in the renal segment, and that will help us to grow there.
Right. Also, your Plan One Health SRL, which is a subsidiary, had a loss last year versus a profit this year. If you can guide us how you've ramped this up, and what do you see? You've already guided a 40% increase by FY25, but if you can just guide us as to how have you ramped up this business?
So Plan One Health is an oncology business, and these are products used for chemotherapy treatments. And during COVID, in 2021 and early 2022, the treatment had dropped in Europe, and this is more Europe-centric business. And of course, we also bring these products to India now. So now a lot of things have changed, and after COVID, I think the hospitals, the chemotherapy treatments have started back on track. People are more in hospitals now for those treatments, and the demand is increased. Also, we're getting more registrations done for these products. We were going through a completely change in regulation in Europe, and we have now got all the relevant regulatory approvals in a lot of new markets, and that is driving the growth. And also a lot of pre-work is being done in India. The synergies which we looked at initially are now kicking in, and that is leading to additional margins in this business, also a rapid growth.
Understood, Mr. Bed. Let me try and understand both revenue as well as margin profile going forward. Revenue growth around 20 to 24% odd guided by you for FY24. How close are we to that? And in terms of FY25 to say FY27, if I take that 3-year band, what's the kind of CAGR expectation on the top line, and will you be able to maintain margins at 26%?
See, I'll be very upfront. So I think FY24, we've already seen 9 months of revenue. We have done growth close to 23%. I think the same momentum should continue for the rest of the quarter, the last quarter. And when we look at for FY25, we've already given a guidance of 20% plus. We think the momentum will continue. I can't guide you because we have not given guidance for 26 and 27. But I think the momentum will continue because you see a lot of aggressive capex happening from the government side also, and also at the private sector in India. And that is leading to, will lead to a future growth in our businesses. And we have also started 2 new businesses, critical care and cardiology. We've just launched very recently, a few days ago, and critical care a few months ago. So all these businesses will start topping up. Also renal, it seems to be more promising now. And so with all these 3 kickers, more aggressive capex coming at private sector and government, and Polymed also doing aggressive capex, we have just started 3 new plants in this financial year. 1 more is supposed to go live in the next few months. And then we have plans to add more capacities in the existing plants with which we have started recently. So all that is very positive for us. And then some growth coming from Europe and US also, in next few years. So all that will help us to, be in that range, what we have guided for FY25, and maybe 26, 27, we stay in the same range.
Right. So since you mentioned plants, can you just guide us to what your capacity utilization at present stands at? And also, since you mentioned exports growing, what is the outlook for exports, let's say for FY25?
See, our exports should grow at around 22 to 23%. This is what we think right now. And we are very hopeful because we've got contracts in place. We have a lot of new businesses which are shaping up right now in Europe and also in the rest of the world, and a lot of other important markets. So hopefully we should stay in that range. Of course, there are some headwinds because of this Red Sea crisis, because of trade issues. But I think this has been now existent for last 3 months. I hope things will kind of stabilize in the next few months, and so we'll see more traction coming there. Of course, some customers are getting impacted because of delay in supply chain, but I think once that is accounted for, I think then we'll have a regular cycle. And of course, India, I've already spoken about, it looks to be more promising in coming years.
Right, Mr. Himanshu. Also, my last question to you would be, in terms of dialyzers, you've upgraded them and now 50% of the machine is locally made. So now I think you will be contesting for government contracts. So what is the opportunity growth here and what are the margins that you're expecting out of this government contracts that you'll be getting?
So I think dialysis, Government of India has launched a program to have a dialysis center in every district, and that is going in PPP mode. But I think also state governments are procuring more machines, and also semi-government agencies, and as well as when we look at government centers, they are trying to scale up the facilities. So once we have a more localized machine, we'll be a more preferred supplier, and because currently the preference was given to foreign companies which had CA FDA approvals, and that was a kind of a bottleneck for newer companies to be in new medtech business. So I think once we have more local content, I think we'll be able to circumvent that and go to the market with more aggressive approach. And also definitely once you have more localized content, the margin will definitely improve. I can't tell you right now, but as we scale up, we'll have a better visibility.
Understood. Thank you so much for all of that perspective, Mr. Baid. It's been a pleasure speaking with you. I'm sure viewers got a good insight on a lot of factors that we spoke about. But Polymed down around 1.5% in trade today, and with that we're completely timed out on this edition of the Small and Mid Cap Show. From Mahima, myself and everyone who puts the show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Nifty closes at the highest level of over 22,200 for the first time as markets recoup yesterday's losses to end higher. Broader markets end closer higher, most sectoral indices also up. Most sugar stocks end lower after the government announced 25 rupee hike in sugarcane FRP. Uber signs an MOU with ONDC to explore an integration with the network to expand the range of mobility services. No plans to exit telecom business, says Aditya Birla Group Chairman Kumar Mangalam Birla. Adds that the company is looking for new investors for Vodafone Idea. Aon India salary survey projects an increase in the average salary by 9.5% in 2024. NBFC and engineering sectors expected to see the highest rise. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, we bring you the market news along with national and international headlines. But before we delve deep, let's take a quick look at how the markets fared during the day. Sensex recovered 1,000 points from the day's low. My colleague Harsh joins in with a quick wrap of all the D Street action.
Well, what a week it has been, because we started Monday breaching record highs. We continue on Thursday to breach record highs, and we've closed at 22,217. Not a bad place to be given the kind of start we had. And before I go to the heat map, I'll focus in on the advanced decline. The Nifty Bank not doing particularly well in trade today, but the advanced decline. Just kind of go and see the kind of day we've had and how we've closed. We've actually closed at the high point of the day. So honestly, it's been a very good day where we consolidated through the day and we've closed at the very top. But that's how it is with regard to where the advanced decline is at. Let's look at the heat map. Certain pockets where the focus was there in markets, but not seemingly so on the Nifty 50 itself. I'll just be more broad based on the Nifty 50. 34 stocks in the advances to the 16 declines. Not a bad day at all, but the declines were largely led by banks, HDFC, IndusInd, Kotak, SBI, 4 of those. Some bit of profit booking seen there. But outside of that, it was a pretty broad-based market where we saw certain FMCG names both gaining as well as declining, ITC, Tata Consumer, right? So it wasn't as such a bad day. The day also belonged to the IT pack. You look at that top row over there and you'll see a lot of IT names, and that's the kind of day we've had. Let's quickly also look at the sectoral indices, quickly mark them out, and you'll see except for Nifty Fin, we saw pretty much green across sectors. IT ruled the roost, but sugar stocks were in focus. We also had the defense plus space kind of stocks in focus, more space than defense. So those were the kind of themes that were playing out in trade. Last off, I want to mark out the Nifty mid cap and the Nifty small cap. 1% gains on the Nifty mid cap, so that's the big positive. 0.8%, and the Nifty small cap as well went home with over 0.5% in gains.
That was the market wrap for you, and as my colleague rightly mentioned, most sugar stocks ended lower after facing some pressure during the day's trade. Now, this possibly came on the back of government's announcement on fair and remunerative price on sugarcane. The government has hiked the sugarcane FRP by 25 rupees per quintal. Now, with this, the price has now touched 340 rupees per quintal from the previous 315 rupees per quintal. Now, the new price would also apply from the sugar season 24-25 starting October 1st. The final call for this step was taken by the Cabinet Committee on the Economic Affairs, which met under the chairmanship of Prime Minister Narendra Modi. That was the wrap on the sugar stocks and how the day's trade went by. On to a primary market update now. GPT Healthcare's IPO opened for subscription at a price band of 177 to 186 rupees per share. My colleague Monal joins in with the update after the first day. Monal, can you hear us?
Yes. Thanks, Pragati. So GPT Healthcare has opened its first IPO today from Feb 22nd to Feb 26th.
Now, this company typically trades in hospitals, and it operates a chain of 4 mid-sized hospitals in the east of India. The revenue model for this company is close to around 361 crore for the year FY23, and it's at 204 crore approximately at the end of 6 months this year. EBITDA margins range typically around 22%. The 4 hospitals, out of which 3 hospitals are in West Bengal and 1 in Tripura, the 3 West Bengal hospitals make up for 70% of the total revenue of the company, and it's also looking at 2 new hospitals in Raipur and Ranchi. Now 35% is for retail investors. The 50% which was held for QIBs is all subscribed at the share price of 186 per share. The total offer is for 525 crores, of which 40 crores is fresh issue, and the remaining is offer for sale, where a big investor is exiting. Now, out of this 40 crores, 30 crores will be used towards repayment of debt, and the other 10 would be used at the discretion, maybe for general corporate purposes. That's the update on the same.
All right, Monal, thanks so much for bringing us those details. Now, India's crude and petroleum products import rose to 5.6% year-on-year to 25.4 million tons in January. India's crude and petroleum import was also 24 million ton in the previous year. My colleague Mihika Barve joins us with more details on this report.
India's total crude and petroleum product imports rose 5.6% year-on-year to 25.4 million tons in January 2024. Now, crude oil imports were up 5.7% year-on-year and 9.4% month-on-month to 21.4 million tons. Now, in terms of petroleum product imports, the imports were up 5% on an annual basis, where petcoke witnessed the highest rise in imports, up 58% year-on-year to 8.13 lakh tons, which was followed by lube oil and naphtha imports that rose 36% and 19% respectively. Now, when we come to the petroleum product exports, the petroleum product exports were up 7.5% to 4.8 million tons, where high-speed diesel and motor spirit accounted for over 60% of the exports in terms of values. Exports of motor spirit, however, saw a 16% year-on-year drop, while exports of high-speed diesel grew marginally 1.5%, and fuel oil exports saw the highest growth of 38% on an annual basis, while aviation turbine fuel exports were up 28% at 7.27 lakh tons.
That was Mihika with the update on crude and petro products. Now let's take a look at HSBC Flash PMI. Now the data that has come out indicates that India's economic activity is at a 7-month high in February. Pallavi Nahata joins in to tell us more on this.
Hi, Smriti. So that's right. The pace of acceleration in the output of India's manufacturing as well as service providers combined was at a 7-month high in February. The HSBC Flash India Composite PMI Output Index rose from 61.2 in January to 61.5. So not a dramatically large increase, but a rise nevertheless. Manufacturing PMI was at 56.7, while services PMI was at 62, both doing a little bit better than what we saw in January. Now, this was likely because of continuingly buoyant demand conditions, investment in tech, efficiency gains, expanded clientele, as well as favorable sales conditions. Export orders too rose. That's a good sign, especially because it was led by goods. Input prices rose at the slowest pace in 3.5 years. Another good sign. All in all, a good set of figures to have come in, and also indicating continuing business optimism going forward.
Well, thanks, Pallavi, for the update on the PMI data. Let's now shift focus to SpiceJet. The Indian airline has confirmed that it will be raising an additional 316 crore rupees through preferential issues, taking the total fundraise to approximately 1,060 crore rupees. My colleague Vinay joins in with more on this.
And this is the 316 crore that it has got after it got 744 crores in Jan. So now out of the total 2,250 crores that it has promised that it will raise from investors, now 1,200 crores remain. So now from the second tranche, the attention has shifted to the expansion and operational improvements in the company. The last time it raised funds, the 744 crores, the first tranche that I'm talking about, then it was talking about the cost-cutting measures. And the cost-cutting measures we have already seen from the company for the first of the steps. That was the 15% of workforce will be laid off by March. So now the momentum is shifting towards expansion and operational improvements. And we know that the company needs this because if we look at the fleet stands at 40 planes, which is 1/3 of the fleet it was before COVID. So the company needs to expand its fleet to gain in terms of market share and as well as to hold on to the market that it has currently been servicing. And the company's market share right now, it's at 5.6% in Jan. And if you look at the on-time performance, it is a dismal 38% in January. So that means that even not 4 out of 10 flights of the company were on time. So the company needs to improve on that front quite significantly. And these funds will help the company do that exactly.
All right, thanks so much, Vinay, for sharing those details with us. It's time to slip into a short break, but please stay tuned because we have lots more lined up for you on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show,
Welcome back. You're watching The Reporter with us on NDTV Profit. Now let's take a look at Aditya Birla Group. Now the company's chairman Kumar Mangalam Birla said that the company has no plans to exit the telecom business and remains committed to revive Vodafone Idea. Here's a quick chunk of the conversation.
ऐसा नहीं है, वैसे तो और भी businesses हैं जिनके बारे में नहीं बात की मैंने. You are just picking out Vodafone. We remain very committed to Vodafone, and like we've said in public domain, efforts are on to get outside investors. And and I don't know what's prompting your question. I think we remain as committed to it as we have been in the past.
The Aditya Birla Group also commenced operations of its new decorative paints business at 3 plants under the Birla Opus. The company is now targeting an initial revenue of 10,000 crore rupees and some profitability, said the company's chairman Kumar Mangalam Birla.
India's per capita paint consumption stands at a mere 3.5 kilograms. This contrasts starkly with the global average of about 10 kilograms and dwarfs against the 25 kilograms consumption per capita in developed economies. For a country like ours at the forefront of economic acceleration, India ranks in the bottom 10% of paint consumption. And this to me represents a galactic opportunity. With rising per capita income, a young population, a booming real estate sector, and shorter repainting cycles, the potential for growth in paint consumption is obviously immense. The path forward demands a commitment to long-term investment and a vision to redefine the industry with consumer-centric technologies and practices.
Well, we also spoke to Rakshit Hargave, who's the CEO of Birla Opus Grasim Paints, and began him by asking that what his outlook was for the paints business in the next 3-4 years.
In 3 years of full operation, we want to be 10,000 crores, and we believe that's a realistic number. And I think that says by itself. So that would mean a large dealer network, pan-India presence, full portfolio, vibrant offtakes. So that's, when we say 10,000 crores in 3 full years of operation, that's the size that we are targeting.
It basically means that in 3 years, when you're fully operational, when you hit 10,000, that would be the peak, and that time.
No, that will not be our peak sales. We would continue growing. Yeah. But that's the first gatepost that we define.
And what about the phase 2? Because you've spoken about 500 million liters.
No, phase 2 is because the plants have been designed in such a manner that we have created the civil structure, infrastructure to take more load. So the addition of extra capacity will happen at a crores per million liter at a far lower cost. So we will obviously do expansion. You see, 1,332 million liters can support certain sales. Assuming a realization of 130, 140 rupees per liter, you can go up to 17,000 crores or like that with that capacity. But if you have to go beyond that, you'll probably start planning capacity far before that. So
your biggest challenge would be the perception, right? Because you're tapping the painters, you're tapping the contractors.
No, I don't think perception. I think we have a great plan to engage with the influencers, build a great brand, change consumer attitudes towards painting, and we have a 360.
How will you disrupt it?
Well, you will see that in the market when we start disrupting.
That was the company's management for you. Now, Uber CEO Dara Khosrowshahi is also in India to review the company's business here. The ride-sharing giant has signed a deal with government-backed ONDC to explore an integration with the network. My colleague Tushar Deep Singh joins in, who tracks the auto and IT space extremely closely, for a detailed report on this story.
Thank you so much, Pragati. So shortly after the fireside chat between Dara Khosrowshahi and Infosys chairman Nandan Nilekani, it was announced that ONDC and Uber have signed an MOU to explore integration. So what do you mean by explore integration? Essentially, there will be more mobility apps or mobility functions available on the Uber app. Now, this is important because during the fireside chat, Khosrowshahi said that Uber is looking beyond its cabs business into lower price models of 2-wheelers, 3-wheelers and buses, which are already operational in the country. So the ONDC tie-up fits in that respect. Khosrowshahi and Nilekani also spoke about the public rails for private technology in FireChat, essentially the India stack on which private technologies are built in India. Dara Khosrowshahi also said that Uber views open source stacks like the India stack with a lot of interest, and going forward that will be some place, that digital infrastructure that his company would look to tap into. But Khosrow Shahi still believes India is the toughest market in the world to crack, and here's why he thinks so.
I think that India is one of the toughest markets out there. It is, the Indian customer is so demanding and doesn't want to pay for anything. I view if Uber can make it in India, and I would say our team is really making it here. This is the best of times for Uber in India. I'm so proud of the team, but India is the gateway to the world for us. This is the toughest market to succeed in, but if we succeed in here, that sets a standard for us to succeed in so many other markets.
Well, that was Uber CEO for you. And let's take a look at the government capex part of it. While major push to GDP is expected to come from government capex, National Investment and Infrastructure Fund's head of research believes that the private consumption is also going to pick up as demand for credit is also increasing. Here's a quick chunk of the conversation for you.
So I think 2 points. One is given the fact that the government has invested significantly or front-loaded investments in capex, we expect that the private sector capex will also begin to come through. We are beginning to see significant amounts of credit growth take place in the banking system and also across the bond ecosystem. A large part of that is also driven by significant personal and home loans that people are taking, and which is then reflecting back into the consumption that the private sector is driving. So in a world where you think of a place where savings of the private sector are beginning to come down, that in some sense, naturally, the corollary on that is going to be a significant increase in consumption. Now, what we are seeing is a trend where there is significant growth in consumption across many categories. We are seeing that in air travel again, we are seeing that in hotels. So many of these sectors are beginning to come back in again. Fundamentally for us, the sectors that we track, which give us a far stronger sense of consumer demand, is sectors like power, sectors like steel, cement, etc., which are being consumed. Double-digit growth that we are seeing there gives us comfort that the consumption story is playing out. And we expect that in the capex that the government is doing, and as it brings in private capex, will also bring in jobs, which will give it more certainty to private sector consumption also.
That was a bit on private consumption, giving a push to the GDP. Now, PM Narendra Modi attended the Golden Jubilee celebration of Gujarat Cooperative Milk Marketing Federation. The PM inaugurated 5 projects worth 1,200 crore rupees. While highlighting the uniqueness of the brand, Anand Milk Union Limited, PM Modi also congratulated Amul and noted its contribution to India's dairy sector. PM Modi also highlighted the contribution of Gujarat in India's dairy sector and in turn fueling the country's growth.
हमारा फोकस है छोटे किसान का जीवन कैसे बेहतर हो। हमारा फोकस है पशुपालन का दायरा कैसे बढ़े। हमारा फोकस है पशुओं का स्वास्थ्य कैसे बेहतर हो। हमारा फोकस है गांव में पशुपालन के साथ ही मछली पालन और मधुमक्खी पालन को कैसे प्रोत्साहित किया जाए। इसी सोच के साथ हमने पहली बार पशुपालकों और मछली पालकों को भी किसान क्रेडिट कार्ड की सुविधा दी है। हमने किसानों को ऐसे आधुनिक बीज दिए हैं जो जलवायु परिवर्तन का मुकाबला कर सके।
That was PM Modi from the event. Now let's take a quick look at what the salary trends are in India. Salaries in India are expected to increase by 9.5% in 2024, which is slightly lower than the 9.7% rise that was done last year. Now this information is according to a survey conducted by Aon. The salary hike is largely in response to market dynamics. The survey also said that the salary hikes have been stabilized at high single numbers after the post-pandemic high in increments in 2022. We spoke to Rupang Chaudhary, partner Talent Solutions India, Aon, for his outlook on this.
The number has dipped a little from last year, but if you go back a year before, in 2022, the number was more than 10% when we had seen double digit. It dropped to 9.7 last year and dropped further this year. I think there are a couple of reasons why we are seeing this marginal dip. The business sentiment has waned in some sectors, and these are largely some of the services sectors, largely driven by technology, IT consulting services, and that's a large chunk of the workforce. And when the salary increases had also gone up high in the last 2 years, it was largely driven by the tech sector as well. So it's but obvious that when the tech sector is seeing recessionary winds and is on the wane, we have also seen the business sentiment come down, and as a result, the salary increments also have been coming down.
That was the outlook on salary trends in India. Let's take a quick look at what Karnataka government has done now. Karnataka government has passed the Cigarettes and Other Tobacco Products Bill 2024. The move is now aimed at tightening the cigarette laws in the state. Let's go across to our colleague Drashika Avisi for more on this.
There's news for young smokers in Karnataka as the state assembly has passed a bill raising the legal age to buy cigarettes from 18 to 21. It has also imposed a blanket ban on hookah bars to discourage tobacco consumption among youth. Once the law comes into force, operating hookah bars will attract severe penalties, including imprisonment for 1 to 3 years and fines of up to ₹1 lakh. Selling cigarettes and tobacco within 100 meters of any educational institutions is also prohibited. Violators may face a fine of ₹1,000. Karnataka has also enforced a blanket ban on tobacco consumption in public spaces, joining states like Haryana and Telangana that have recently taken steps to stop tobacco consumption.
All right, thanks so much for bringing us those updates. That's also that we have for you on The Reporter, but please stay tuned to NDTV Profit for all the news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. to the voices of reason as they talk about corporate health and investing principles.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Let's very quickly take you through how the markets are faring right now. And as I look at my screen, you have cuts for the benchmark index of as much as 0.7%, very close to the low point of the day. But the broader markets are off the low point of the day. In fact, you have the mid-cap index that's trading just about flat, down about 0.1% or so. And even more so, that flatness is visible for the broadest index, which is the small cap 250 index. Of course, let's take a look at the advanced decline ratio as well, because that will give you a bit of a perspective on the trend that you're seeing, and that gap between the advances and the declines is narrowing right now. In terms of the sectors that are in focus, you see quite a bit of a crack for the PSU pack, and you have the PSU banking pack as a whole that is the biggest sectoral loser. Nifty Bank also losing a bit of ground today, down over 1% or thereabouts. On the other end of the spectrum, you have media as a pack that's doing not so badly, and you have the IT index, which has seen cuts in the recent past, which is gaining about 0.5% or so. I guess technology seems to be the theme globally after the Nvidia results, and that is being seen in the Asia Pacific region as well. But Smriti, we're talking about the sugar pack in the focus segment today. Why?
Well, first of all the sugar